Good morning, everyone, and welcome to Traders Corner April Online Trading Summit. On our panel today, we've handpicked 7 professional trading experts of the highest caliber. They've agreed to share their most consistent and profitable trading strategies with us today in a free educational forum. In today's Investor Summit, we're going to learn from a wide range of topics, including how to trade options to how to leverage artificial intelligence into an automated strategy. So let's not waste any more time. Today's show is packed with great information. Our first presenter began his career in 1980 and was one of the original market makers in the OEX trading pit at the Chicago Board of Options Exchange. He's traded all the major exchanges in Chicago and is currently a member of the Chicago Board of Trade. He has spent the last 8 years as a mentor and educator to traders of all levels. He spent and developed a program for high school students that allow him to learn to trade the financial markets. Ladies and gentlemen, it is my pleasure to introduce the seasoned pro who is always entertaining, never bashful, and rarely filtered. Here to present trading options is Mr. Todd Bubba Horwitz of BubbaTrading.com. Welcome to Traders Corner, Bubba.
What's up? What's happening, You ready? You ready to rock and roll?
Take her away, brother. You're always, you're one of the best.
All right, let's go. What's up, everybody? Great to be here, and good morning or good afternoon or wherever you're at in the world. And markets have been really pretty crappy recently. They've been tough. We've done pretty well, but they're hard. They've been hard to trade. They've been quiet. They've been slow, and there's all kinds of indications that markets are going to make a big move one way or the other. And my personal opinion is they will be lower, but in full disclosure, I'm pretty much net long at the moment anyways, but I do think they will go lower. But today we're going to talk about options and how I use them and how I think it's best for you to learn how to use them. Whether you become a member or not, there's a lot of important things about the option world that too many people make too many mistakes that cost them too much money. So without further ado, let's get rocking and rolling. And of course, I am Todd Bubba Horwitz, but nothing can stop the man with the right mental attitude. I have to put man or woman. I want to be politically correct, but I can't always remember that. From achieving his goal, nothing on earth can help the man with the wrong mental attitude. And again, this is, trading, investing is more about psychology than anything else. Okay, I don't care what anybody tells you. It's more about what goes on between your ears than anything else that you're doing. And if you think differently, that's why I'll continue to struggle throughout your career. In the meantime, again, obviously you'll see this 7 more times or 6 more times today. The disclaimer: past results are not indicative of the future, and I don't make promises to anybody. I only promise you that I will give you the best education that I can, because again, I believe in education. And I was talking to Rob before we started, and I try to learn something new about markets every day, and have done so for 44 years trying to do that. And again, it's about understanding, and I think that's important to all of you, is to have a good understanding. And what we talk about on our Saturday call, which is our options call, is about the ability to make a decision. Don't worry if it's right or wrong. You'll learn. If it's right, you'll make more money. If it's wrong, you'll learn for the next time of why the decision was wrong. But there's never anything, if you have the right position on, which means you're protected, you have no worry about making a decision. The worst it costs you is a couple of bucks. In the meantime, I am Todd Bubba Horwitz. I have been doing this for 44 years. I was a floor trader until about 2008 or 9, when there was basically no more floor. When guys started wearing laptop computers around their neck, I said it wasn't for me anymore. I was a guy that I didn't want a computer. I wanted to use my hands and be able to use a pencil. In the meantime, I was one of the original market makers in the SPX, and the beauty that I always like to claim is that I don't just make recommendations. If I'm making a recommendation to you, I'm in there with you. Okay, I trade exactly what I recommend. So in the meantime, one of the things I think that many people forget or don't want to talk about is drawdown. So I always talk about it first. I don't care how good of a trader you are. I don't care how good you are, how much you understand markets. There's drawdown. It happens. It's part of the business. Okay. And if you don't realize that, then you shouldn't be in this business. The drawdowns can actually turn out to be a benefit, because if you know what your hit rate is and how you do, then you may know when to press up. And we don't like to use what we call the martingale system, but I do understand that if I'm a 66% hitter and I'm on a streak where I'm hitting 30%, I'm due to revert back to the mean. You know, if you've ever heard the story of a baseball player who gets off to a cold start, and then you look at the back of his baseball card, and every year he hits 330 home runs, 100 RBIs, he's going to revert back to that form. Invariably, it happens, and that's once you get to understand who you are. But know that there's going to be losing days, there's going to be losing trades. I don't care who you are or what you think, you're going to have some losers. That's the bottom line. Okay. But trading, no matter what you're trading, always has to start out with a plan. Okay. Of course, that's from Sergeant Bilko, if you remember the movie or saw it. But really, trading plan, right? So how do you develop a trading plan? Well, you have to put together your goals. Now, I warn you, do not make your goals unachievable. If you want to trade with $5,000, you are not going to make $100,000 next year. Okay. Could it happen? Yeah, it's possible. But if you're trying to make that kind of money, the amount of leverage you're going to have to take to get there, you'll never make it. Besides the fact that you'll ruin your own mental attitude. So you have to put goals in place that are achievable. The key in business is managing your risk control. Okay. Again, you cannot put yourself out of the game. You don't want to put yourself in a position to be shut up. You got to have a strategy. Okay, you got to understand your entries, your management of your trades, and then analyzing why you're putting on trades. Now, one of the things I'll tell you is that we don't trade any naked options, and you'll see a little bit about that more later. But everything we do is a combination of the derivatives market. Okay, but trading psychology is the emotional component of an investor's decision-making process, which may help explain why some decisions appear more rational than others. Trading psychology is characterized primarily as the influence of both greed and fear. Greed drives decisions that appear to be too risky, and so does fear, because we've all seen markets have huge moves up all at once or huge move down, and that's always a chase of greed to the upside or panic to the downside. Remember, it happens. It's part of the market structure, and what drives markets is that, and what we have not seen for quite a while is some of those real emotional moments. In fact, we could almost go back to last year before we had any real emotions at the beginning of last year. You know, this year's about the last 12 months, the markets have basically been consolidating, not creating many dramatic opportunities. Always opportunity to make a little bit of money, but not any dramatic opportunities where you can really hit the hammer. But that's what we work on, is being prepared for when that happens, but grinding out profits before we get there. Okay. Again, I try to stress to everybody, it's the ability to make a decision. Okay. It's not, there is not a wrong decision. If you're looking at something, you want to make your decision, you make it. Okay. What is the worst that can happen? Like if you're trying to sell something for $1 and you decide to sell it for 95 cents. Okay. What is the actual cost difference? What did you give up to give it up at 95 cents instead of $1? Basically $5, right? For per contract, give up $5. That should be immaterial, because once you decide to get out and sell, okay, then the equation turns over. If you're trying to get $1 and you can't get it, but you can get 95, you're now in a position that you're a 19-to-1 favorite, okay, about what your risk is. Your maximum gain was $5, but if you don't close it, you've left $95 worth of risk on the table. So why would you do that, right? So don't squeeze the pennies. If you think it's the time to exit, make your trade. Yeah, will you be wrong? So, of course you will. But what is it? But you already know you can't get more than $1, because that was your mind in your mind what you're going to get. Make the decision. Don't sit there and wait. If you're trying to get out, try for your original price, move to where you have to get out and close the trade or roll the trade, which we do a lot of that. But put yourself in a position by first being able to make a decision. So I know you all probably know what options are, but again, there's knowing options and then there's knowing options. And, you know, options themselves are derivative contracts. They're just derived from an underlying, whether it be an underlying future, whether it be an underlying equity, whether it be one of the index markets, doesn't matter. They all have derivatives on them, okay? And in standard options, one option equals 100 shares, and there's calls and puts. But out of those calls and puts, who knows how many trades can you make out of those calls and puts? How many different types of trades are there? Anybody got a guess while we're hanging out here? 50. I know that name. Well, 50 is okay, but I would say probably if you really wanted to get into it, probably in the hundreds of thousands to a million different derivative combinations that you can make with trades. I mean, you can actually tie in equities involved in here as well, between reversals and conversions and all kinds of stuff. I mean, again, there are unlimited amounts of trades that you can make. So your job is to understand where do you put yourself in the best position, okay? And using the proper type of trade. And so when we look at the derivatives market, the one factor and the biggest flaw in option trading is what? Anybody got to guess at that? What are the biggest flaws that option traders run into? Okay. Liquidity, true. Expiry, true. But the biggest problem for most options traders is not understanding implied volatility. You know, we've all at one time or another watched business news or TV, and of course you hear the geniuses say, buy a cheap option, you know, buy a cheap put. Okay. Well, let's clear one thing up about options first. Options are never cheap. Okay, they're always fairly priced unless they're expensive. And what does that mean? Well, listen, there's a market maker on the other side of your trade, right? This is a competitive business. Somebody's making a market, and there are people trading both sides of that market. A market maker will never give you something cheap, but he will or she will sell you something expensive. Okay, so options are always fairly priced unless they are expensive. And if you know how to take care of the expense, then you'll figure out how to cut those costs down to be able to buy that same option cheaper. But the real thing you have to understand is that the implied volatility is the key factor. And if you take a look going forward, as we go into earnings season, you're going to see volatilities on some of the weekly options very, very high, that you'll never make money trying to buy that kind of premium. So you have to learn how to put yourself in a position to trade against that premium and take it and put it into your advantage. Option trading may sound risky or complex for beginners and investors, and often they stay away. Well, again, if you don't understand, you should always stay away. But option trading is actually very simple. It is not complicated if you walk through logically. If you think about it from a straight business standpoint, you know, you gotta separate the shit and the news that you continue to hear, right? I mean, I ask you this question: how many of you out there actually believe the markets can still go higher from here? Okay, or think the markets would have held up through all the news we've watched? Who thinks that the markets would still be higher today? Okay, and I'm sure I'm seeing, you know, not a lot, but of course they're still going higher. So is it your job to fight it, or is it your job to participate with it? Okay, again, you have to watch the price action of market. Yeah, some basic strategies using option offer can help a novice investor protect their downside and hedge market risk. And again, we get very developed into options that I use for my entire 401k, my entire retirement account, all of my IRAs, everything that I have hedged off using options. Okay, and where I don't have the risk, I know exactly to the penny what the risk on my overall portfolio is, but that's something a little bit more advanced. But basically, there's the four strategies that are most widely recognized are calls, puts, spreads, and straddles. And straddles and strangles are the same. Okay, none of those are. And I don't believe in buying debit spreads. Okay, I would rather sell the credit. I don't believe in buying straddles. I think you're making a mistake because again, what the straddle really tells you is what? The straddle really tells you what the expected move for any period of time going in. What does that mean? I'm going to just share that with you real quick because I open my mouth. Here, I happen to have on Biogen up, okay? So if I look at Biogen and I go to the straddle to May 12th, okay? Stock is trading at 288, so we'll look at the 290 straddle, okay? So I buy the 290 straddle, okay? So that stock is telling, this is telling me 22 bucks. If I multiply that by 1.07, that between now and May 12th, this stock's going to move $24 or so, plus or minus. Which way, we don't know. But we know based on this, the at the money straddle, that tells us the approximate movement that is being priced in by the price of options. Okay. Options is one of the few equity products that actually has a supply demand component to them. Okay. And how do you determine supply and demand and options? By the implied volatility, because stocks have a limited quantity. Options have no limit to how much quantity. Okay, so the equation works out to what is, if there's an overwhelming demand and there's a lot of options being bought to open, okay, prices are going higher. Okay, if there's a lot being sold, prices are going lower and volatility is falling. So again, these are the components that most make the mistake, but there's so many simple little measures that you can use in the option world. You're the only one who said my audio is horrible. And since I do a lot of media from this very mic in this very spot, I think it might be on your computer, but I could be wrong. Okay. But at the end of the day, it's understanding the world of what you're trying to do. Okay. And of course, you can make the option trading as complex as you want, but it really is never that complex. And every trade that you put on, you should know the max amount of risk that you are taking. Okay, not the amount of profit you can make, but the maximum amount of risk that you're taking. And many of you have got involved in some of these, you know, the sellers of options, the high probability. Please, it's all bullshit. Stay away from it. You're not going to make enough money. Okay. So when we look at different option strategies that you want to use, okay, now there's many that you can use, but a lot that we focus on are a lot of calendars, okay. And why calendars? Well, because they're neutral. I get to take advantage of rolling forward and taking premium on, hence reducing my risk with every trade that I make, okay. So if I start out with X amount of debit, each and every day or week, depending on what product I'm using, I get to reduce, okay. Okay, well, again, what can I tell you? Some say it's great, some say it's not. So I can't help. There's nothing I can do for you. I'd love to fix it up, but you know, I don't have an answer. All right. In the meantime, as you look at it, so calendars, they're nice. Okay, they're neutral. Now we like to do a lot of double calendars, and of course now we're using a lot of double calendars in the spiders and in the Qs. And why would we do that? Because they now have daily options. Okay, they call them 0 DTEs, 0 days to expiration. So you can roll, for example, we have a new trade going on Monday that will get 28 rolls before, okay, before it expires. And if we pay 14 bucks, okay, for a debit part of the trade, and we can collect 2,800, not bad. 1,400 versus 2,800, not a bad trade. Okay, so in the meantime, hold on a second. In the meantime, again, we're looking to be able to mathematically calculate out where we stand and how we get to make the profit. Okay, and then how we can make even more profit depending on how things happen. Weighted double diagonal. So what are weighted double diagonals? Well, they're kind of like double calendars, except you're now taking a position. But basically that is still a neutral position because your deltas, if you understand deltas, will be about equal. But what will happen is, like any other option, if it goes in your favor one way or the other, the long options will overcome and take value, and you'll then have a directional trade on. But the beauty about that is you'll still have the opportunity to roll out, because you're buying a dated option and you're selling a near-term option. Okay, keeping yourself collecting premium, deducting from the debit that you're paying, and allowing you to put yourself in a position of profit while reducing risk each and every week or day, again, depending on the product that you're using. And that's what we call rolling. You're always rolling your short options forward. So I'm buying back my shorts and selling the next available short. Okay. And I'm using the same formula and the same options to continue to collect and reduce risk with every day that I trade. Okay, and that's the first goal, because we have to be concerned about risk. It's about risk, and so we understand what we're doing, why we're doing it. Okay, and then how to potentially adjust. Now, there's some interesting positions, and you'll see that I send out an update every day. Every morning, I send an update to everybody, and you can see that I show the open position the way it sits. And these are open right now. Okay, you can see the expiration is May 19th. These are the credits that we've collected so far on each one of these trades. So I kind of do a running tally. But let's say that one gets away from me. Okay, so my first question is to tell you hey, A, is the trade profitable? If the trade is profitable, why not close that trade and reset to a new trade? Same style, but get yourself back in the middle where you're collecting the maximum amount of premium. Remember, you control, as long as you control the dated option, you have no more risk than what you started with. Your risk on this, for example, on BIIB, your risk from the beginning could never have been more than $1,228. Okay, for one contract, 1,228 times 100. So now our risk is down to $900. Okay, $928. And next week it'll go down further again. And I've already looked at the roll for next week, and if I can get it off at where it's marked at right now, it'll be about $8. So I'll take my risk down to 0. Okay. These are straight calendars. These are straight double calendars. Okay. But I also do double diagonals as well. Okay. Let me see if I can grab one and pull one up for you while I'm trying to talk here, but I'll be happy to share it with you, because I did set one new one up. Actually, I'll just set up on the screen. How's it? Okay. I think one of these same trades, here's the one we're doing this week. So I'll show it to you here. All right, so let me just get myself set up here. Actually, we're going to start with it on the 19th, which is Wednesday. Okay. So let me just get my legs up, and then I'll put it together for you. Okay. So now, I guess I'm going to buy. I'm buying in. I'll make it custom. I'm buying the March. That should be the May 19th. Okay. I'm gonna buy the 178 call, and I'm gonna buy the 175 put, and I'm gonna sell the weekly. Actually the buy with the tri-weekly. I'm gonna sell the 175 and the 178 that expire this week. So 175 and sell the 178. Okay. So this is the straight setup. Okay. Now, what I'm going to do here, though, is I'm going to go ahead and add and make this a weighted double diagonal. So this is going to cost me $13.55, okay, to have a weighted double diagonal. So this is a dead neutral position that can go in either direction. I make money. Okay. Now it's got to go, obviously, we've got to overcome 1,300 from the beginning. But of course, I'm going to collect, and of course, we can just base our collection on Wednesday. The 178, 175 strangle is about $1.50. Okay, so if I get $1.50 on Wednesday, and I get from Wednesday to Friday, I get another $1.50, and I get $1.50 from Friday to Monday, and I continue. then if it stays in between, it will take me exactly 3 weeks to get it roll out and get all my money. I've got 35 days to expiration, so it should be profitable. And that would be obviously, if I could script the trade perfectly, it'd be to sit in the middle, let me collect, get all my debit off the books, and then have a gigantic move one way or the other and get and make a fortune. Of course, they don't always go to script, but that's what we'd be looking for. But in either case, the roll will continue. If it gets too far away one way or the other, the credit will shrink. Of course, I'll be making money on the long option one way or the other. Okay. So again, there's a lot to that. And I know it's hard to explain it in 45 minutes in one quick call, but that's a weighted double diagonal. But either the calendar or the weighted double diagonal are designed to be neutral in delta, and your risk is the time decay. But because you are rolling forward your short option, you are continuing to take away from the actual time decay of the market. Okay. And this is where we see, and this is actually from this morning. I do every Saturday morning, I do a live call, which is what you'll be part of if you become a member. And these are some of our positions. We've got right now open, I think, 17 positions. Okay. And they're all off of the same genre. They're either calendars or weighted double diagonals, because again, those are the easiest to put on with the least amount of risk overall and maintain the overall benefit. So as you look at the ones in green, those are already profitable. No matter what happens between now and Friday, they're profitable. The only question we have left now is how much more profit can we make? What I show on the board here is locked in. Okay, it cannot get worse. It can only get better. Okay, and of course, what you have to understand when you start to do trades like the double diagonals, the weighted ones, you have to understand what the spread risk is, because that becomes part of your risk. Okay, and as I know, these trades are, this is a calendar, this is a diagonal, this is a weighted double diagonal, this is a straight calendar, this is a straight calendar, this is a weighted double diagonal, this is a weighted, this is a weighted, and this is a weighted. Okay, and again, they were all different types of trades, and we'll put on multiple versions of the same type of trade. Okay, so that we can capture everything and give it the best shot, because what the beauty of what we know, again, it's back to reducing the risk. When you trade stocks, you have to avoid earnings. No, actually, we trade a lot of trades over earnings. Okay, this is being recorded. Yes, we trade over earnings. We will make a lot of earnings trade. In fact, JP Morgan was specifically as an earnings trade, and it worked out pretty well. Okay, when I put the final tally in, it'll be a nice profit. All right, that was design. I will design a lot of trades around earnings, as is IBM was designed around earnings. Okay, now, and even Netflix in its own way is about earnings, because the last collection that I'm going to get is going to be huge, and it's going to make Netflix very profitable. Okay, so again, I love the trade on earnings, because you get paid off of that high volatility. If you look, and this is where most suffer in their trading, because I don't understand this equation. Okay, you see the earnings for the 85% volatility for Netflix. So I know immediately, without looking, that Netflix earnings are next week. Okay, I can tell you any one of where it sits, and of course, if we look at the chart, it'll show you that the earnings are next week. Okay, now again, it doesn't take a rocket scientist, but it does take an understanding, because if I look at anything, Apple, when are Apple's earnings? Without looking at the chart to get the thing, I can look at the volatility and tell you that Apple's earnings are going to be in the week of May 5th. Okay, Apple's earnings will be the week of May 5th, because you can see the rise in volatility by 30%. Okay, and that's because the weekly options come into play, and of course the earnings are May the 4th. Okay, so understand. So I want to sell that premium, because they're overpaying for it to begin with. So I'm a seller of that premium. I'm buying dated premium. And right now, because volatility is so low, I want to go further out in time, because I know one thing for sure. My back options, or my ownership, will gain value faster than my short options. And if we get a volatility spike, my expiring short options have to go to zero or be worth something. Okay, volatility doesn't affect the very short term. it affects the longer term options. So again, it's understanding how to take care of that stuff as well. What options can you trade? Look, you can trade any liquid market. It doesn't really matter. Certainly the indexes are good, the spiders, the Qs, SPX. Certainly if you have the capital and you're a bigger trader, SPX is good because it's taxed differently than other equities. But any of them, any options that are liquid. Again, narrow bid offer spreads, liquidity, that's where you want to be. Okay. That's your deal. That's what it's about, is putting yourself in a market that is liquid, because again, you don't want to be in the Roach Motel. You can get in, but you can't get out. Okay. And in fact, I made that mistake with Biogen. Okay. I didn't realize how illiquid the weeklies were. So we got less for the roll than I thought we would get. Okay. And again, that's, you watch that and you learn that. And of course, because I'm trading with more people, it has more of an effect to us than it would be to an individual. So what may be liquid to you may not be liquid to me. Okay. But you want to make sure that you have that liquidity. That's very important to what you do. Okay. Now, again, what strategy should you use? Again, buy calls or puts, never naked. Trust me, you'll be a net loser over time if you're trading long-term leaps, naked calls, naked puts. Okay. Now, not that you can't do, trade them in a very short period of time when there's no premium left, or you're buying deep in the money where you're trying to surrogate the stock. Those are different scenarios, but straight out buying of calls or puts is a losing proposition. Okay. Sell calls or puts, never sell naked. Okay. Never sell naked. Buy debit spreads. Why would you ever want to buy a debit spread? Okay, when you can get more or the same as potential profit on a credit spread, but on a credit spread, you don't need the movement. You just don't need it to move against you. Okay, you want to learn how to create positions. Like if I want to create a put, if I thought the top of the market it was in, but I didn't want to expose myself to too much time decay. Okay, and I go, okay, so let's say I'm going to get short. I want to buy a put in the spiders, but I don't want to pay that heavy premium they're going to charge me. Okay, so let's say if I want to go out to expiration, which is Friday, so the put, the stock is trading at 412, so I want to buy the 412, the 412 put I want to buy. Okay, well, it's $2.17. Well, I could certainly create, okay, and sell a vertical spread, okay, and I can just say the 400 to the 412, okay, for $10. Okay, so I'm saving. It's very short-term basis. I'm saving $1. I'm saving 20% of the cost by selling the credit spread. Okay, so I'm paying less for the same put you're buying. I'm giving up one advantage that you're not giving up, the potential for unlimited gain. But to me, in my mind, I look at this, the expectation of movement between now and Friday is $6. If I can get 6 out of the 10, I'd be happy man. Okay, and I get more than you would, because the $6 would only get you $4 worth of profit, would get me 6. Okay, so I make more on both sides of the equation. Okay, and again, you'll never see these again if you ever come with me. I don't use risk graphs. If you can't see the risk yourself, then you shouldn't be trading. The risk graphs don't work when you're using dated options against short-term options. They don't compute. They don't calculate. But again, that's just the basic idea, is you should know what your risk is. That's my real point here. You should know what your risk is and exactly what it is, not what you think it might be, and not if this happens, but this is my net risk when I started, and here's my risk now. Okay, again, these are just what happens and using the options. But I think that, again, what you're looking for is you're looking to be in a place of safety with an opportunity to make money. Okay, but a naked option, and many of you sell them, and it's okay. Look, if you know your risk, it's okay. I have yet to sell naked options, okay, in 44 years. I don't believe in it. I think there's better ways to do the same trade. Why would I want to put myself in that type of risk? Okay, I'm not collecting enough credit or enough premium, and you hear a lot from a lot of experts out there about, well, it's a 98% probability. Well, what happens at the other 2% of the time? Okay, it blows out everything that you made on the 98% probability. Okay, and don't think it hasn't happened. I traded through the 87 crash. I traded through the 90s crash. I traded through 2001, 2008, and I'll be trading through the next crash. And I guarantee you, those naked sellers that blow out will wonder what truck ran over. Okay. You're not controlling your risk when you put yourself in that position. Okay. Would you sell out of the money naked put? No. 100% no. You know better than that. You know the answer to that already. I know you, baby. I'd sell a put spread if you want to do that. But why do I? Look, you're selling the premium to collect the premium, not to buy the stock cheaper. So why wouldn't I just sell a wide spread? Here's what do I got? SPY. Okay, here I got this SPY. So you want to be an owner of the SPY. Okay. So let's say you want to be an owner of the SPY, and we'll do the 28th of April. So you want to sell out of the money. You collect $2, okay, for the 407 put, right? So you're committing to buy the stock at 405. But what if I just did? And by the way, you have to put up $40,000 to do that. Okay, that's $40,000 with a margin to collect $2, which is fine. But what if I took the same trade and put it into a vertical spread, okay, and did the 400, 368? I'm getting $1.90 credit, and I've only got to put up $4,000. You got to put up 40. So which is the better trade? Tell me. You put up 40, I put up 4. Okay, I'm getting this almost the exact same credit you're getting. Which is a better trade? You see what I'm saying? Okay, don't put yourself in those positions. Okay, you want to put yourself in where you get the most use out of your capital. Okay, so if I can do the same trade for 4,000, why would I want to put up 40? Okay, and I can still make the decision. And what if the stock goes down 15%? Okay, I can make the decision. Do I want to own the stock, or do I want to resell another spread and take the credit once again? That's the difference. And that's the difference of understanding where you're going. Okay, this is what we have to be as traders, as investors, is to be able to put ourselves mathematically in the highest position of probability. And Rob knows all about that from playing poker. Okay, so I think that learning and understanding, and we do this every Saturday. We teach every Saturday morning, okay, for about an hour and a half, and every day you get an update. Okay, and of course, if you want to become a member with me, okay, you certainly can. And if you want to take advantage now, we have weekly training webinars. We have daily updates. You get to come to my Monday night strategy call. Okay. Oh, you're not talking to me. I'm reading a message. Wrong window. We're going to teach you how to use the options correctly. We're going to teach you how to avoid all the risks that you've either already taken, okay, or that you may be taking in the future that you don't have to take. Okay, because I'm going to teach you how to create the same positions that you tried, but I'm going to show you how to do them for less and have the same potential profit. Okay. In the meantime, it's $99 a month. If you want to check it out, bubbatrading.com/options, or $1,000 annually. bubbatrading.com/options here. And for those who come today and become members, okay, you will not only get the Saturday call and everything I just told you, but I've written 2 books on options, which you will get, and you will get a 6-session taped option course that I did that takes you from the beginning to a little bit of advanced, okay, which I did for one of the brokerage firms I do business with. And you will get that as part of your welcome gift today if you want to become a member. If you have any questions about options in general, feel free to ask them now. But again, it's bubbatrading.com/options. And if you want the options for the year, it's bubbatrading.com/options YR, or options year. Okay. But again, remember, whether you become a member or not, defend your capital. In every sport, in everything about life, defense wins. Okay. Defend your capital first. Make sure you're in position. Understand the position you're putting on. If you don't understand it, you shouldn't be putting it on. Does that make sense? If you don't understand what you're putting on, don't put it on. Make sure that you know because you have to be able to execute out of it if you need to. You ever tried to pen the daily close, but I don't know. I think that's a horseshit trade. That's my opinion. Again, I'm not always right, but to me, the amount of money I'm going to make to go through all the bullshit is not worth it. Okay, look, I traded the butterflies. In my heyday, I traded 25 to 50,000 contracts a day. Okay, when I was on the floor, that was never one of my strategies. Too much work, too many legs, too many things to go wrong. Okay, for me to deal with. Why do I want to make something that complicated? Yeah, I send alerts every day. I send and plus the fact I forgot we have a chat room too, in which all the members are together and they talk about the trades all the time, and we talk about rolling and what to do, and everybody contributes. Okay, so yeah, I send alerts every morning, and if I need to, I send them during the day too. Okay, but you're pretty prepared. So I know I'm running up almost against the clock. I got a couple of minutes left, I know, but again, I want to make sure that you understand the options model. Okay, it's not just about buying a call. You know, if you overpay for the premium, you know you can't make enough. Okay, because every day you own that option, time drifts away. You lose a little bit of money. Okay, so don't put yourself in the best advantage, not at a disadvantage. Okay, it's very important. Again, these are little things. And whether you become a member or not, I'm happy to educate. Okay, I've had a good life trading. I've done it my whole life since I was 21 years old. Okay, 65 now. So again, I want you to be successful, whether you become a member or not. Look, to me, it's all good. I want everybody to learn something that you can take forward and implement to whatever strategy you're going to use. But you got to defend yourself. You got to understand the implied volatility. You got to understand the best strategy for what you're thinking in the market. Okay, and I do sell myself if we have big moves one way or the other, and I think it's what we call a blow off. I will sell a deep in the money call spread or a deep in the money put spread instead of buying a call or put, because again, my way is much better over time. Okay, so again, I want you to be prepared and ready, and I think that's important for you as a trader, as an investor, because the worst thing you can do is put yourself in a state of panic or in jeopardy, and then make a bad decision because you're panicking. Okay? We don't want to hear any of that Billy Ray Valentine. He's panicking out there. And to that, again, it's BubbaTrading.com/options, or options year if you want to come annually. We also do some futures trading, which you can be part of and check it out. I mean, I trade all markets. I trade live every day futures with my members. So in the meantime, how long do you hold trades? We keep rolling until they expire. I think the VIX is going to have a big spike higher. Okay, I think the market's going down huge. That's my opinion. I've been on TV with that opinion, but I am long. Again, I give you full disclosure. You know my positions every day because I do a daily update every day on tape. Okay, right? So you know what my positions are all the time. But I do think we're going much slower. Okay. But yeah, there's no reason to close. We just roll them out. Okay. Now we'll close if they're profitable and they've gotten out of whack. But basically, we will continue just to roll them forward. Because again, we're collecting. So we're making money. We're not adding to our risk. We're taking away from our risk. Rob?
Yes, sir.
Oh, here he is. See, look at how good I am. I'm 1 minute early so that you can overcome later.
Hey, I really have to compliment when you talked about selling the naked put versus selling the credit spread, and just the amount of margin difference. Granted, you're getting $1.90 something instead of $2, but the fact that you can do it 10 times with the same amount of margin, brother, you're a genius.
Listen, I'm not a genius, but I try to learn something and just try to pass on what I learned.
Well, that'll be the first thing that I learned today. And great information. I mean, we had a discussion before the show started, and I love trading options myself. You know, great stuff. It looks like your service would be perfect for all investors, including those with limited experience, time, and limited funds. Thanks so much for making our members such an attractive offer today. I have to mention that I really do respect the program you made for the high school students. It's
Thank
something
you.
to be proud of.
I'm proud of you at the poker table, baby. I'll see you
Hey,
later.
I'm proud of you. I'll share my worst bad beat story with you next time. But God bless you, Bubs. Ladies
Thanks,
and
guys.
gentlemen, that was
Thanks,
trading
everybody.
off. I'm sorry, bud.
I just said thanks, everybody.
That's all right. Ladies and gentlemen, that was Trading Options with Mr. Todd Bubba Horwitz. And you can learn more by clicking on the link in the chat box or going to bubbatrading.com. Bubba is truly a great guy and has over 40 years experience as a trader. Come back and see us soon. Have a great weekend and good luck doing what you do, sir. That will bring us to our next presenter, who is widely recognized as the world's most disciplined options trader. He's been actively trading options for more than 21 years. He's successfully instructed 9 inner-city gangbangers at a public library in Aurora, Colorado, on how to invest for success, which is his real passion, to help kids break the poverty cycle. If he can successfully teach inner-city gangbangers with little education how to create an income through investing, there's a good chance he has some knowledge and he can instill it upon us. Here to present a behind-the-scenes look at how I create a seven-figure income selling options and how you can too is Mr. AJ Brown of Trading Trainer. Welcome back to Traders Corner, AJ.
Hey, thanks, Rob. And I got to say, just a shout out to Todd Bubba Horwitz. That guy, you're going to hear a lot more of what he said during this presentation, but that guy, I just want to give him some kudos. He's been around and he knows his stuff. So not often do you hear one presenter, give kudos to another one, but I just heard the end of his presentation and he's spot on, guys.
Hey, I love it when that happens because now you both give each other even more credibility if you're, doing
absolutely. Great. Well, I'm ready to get started if it's all right, Rob.
Hey, take her away. I'll send you a polite 5-minute reminder in the chat box when you're getting toward the end.
All right. So I've got some lessons for you guys. So I hope you've got some paper, pen and pencil, a pen if you're feeling really confident today. And I'm going to go pretty fast because usually I take about 50 minutes to do these, and I'm going to try to get them done in about 40 minutes so I could take questions. So let's see if we can get through this stuff. I'd love to have you take a look at this here chart. Let me see really quick. This is a chart I'd love to have you kind of blueprint in your mind. This is a sideways choppy chart. If you're a directional trader, this is not your friend. In fact, if you look at the S&P right now, this is what we've been seeing for over a year now. And through correlation, a lot of the symbols that we've been seeing on it are doing the same thing. And so directional traders are having a hard time. Swing traders, trend traders, having a hard time unless you're a very active trader. And one of the things I like to do is not be active. And I'm going to come back to this chart with some annotations soon, but I just wanted to kind of blueprint that in your head because here are some facts, right? First of all, right now there's a lot of uncertainty. What's the Fed going to do? What's the Fed not going to do? What are mid-sized banks about to fail? What about the big guys? All of that is happening right now. What about this ongoing conflict in Ukraine, right? All of this stuff. What about the stuff that's happening here in the States and even in Canada? Gosh, but what's happening in the markets, right? If played right, it can set you up for months, if not years to come. Here's what I want you to know. A lot of times the talking heads on TV, they talk about money being destroyed, like, oh, $4 trillion disappeared from. No, it didn't, right? Money is not created or destroyed in the markets. It simply moves hands. It goes from one person to the other. So the real trick is putting yourself on the correct side of the transaction. And so one question I have for you is, in this training, what would really be the most ideal for you? Would you like to learn how to fish? Would you like to learn how to fish but have expert fishermen there to help you kind of guide you, make sure they're looking over your shoulder? Maybe you're the type of investor who'd like to fish alongside other expert fishermen so you can kind of see and do what they do. Would you just put an A, or actually maybe I have a D. What if it's something else? Will you put an A, B, C, or D in the Q&A area? Because I can tailor my presentation today to what I see the most of. All right, I'm seeing some of the things a little bit all over the board. So I'm going to go ahead and kind of tailor it across the board. But it looks like a lot of people want to learn how to fish, have expert fishermen there. Let's see what we can do here. This is another, I'm going to come back to this graph. This is another graph about some of the option strategies that I like to focus on. These are premium selling strategies. And what I like about them is you keep rolling them out. You keep rolling them out. And as you keep rolling them out, they actually increase in value. So I'm going to come and dissect the, but I'll put this parabolic curve in front of you, kind of blueprint it, tattoo it into your mind so that when we come back, you'll already have an imprint of it. So here's something if you reverse engineer, right? Because I like to reverse engineer into something that's a little bit more doable, because I like to set up consistent and efficient kind of processes. And if you reverse engineer, if you can focus on just a 6% target on your portfolio every month, then that's how you're going to be doubling your investment every year. So 6%, I know a lot of folks are talking about these home runs where they're doubling their money in a couple of days, or they're making 50% in a week or so, but I want to focus on 6% per month. And if I can do better than that, great. But I want to always plan, and this is what a lot of folks don't like to talk about, and that's called risk management. I always like to plan on what's my worst case scenario, and then anything I do once I've planned on that is going to be better than that, right? I don't like to look at potential rewards. I like to look at potential risks and make sure I never even approach those, right? So 6% is my target because I like to double my income every year. That means if I start with $1,000 with options trading, that's totally doable. I'd have about $2,012 in a year, or $4,048 in 2 years. In 5 years, I'd have $33,000 just doing the same strategy over and over. And of course, 10 years, I'd be a bona fide millionaire, which is exactly the equation I ran, right? Because I started doing some very successful premium selling in 2003, and you can keep this number going, but we're on 20 years now, and I'm doing very well. And so are the program participants in my trading trainer programs. What I like also is once you grow to your portfolio to a certain size, like 100 grand or something, and you keep doing these strategies, you could actually be pulling out money, right? Because 100 grand portfolio could generate over 100 grand per year. And if you compare that to, you know, a white collar salaried average income here in the States, which is $87,000 for a 60-hour a week endeavor, right? Obligation when you have that kind of job, you're talking 87,000. Now I know you guys on either one of the coasts make a little bit more than that, but you know, having $100,000 golden goose in your account and then just working it the same way, you can continue putting money back in and have it grow, but you could also start taking an income, which is why I left Hewlett Packard, my last employer, in 2005, never to take another day job again, right? So what are we investing in? What I like to do is I like to sell theta decay optimized option premium. Oh my God, that's a bunch of word salad, isn't it? Said in layman's terms, we profit on time passing by, right? Because options don't just profit based on the underlying movement of the symbol. They also profit on things like implied volatility changes and even on time passing by. So let me first put out a questionnaire here. Just type it into the Q&A area. Based on what I've said, I just want to make sure I imprinted this. What minimum returns must you make monthly on your portfolio to more than double your money annually? Were you listening? Go ahead, A, B, C, or D. All right, I'm seeing answers roll in. You guys have been paying attention. That's good. By the way, my quizzes are going to get harder as we go along. Now, a lot of people will talk about options. Aren't those things risky? It's actually the opposite. They were created to hedge against risk, because not only can you make money with options when the underlying symbol goes up, but you can also make it when it goes down, which is, you know, if you know how to short stocks or indexes or ETFs or whatever other underlying symbol you're talking about, you can make money going down. But options are also very good at making money when the underlying symbol goes sideways, mainly by time passing by, but also because option price is influenced whether there's fear and uncertainty in the markets or if there's confidence, right? And so a lot of you who are not familiar with options, you're like, well, tell me more about this investment vehicle. It's a financial instrument called a derivative. They're typically bought and sold to hedge against risk, against stocks, indexes, ETFs. But what we're doing here is we're selling their premium to generate income. And I'm trying to do it in a way that not only gives me high rewards, but as I really harped on earlier, minimizes my risk. That's really important to me. And also, I don't want to have a ton of effort. So if you're one of those folks who's got things you want to do during the day, right? You've got a passion. Maybe you're a doctor or a lawyer, or you've got some sort of passion. Like, for instance, I'm turning 50 this year, but when I was 44, I decided I had gotten to a point, that was 6 years ago, where I wanted to run away and join the circuit. And thanks to my options trading, I started circus lessons. And now I'm a really good duo trapeze person, right? After 6 years of intense training. If it wasn't for the ability based on how I sell premium, where I'm not stuck to a computer, right? When I left my job in 2005, the last thing I wanted to do was create another job, right? So if you've got things during the day that, take up your time, or you want to have things, you have passions, you have a bucket list like I do that you want to get accomplished, maybe this type of premium selling is what you're interested in, right? First of all, I can bypass these slides, especially with the time constraint. Will you put in the Q&A? Do you guys know who I am? Just put a little yes or no. Have you guys heard of me, AJ Brown from Trading Trainer, before? Yes or no? All right, a lot of people are saying no. So I'm just going to blast through some of these things. I've got a lot of these different social medias. I've got articles you can go grab. I've got white papers. I've got contact us where you want to get a hold of me. That's my phone number. If you, by the way, visit any of my like Facebook, Twitter, YouTube, any of those pages, do me a favor and subscribe, because I always like to have more people on there. It kind of works with their algorithms, gets my message out farther. I founded this company called Trading Trainer. They call me the world's most disciplined options trader. I actually think behind my back, these are my peers, they call me the laziest options trader. And that's because I like to think of myself as the most efficient options trader, because I like the fastest way from point A to point B, right? No effort, no white knuckling, no going to bed worried that I've got positions open that are going to be dangerous. And also none of the manic phases. I hate it when I just like to be even keel. So again, like I told you, I could focus on other things. I've been doing this stuff since 1997. And then on top of that, I started publishing a newsletter for my participants when I opened the doors to Trading Trainers since 2002. There's an ebook you'll probably find on a lot of old hats computers that I wrote back in 2005 called the Seven Strategies of Successful Option Traders. Had a home study course. You see that on a lot of people's shelves. Main thing to know is when I first started in 1997, I really lost bag. In fact, back then the internet was not as popular as it is now. If you wanted to have some of these gurus coming to town, you had to go see them in a hotel room. Some of you probably remember this. You'd go and spend half a day on Saturday, and then they'd talk you into come back all day Sunday, and the next thing you know, you had a plane ticket and you'd go spend 4 days with these people. And so I spent $27,000 on that seminar that first year, which was almost how much I paid on for my college education from University of Virginia and things like that. Yes, Jeff Wood said, reminds me of the Wade Cook days. Absolutely. Not only that, I tried to follow some of these guys' trading styles, and I wound up giving $85,000 back in the market that first year, making stupid investments. And so I just want to know, I've been where you are, and it took me up until about 2001, so 4 years, to really nail in what was doing. And I don't want any of you to have to take 4 years of trial and error. Good thing I was working for Hewlett Packard, living in Silicon Valley, and I had a lot of extra money. I was single at the time. I'm not single anymore. I, had a very low costs, low expenses. I wouldn't be able to do that now, and I hope you guys know that there's a faster way. Here's 4 ways that I cracked that code, and so you might want to write these down. Number one, I stopped chasing shiny objects. I focused on exactly like what type of investing I wanted to do, and I learned it well. And not only what I wanted to do, because a lot of people want to do something, but what my time freedom at the time when I was working for Hewlett Packard, in their marketing department, doing some heavily, crazy mergers and acquisitions with Compact Computer and separating out our test and measurement, stuff like that. I was in the high level executive area. Settle on one type of investing and learn it well. So look at your lifestyle. Can you actually be a day trader? Right? I couldn't. And so I had to come up with ways to make more than just the, 4% or 3% I could do, or giving my money to somebody else, maybe make 7% a year. I knew I could do more, but I also had to do it within my constraints. So options trading and selling premium specifically was what I focused on. Hire a mentor who is currently doing what you do, and most importantly, knows how to do it, right? And knows how to teach how to do it. Because I've hired a couple of mentors throughout the years who obviously knew what they were doing, and they even let me look over their shoulder, but they couldn't explain to save their lives. And so that's no good, right? You have to learn, right? And learning from guided discovery is what I call it, is a much faster way than through trial and error, right? Another thing that I did and that you should do is join an investment group where you can not only get your stuff vetted by other people, but you can look over the shoulder and leverage with pride. Another thing I learned from Hewlett Packard, right? When Hewlett Packard wanted to create a new printer, what they would do is they would go buy the Canon and the Epson, take it apart, figure out what they did, and then do it better, right? It's called leveraging with pride. It's oftentimes in grade school we're taught not to look over each other's shoulders, but in reality, that's how you do things, and that's how you learn fast, isn't it? And last but not least, you should surround yourself with like-minded investors, because there's a bunch of naysayers in our life, and there were in my life, that tried to convince me that what I was doing was wrong, and now they're all, asking me to loan them money. So just surround yourself with like-minded people who can celebrate your wins and get you through the losses, right? All right, this is exactly what I did. The other thing I want you to know about me is I started a foundation. Rob mentioned it a little bit. I take historically underserved inner city kids off the street and I teach them how to invest. So my investing turtle experiment was back in 2003 with those 9 high school kids from Aurora, Colorado. My foundation has since grown. We're in Chicago now, and we are dealing with you keep hearing about the south side of Chicago. Well, we bring over 150 kids in every year and work with them and get them off the streets, teaching them how to invest, teaching them how to, do the markets, teaching them how to do the same stuff that I do with you. All right, back to the topic at hand. How do we sell premium? 4 simple transactions: covered calls, covered puts, which right now is something that our program participants are using a lot of. If you're not familiar with covered puts, this is flipping the covered call upside down. This is something you should put on your list that you want to do a deep dive on. And then, of course, writing covered calls against leaps, supercharged covered call writing. For you academics out there, this is called a bull call diagonal debit spread. And also writing covered puts against leaps, supercharging that covered put writing. And again, the academics would call that a legged in bear put diagonal debit spread, right? These are the 4 transactions that I really like to focus on. And I just want to put out there, we have a lot of folks in my program who do this in their retirement accounts. And so you have to know which transactions require cash accounts, because that's what most, in fact, all broker proctored retirement accounts are. So these 3 transactions, the covered calls, the bull call diagonal debit spreads, and the bear put diagonal debit spreads, those are all cash trades that you can do in your retirement account. This guy, the covered put, does require a margin account, so keep that in mind. What is an option premium? So I keep mentioning this word option premium. Listen, I'm going to get into some nerd speak right now. Option price, if you look at any option price that's being traded, it consists of 2 different components: the in-the-money value and the premium value. Again, academics would call that intrinsic and extrinsic value, right? And a lot of people call premium value time value. I hate that nomenclature because there's a lot more that goes into the premium component of price than just time, but you'll hear it also called the time value of an option, right? So you've got those two components, and how you play with those is through selecting strike prices and expiration dates. And the ratio of those two values in the option price will make the options behave completely different. So not every call behaves the same. A deep in the money, far out in time call behaves totally different than an at the money, near term call, right? They're two different beasts, and a lot of people think a call is a call. Well, it's not, and a put is not a put. There's a lot more intricacy into it. So, okay, take for instance Ford. Last night after the market closed, Ford closed at $12.52. So if we bought shares of Ford and then immediately sold the 4 May 19th $13 call, you get 36 cents selling that thing. Basically, what you'd get is kind of a discount on buying that Ford stock. It would reduce your break-even price or your cost basis on Ford stock, and it would also create for you an instant dividend, $36 per option contract sold. Options are sold in lots of 100. So what happens if we do that transaction? What happens if Ford closes above $13 on May 19th? Okay, so we paid $12.52 for Ford. We get $13 for getting exercise. That gives us 48 cents per share profit. And in addition, we got the 36 cents up front for selling that callback. So our total profit per share is 84 cents or 6.9% ROI. Not bad, because our focus, if you remember, is 6% target, right? So 6.9, not so bad. But now, what if Ford is flat by May 19th? It just goes sideways. And this is actually what me and my program participants look for. We like the ones that go flat. You pay $12.52 for Ford. You get the 36 cents for selling that call. That call expires worthless, so you keep that 36 cents, and then you've made 3%. And you're going to do it again and again because you wind up keeping the stock. You're going to be basically renting out your Ford stock every month. That's kind of what it's like. You rent it out, you collect this rental income, and then it expires worthless. And we try to do this for as many months as we can. Now, what happens, everybody? This is if Ford drops by May 19th. So you paid $12.52. Here's one of the coolest things about this. I got my 36 cents. So my break-even price now, because of that discount, is $12.16, right? So built into this covered call strategy is a profit buffer, right? In other words, the underlying symbol can go down all the way to 12.16 before this thing is even in the red. Now I'm going to show you a strategy that we use in order to hedge that even better. But just know that built into these strategies, there's a certain amount of profit buffer because we take that discount. And that call that we sold, man, it basically acts like a coupon, because as the coupon gets close to that expiration date, it loses its value over time, which if we sold it, that's a good thing. It puts us on the right side of the equation. Now, I do want to show you a real life trade very similar to this. The only difference is that we went in, we legged in on it on two different dates. So on January 31st, we bought a whole bunch, 900 shares of Goodyear Tire. We paid $11.17 per share after commissions, $11.18. It was just over a $10,000 trade. And then a few days later, February 3rd, this is the legging part, we went ahead and sold the $11.50 call. Sold 9 contracts. Remember, contracts are in lots of 100. We made 53 cents a share, brought our cost basis or break-even price down to $10.65. And guess what? By February 17th, Goodyear Tire was trading over $11.50. So we got called out. We got called out at that $11.50 price. When all was said and done, just a couple of transactions, January 31st, February 3rd, and then everything else happened automatically. And on February 17th, we got our paycheck of 7.5% on that trade. Definitely no rocket science there. Quite easy. And of course, once you've sold your call, you just let the thing marinate. All right. So I want you to think about this. What does investing by selling premium create? If you were paying attention, I want you to answer all that applies. So maybe it's A, B, C, and D. Maybe it's A and C. Maybe it's B and D. Go ahead and type those answers in. Is it an instant dividend? Is it a discount on a security, a profit buffer, an expiring coupon? If you've been paying attention, you know it acts like all four, right? It does all of these things, which is cool. That's what I like about it. Now, I'm going to ask you a question that we haven't talked about. Now you're going to be using your reasoning skills. How can we lower our investment, increase our returns, and if necessary, convert something that would only work with a margin account into a cash trade account? Should we sell farther out in time options? That's A. Should we replace the security with options trading at parity? That's B. Should we give up and buy mutual funds? That's C. Or is what I'm talking about not even possible? All right. Some of you are right on the ball. Some of you are thinking you sell out in time options. Actually, remember I said how options change based on their expiration date and their strike price? The farther out in time your options you go, the less viable they are for making premium off of them. The cost-benefit relationship for going farther out in time doesn't actually make sense. You want to stay near term. Near term is defined, write this down, 3 to 5 weeks to expiration, no less than about 7 trading days. So the answer is actually B, replace the security with an option trading at parity. So you might be saying, what the heck is he talking about, an option trading at parity? Option premium is the most when the option is at the money, right? But when we go very deep in the money, the option has very little premium. In fact, we target it having less than 5%, and it's almost completely in the money or intrinsic value. And so, in layman's terms, a deep in the money option behaves exactly like the underlying security, dollar for dollar, meaning like if a $100 stock goes up $1, so does your deep in the money option. It goes up $1 as well, but it's going to be cheaper. So we're introducing a little bit of leverage here. And you might say, okay, this is an option. If I'm going to substitute, how far out in time? Well, remember I told you that my participants and I like to go as long as we can before we get exercise, before that stock or that underlying symbol or that initial covering position gets taken away from us. On average, I've looked at all the statistics of our program participants over the last 20 years. It's about 5 months. And there's some that go 6, 7, 8 months, some that go 4, 3, 2 months, but the bell curve is right around 5 months. But I want to handle the extreme because the last thing I want to do is be collecting income on this initial covering position and have the whole transaction fall apart because the back month option expired. So the answer is we go far enough out so that it's not the option expiring that's going to be hampering us. And so how far out in time is that? It's about 8 months. I want to go at least 8 months. And I tend to target leaps because leaps are around for a little bit longer. They get traded more often and therefore have liquidity. And sometimes you want to have that extra liquidity. So think about your January 2024 options right now. So let's run through that same experiment. So I could be using Ford at 1252, or I found this Ford January 2024 $7.35 call. That's because Ford did a special dividend, so the strike prices got kind of interesting. So the strike price is $7.35 call. That thing is only trading for $5.33 as of the close yesterday. So that's really quite a discount, isn't it? And if you look at this option and you analyze it, it's got hardly any premium value, right? It's all in the money value. It's basically going dollar for dollar with Ford stock. So if we use that back month option, pay $5.33 for it, and then sell the front month option like we did in the last example, we're going to get our 36 cents get that instant dividend. It's going to act like the expiring coupon. It's going to serve to lower the price on our initial, lower the break-even price. So what happens if Ford closes above $13 on May 19th? Well, again, paid $5.33. When we get exercised, we get the difference between the two strike prices. That's why this is a spread, right? $13 minus $7.35 is $5.65. So we get $5.65. That means we made 32 cents per share profit plus the 36 cents we made up front. So we got 13.7% ROI. Again, not bad at all. But what about the case that we really wanted to do? We want it to expire flat so we can do it over and over again. All right, $5.33, $5.33 for the back month option. Sell the front month option for 36 cents. Make the 36 cents. Make 7.2% ROI so far. And do it again and again and again. That's the ideal case, right? What about Ford dropping? Well, just like in the covered call, there is a profit buffer because we collect that dividend, right? 36 cents. $4.97 break-even price. The profit buffer is still 36 cents. Again, I'm going to show you in just a couple seconds how we hedge it even further, but just know even in this strategy, there's an inherent amount of safety built in, 36 cents worth before we even start trading in red. I want to remind you, 6% is my target because I like to double my portfolio every year. Okay, here comes another one. Oh, before I go even further, let's take a look at a real trade that we did not even a few weeks ago. This is on Shopify. You guys ever heard of Shopify? So Shopify is a little bit up there in price, and so I didn't want to spend as much as the Shopify stock cost. So instead, I was using the Shopify January 2024 $15 call. That thing was only trading for $25.80 per share, per option share, 4 contracts, basically 400 option shares. And you can see that my cost basis per share, you might be wondering, hey, if you paid $25.80, why does it show up in your spreadsheet as $25.81? This is factoring in my commissions, right? All right, and then I was able to sell just a couple days later on March 9th, and we do a lot of legging in of our positions. The Shopify March 17th $44 call for $2.25. And sure enough, at the end of March, Shopify was trading a little bit higher than my $44 strike price, so I got exercised out. I make the difference between the 15 and the 44, hence the name the spread. That's the $29. And so I wound up walking away with 21%. Now remember, my target is 6%, but we're doing these type of transactions all the time. And this one worked out to, and this one was doing much better than, we typically get 15, 16% on our positions if they're only held for a month like this. This one was definitely stellar and I wanted to show it off, but 21%, right? That's not bad for a position that I did one transaction on March 2nd, one transaction on March 9th, and then it wound up cashing itself out. So I like these positions where you can set them up and they just act automatically, So how can we drastically reduce our risk on return? What should we be doing here? Should we sell half as much option premium? Or should we sell out in time options? Maybe we should collar the investment by marrying a protective option, or is what I'm talking about not possible? What do you think? William knows. Anybody else? Tony knows. Now the answers are rolling in. The answer is collar the investment by marrying a protective option. Let me show you this live trade that we did. This trade actually lasted, get this, 14 months. Now, again, these are kind of the extremes, but this one started back in August 2020 and it didn't end until way into 2022, actually. We did 600 shares of stock, and I want you to look at these numbers really quick. We paid $34.73 per share of stock, and in the first go around, we sold premium $1.76. But then I bought protection, right? I bought this protective put with a $34 strike price, and I paid $475, right? And that was August 26th was the initial position. And then I did those two positions. I sold premium and bought my married collared protective option on the same day. And then the expiration date rolled around September 18th and it expired worthless. So I got to keep that $1.76. And then this is where it's a little bit different than what a lot of other folks teach. A lot of other folks teach to protect your option at a loss. And so remember I said we can select our options with strike price and expiration date and make them behave in different ways. By selecting this option 3 to 6 months out and picking the strike price near our bailout, this option actually behaves in that when we're done with it, and we're done with it as soon as our sold premium is expired, we roll it out, we actually can get more money for it than we bought it for. So I sold it for $5.90. This is like frosting on the cake. So in addition to the $1.76, it looks like we made another $1.15 just by rolling out the protective option. So then what do? We repeat. On October 1st, we went ahead and sold premium and bought protection again, this time $1.47, $3.01. The premium expired worthless, meaning I got to keep the $1.47, and then I sold the protective option back, this time making 61-cent profit. And then I rinsed and repeat over and over. That's what we do, right? So if the protective option isn't ever called on to protect the position, hey, it winds up paying us back when we roll it out. And that's kind of the little trick we've got going on here. The real secret is to turn that protective option, instead of being a loss leader, turn it into another profit maker in your position. Here's the other thing. Take a look at after the first round, I got my cost basis down to $31.86. Where am I protecting at? The $34 strike price. So think about it. Even after I sold the next protective option, it only brought my cost basis back up to $33.42. I'm protecting myself to $34. So what does that mean? Well, take a look at this chart that I made you look at in the beginning. This is actually my PAS position. And what I want you to notice here is there's my break-even price. So the orange line is if you get exercised. The gray line is if the thing gets bailed out. So notice after the first month, even if I get bailed out, it's no longer going to be a loss. And as each month I hold the position and simply roll out my protective option, sell premium, roll out my protective option, sell premium, the profit of the position goes up exponentially. So that's why I like to stay in the same position as long as possible. Plus, it's a lot less work to be researching symbols if you're just in the same positions all the time. And then the other thing is look at what happens if you get exercised out. So on average, our positions last 5 months. So if we get exercised, we're going to walk away with 65% ROI in 5 months. However, if it goes against me, I'm still going to walk away with profit. I'm going to walk away with 50%. So here's a case where after the first cycle, we have a risk-free trade, right? This is where the trade becomes risk-free. Not even in the first month, but not even after the first month, but the first month is still in there and the position became risk-free. So I like those where very early on in this long-term position, they become risk-free. I don't have any of my money on the table anymore. So what do? What do we have when our cost basis, our break-even price, is less than our protective bailout price? If you're following along, you probably already know. Is it a risk-free investment? Is it a losing trade? Too much complexity, or has AJ been hitting the crack pipe? Risk-free investment, right? All right, so here are the 3 steps. Buy or short an underlying security or buy a substitute option trading at parity. Sell a near-term at-the-money option for its premium value, and then collar it with a married option that is 3 to 6 months out in expiration to protect your investment. rinse and repeat. And for those of you that are saying, wait a second, AJ, that seems way complex, but just look at it. Just look at the time frame of these trades. I do a trade on August 26th, then I do my 2 trades on September 1st, and then I do nothing September 21st, 4th, I roll it out. October 1st, I put it on. October 29th, I roll it out. November 6th, we're talking about 2 days of trading per month, right? That's how we roll out our position. We're not talking about day trading. It's amazing how many day traders have said to me, boy, that seems complex. Really? I think what you do is complex, right? So timing of a position, if you're doing covered calls or bear call diagonal debit spreads and you've got this sideways channeler, I talked about legging in. We're going to leg in at the bottom of the channel. Then we wait a couple days till we're at the top of the channel. That's when we're going to do near term. That's when we're going to sell our premium and buy our protection. When we're at the, the options expire on the expiration date. And then, of course, we sell back our protective option and then rinse and repeat. If you're doing the covered puts, which we didn't talk about much today, or the bear put diagonal debit spreads, you simply start at the top of the channel. So you can work with whatever timing works best. At the bottom of the channel, you sell your put premium, you buy your protective call. The put premium expires on the expiration date. You sell back and you roll out the protective call, rinse and repeat, rinse and repeat. You're talking about 2 days of trading, 3 transactions, and that's it. So the question is how would you like to never miss a pick, minimize the amount you spend away from your loved ones, your passion, your job, whatever it might be, and have support whenever you need it? Because that's what we're talking about. We're talking about saving time, creating clarity, and getting results, right? So I'm going to take a couple of minutes, if it's okay with you, to tell you a little bit about my materials, training, and tools to see if they're right for you. I have about 3 minutes now. This is for people who don't want to pay for multiple data subscriptions, wants everything they need in one place, don't want to miss any opportunities, want to spend more time doing other things, don't want to do this alone, want step-by-step instructions. They want consistent and reliable results, right? I'm going to pass that testimonial on because there's a whole bunch of components to our programs, video tutorials. We have monthly live classes, which are more like lecture series. We have screeners that tell us what symbols to trade each day. We have planning tools that help us put together our trade plans and keep that risk within our appetite. And then we have weekly live workshops. These are some of the things that I think are the most valuable, these weekly live workshops. These are the ones where we actually get together with everybody on the line and plan out a trade. And then we all take that trade and trade it the next week, right? And then trade reviews. If you do any planning or you're in any trade on your own, we have a special messaging system where you can submit your trade review for your trades for review, where within, turnaround time, we get the trade back to you telling you what you missed or what you didn't miss and if it's a go or not based on our opinions, right? So hands-on is what we're talking about. So what is that all worth to you? Plus, I've got this double your money back guarantee. Now, I am going to ask you to work with me for 6 months. Now, I think you could pick this up in 2 or 3 weeks, but like I said, I want you to keep coming to the weekly, trade with us, get that experience with us, and also have me for 6 months to review all your trades with you before I let you go on your own. So I'm going to ask you to do this for 6 months. And if at the end of 6 months, you're not turning a profit, not only will I give you the money that you spend on this program, I will also double it. That's how confident I am that if you spend 6 months with me, you're going to be profiting and on your way to some success. Also, as a bonus for being part of this Traders Corner program, I'm going to give everybody a coaching session. We have one-on-one coaches. They're going to talk to you about where you are right now and where you want to be and help you figure out the best path to get there as quickly as possible. So add those in, and what's it all worth to you? Because the regular price is $597. So it's about $100, a little less than $100 a month. But it's a flat fee. I'm never going to charge you again. There's no other charges. There's no subscription. And actually today, I'm going to lower that price because of you guys, and it's only good for this weekend, to $497. So here's how you do it. You go to optioninvesting.org/Traders Corner. If you've got a mobile phone, you can just scan your screen and scan that QR code. And you got to put in the promo code 100DISC. Let me just test it because I know my folks set it up here, right here where it says promo code down here at the bottom, 100DISC. Let's click apply. Oh, cool. I was afraid it wasn't going to work. Yes, it reduced the price by $100. So that's how you're going to do it. Go to optioninvesting.org/Traders Corner. And if you are having any trouble with that order form, you could always give us a call. We've actually got people on the line today, and we can place your order over the phone. I'm at the end of my time. I didn't get to take much question. Does your stock system apply to stock option or future options, or for both? We focus on stock indexes and ETFs, but the learnings can be applied to futures forever, of course.
Hey, AJ, I gotta say, I'm pretty taken aback. That was an amazing presentation. And obviously the story on how you taught the former gang members, inner city kids, how to invest successfully. A lot of people probably gave up on them, and it's a real testament to your character that you provided them with an alternative to the law-breaking lifestyle that they get unfortunately left with.
Yep.
Ladies and gentlemen,
I'm just going to say that I follow in the footsteps of Bubba before me, right? I'm not doing anything special. I'm just teaching what I learned.
No, and me being an options guy, looking at it, it's like, wow, this just makes sense and it works. And anybody that wants those consistent results, I mean, you're delivering on them in a beautiful way.
Thank you. Thank you.
That's all right. Thank you for being with us, ladies and gentlemen. AJ Brown of the Trading Trainer. You can learn more by clicking on the link in the chat box or find him at tradingtrader.com. Thanks, AJ. I hope you have a great weekend, and we hope to see you again here on Traders Corner.
Bye-bye.
Oh, well, up next happens to be one of my personal favorites. She specializes in helping people to day trade with confidence and ease. If you have the desire to learn to day trade successfully, she simplifies the process by completely breaking down the art of identifying high probability trade setups. Here to present 4 steps to simplify your day trading and understanding the power of the breakout trade is Marina, the trader chick Villatoro. Welcome back to Traders Corner, Marina. Marina, can we check our mute button?
Great host, I have to say. And
hey, girl.
You're definitely my favorite. You're the most fun and genuine. Thank you. Thank you for having me.
Thank you.
Let me just set up my screen. Hope you guys could see this. And let me just open everything up. Thank you so much, everybody, for being here. And thanks again, Rob, for hosting and taking your time out. I know that you have a little person waiting for you after this, so you can enjoy being with them afterwards.
Thank you for the consideration.
All right. Hi, everybody. How's everybody doing? Let me just organize my everything here right now. Okay, awesome. Well, welcome to today's to Saturday, and I am Marina, the trader chick, and today I am going to be talking about understanding the power of the breakout trade, because we all know how powerful the breakout trade really is. But the thing is, if we don't notice the easy understanding of where to take it, we're going to either end up missing all of them, or taking fake out breakouts, or even worse, getting in too late because we spotted it too late. So let's begin. And before we do, I just want to say hello. I am Marina, the trader chick, and this is me right here. And what I want to cover in this presentation is understanding market movement. A lot of times we go into right into the trading part when we overlook the most important parts, understanding those market movements, understanding how to use our indicators for those best entries, right? Basically, what happens a lot of times I'm seeing is that a lot of people are taking their cars on the highway without really even understanding how the clutch and the gears work, right? And then they end up crashing or stalling or having, you know, incidences that could be completely avoided only if they learn how to do the proper switches with the clutch, with all this. And that's what we want to get into, right? We want to have the basics. We want to have that automation down so that we don't have to worry, oh my goodness, do I need to get into third gear here because we're slowing down, or should I be in fifth gear? And understanding how that switch goes on. And that's exactly what I will be talking to you guys about today. But one thing that I really, really want to focus on is I'm going to do an intro. And the main reason why is we forget that we are humans that are sitting in front of our charts. And a lot of time people get too wrapped up in the charts and the algorithms and the indicators, but we bring our humanness, who we are as a person, to those charts. And what does that mean? It means we bring our thought process, our mindset, right? And that mindset comes from wherever. And it's very important to work on our mindset, but you cannot omit what we have brought to the table to start with, and not even omit it, but like to embrace it and to love it, right? Because we are who we are, and that's really cool. So here I am Marina, the trader chick. I am an expat mama living in Barcelona, Spain. So I'm actually coming to you guys from Spain right now. And for me, it's almost the end of a Saturday. It's been an absolutely beautiful Saturday. It's 7 p.m. here for me. And I actually just recently moved to Barcelona. I have been an expat for over 20 years. Before this, I lived in Central America and Costa Rica, and almost 14 years in Guatemala. And now we just recently moved to Spain to live here, and it's unbelievable. I love it, love it, love it, love it. I cannot even tell you how grateful I am to be an expat living in Barcelona and getting to know this unbelievably gorgeous city. Sometimes I have to pinch myself to believe that it's really here. And before I became a trader, I was a day trader. Before I became a day trader, I was a fitness instructor and a travel writer. And the main reason I bring this up is because a lot of people think that they need to have some sort of a math background or financial background. None of those things are true. I was a fitness instructor. That's the coolest thing about trading, is that you can come from any walk of life and anyone could do it. And I am trilingual. And the main reason I bring up that I'm trilingual is not to be like, oh, look how cool I am at all. But basically, because one thing that have completely shifted my way of looking at the markets and to become successful of understanding the markets is because I believe that I learned a language in my later years. I was born in the Soviet Union, so Russian is my mother tongue. I was raised in the United States because we were Russian. We were refugees when I was really young. And instead of actually learning English, I kind of just continued learning how to speak. So I never really learned English versus learned Russian. It kind of was just one big thing. But when you become older, and I learned Spanish in my late 20s, it's a whole process, right? You have to commit to understanding. You have to commit to learning. You have to commit to practicing. You have to commit to all these things, to understanding. You have to have somebody who's patient with you. And after struggling for years with the markets, I said to myself, let me look at the market like I have been learning how to learn Spanish. And it shifted everything for me, because the market speaks to us. It has its own language. And when we learn that language, and it's not a difficult language, everything works better. And that's actually what I want to really talk to you guys about today. So instead of you guys entering a room full of native Spanish speakers and thinking that you're going to be part of their conversation and wondering why you don't understand a single thing, why you feel so left out, while every time you try to get into a conversation, you stumble, you feel like a fool, that's because you didn't even learn how to say, hola, mi nombre es, right? And that's what happens with the market, because there's absolutely no barrier to entry. What people do is, I have some money, boom, I'm going to go into the market, but you don't even know what's a sell, what's a buy, what's a support, what's a resistance. You don't even understand what's happening as in the market language. So today we're going to learn all that, and you're going to be able to totally understand that, and you're going to be able to apply it to understanding how to work with a breakout trade. And the coolest thing of all about day trading, guys, come on, you can do it from anywhere in the world. How awesome is that? I trade with one chart. That's all I use. I can take it anywhere. I go traveling with my laptop and boom, as long as I have internet. And today, you have internet everywhere. There's zero excuse for no internet. I lived in Guatemala for 14 years. We sometimes had better internet than when I visited my family in Manhattan. Okay? So there's no excuse. You could easily do it everywhere, because I always get like that. Oh, well, you know, I'm traveling here. They're going to have internet? Absolutely. I've been in the jungles of Mexico. I've been in, I mean, anywhere. At this point, absolutely. I lose here in the US just fine. Why travel abroad? You lose here. Good point, Ari. Okay, how about maybe traveling abroad to win? It's good to have a sense of humor, right? Because if you don't have your sense of humor, what do you really have? So another thing is that I have been featured. I used to love to do live in-person presentations similar to this. I was a huge presenter at Money Show, Traders Expo, but now today I love to be able to talk with you guys here virtually. So like I mentioned earlier, I want to talk about the basics, right? Because a lot of times we are hopping into those conversations with people that speak a different language and you don't even know how to say hello to be able to even enter that conversation. We're going to be able to enter that conversation and a lot more. And like I mentioned earlier, it's kind of like driving a car, right? We forget that when you drive a car, you learn their language, right? When I was teaching, me and my husband were teaching our 19-year-old son how to drive, and we got in the first time and we're like, okay, buckle up, put your feet on the clutch and the brake, make sure that your gear is in first before you let go. He's like, clutch, gear, brake, what are you talking about? But that's the basics of driving a car, right? So once he learned that, boom, now he's able to take it on highways or in cities, he's able to drive. And that's the same thing as is for trading. Now, before I get into this, I have the entire presentation for you completely free in a worksheet so that you could follow along. So please go here, makingofadaytrader.com. Go to makingofadaytrader.com. and you can get the entire presentation completely for free so you can follow along. All right, guys, are you ready? Getting back to the basics, building your trading foundation. All right, what are the trading basics? First and foremost, you need to have a platform, guys. You cannot be a Formula One driver in a minivan. You need to have the proper vehicle, right? There are so many amazing platforms out there today. You could definitely go and get yourself a great one. And those good platforms, and honestly, that is the only thing you actually need to really get for trading. That's it, because the good platforms, they offer universal indicators, okay? So again, all you really need is that platform. And again, I talk about this in my worksheet. You could also contact me and I'm happy to help you guys find the proper platform, because I know that there's quite a lot out there. So like I said, I'm happy to be able to help you guys with that as well. Go here, makingofadaytrader.com, makingofadaytrader.com. Okay, so market movement and the breakdown of a trend. You cannot get into a car and just drive all over the place, right? You follow certain lanes, you follow certain roads, right? That's pretty much the same thing with trading, okay? It's not available to download. Okay, Ashik, can you please write to me personally and I will make sure that you get it? thetraderchick@gmail.com. I'm gonna put in my email. And anybody else, if you have an issue, please, at gmail.com. So please go here, thetraderchick@gmail.com. You could go in there, and if you guys have issues with it, please, I'm happy to help you guys and send you the cheat sheet. Okay, thetraderchick@gmail.com, and I'm happy to send that over to you. All right, so what's a market? What's a trend, right? We all know logistically that there are 3 trends to work with, right? We know logistically there is an upward trend, there's a downward trend, and there is a sideways trend. But here's the thing, guys. The sideways trend, I actually call it the trader's worst enemy. Why? Because this is the consolidation area, the indecision zone, the chop, the exhaustion pattern, the channel. I don't care what you want to call it. This is where we end up losing the majority of our money. Why is that? Because it is a place that nothing is going on. And what happens is that we start to put money into this thinking that it's either going to break out in one direction or another, without truly understanding that this is a place where we have to sit out altogether. So I want to really talk about that so we understand how to not be able to get into that at all. Okay, so like I said, trending markets, we have the downward market, we have the sideways market, and the upwards market. Let's talk a little bit about the upwards market. What is it? Pretty basic stuff, right? Each pivot is higher than the next. That's it. It's moving upward. It could sometimes slow down, go flat, but it's a continuous moving upward trend, right? A momentum. It's got momentum. It's called the bull market. It's the trending market, okay? This is where we enter a buy. This is where we are going along. What does that mean? Super easy, guys. You're literally getting in at a lower price point. You're exiting at a higher price point, and you're taking the you're taking the profit in between. Boom. Super easy, very, very simple to understand. Enter low, exit high, take the profit in between. You're going long, you are buying, okay? That's what those terminologies mean. Now, what about selling? You're going short. What does that mean? It means you are entering at a higher price point, exiting at a lower price point, and you're taking that money in between. You are shorting the market. You are selling, okay? And if you're sitting here thinking, oh, I'll never do that, then you're not really trading, because all traders do this. And this is sometimes some of the best trades you could do. So you are entering at a high, exiting at a low, boom. This is what's called shorting the market, okay? It's the bear market, okay? That's what it's about. Now, let's talk about those consolidation areas, those transition areas, because this is literally where all of our money can either get lost for the day or sometimes even our entire account. And this is really, really important to understand. Okay. So what is a consolidation market? It's a channel. There's absolutely no movement, right? It's bouncing in between two areas, right? It's a consolidation area. So why is this the place where the majority of traders end up losing their money? Oops, what just happened there? Why? Because we tell ourselves stories. If you guys don't know what that means, I'm going to give you a little idea what a story is. Imagine you are like, for instance, here, I am in a new city right now. I am obviously going around, making new friends, communicating, meeting new people. And let's pretend I met somebody that I really got along and we want to hang out again. And they tell me, hey, you know, I'm having a little get together in a couple of days. I would love for you to come. I'll write you tomorrow to tell you all the information. So because it's such a new relationship, a new friendship, you know, I'm like all excited. But the next day comes along, they never write me. So what happens? A lot of times, and this is unfortunate, but all humans do this, we go into a negative story, right? We start to tell ourselves, oh, did I say something wrong? Maybe I rubbed them the wrong way. Maybe they spoke to somebody else who knows, you know, tells them something about me. All these stories, right? Like we just put ourselves into this negative place, but it's a story. It's something that we're telling ourselves. 2 days later, this person writes to me and they're like, oh my goodness, I'm so sorry. My phone fell in the toilet. I ended up losing all my contacts. I had to go to this shop. So the whole thing was a story. It was completely created. It was fabricated in my head. None of it was true. This is what happens when we see consolidation areas. A lot of traders, and to be honest with you, there's only two types of traders. We have the contrarian trader, which when they see something like this, they say to themselves, you know what? The market's been going up all day. It's got to correct, I'm shorting the market. Or the trend is your friend kind of a trader, and they're looking at this kind of a market and they're saying to themselves, you know what, the market's been going up all day, I'm going to continue long. And you're starting to put in these trades when the reality is, when you get out of the story, that the market is flat. It's flat, it's ugly, it's a flat line. This is where you don't want to touch the market. You don't want to put anything into the market. You want to stay out in entirely. That's why we end up losing money, because we start to tell ourselves stories and we don't actually see what's in front of us. We're not really listening to what's actually happening. Okay, the market is telling us, stay out. I'm flat. I don't really know what I want to do. Just wait until I give you confirmation. And that confirmation is either a breakout, which we're going to focus on, or a transition. Okay. And they could be smaller consolidating areas. They could be larger. But the point is, when you see this, and if you have not entered, stay out until the market gives you that confirmation. And trust me on this, the market will give you the confirmation. It will show you when to enter. And I'm going to show you exactly how we could spot that, right? So these are all these types of areas that we need to stay out of entirely. Now, I kept on saying the word area. Area is so important. Area is literally like the road. You know how we have lanes? We know not to go all over the place, right? We are protected by those lanes when we're driving a car. Areas do exactly the same thing. And the coolest thing about it is they're free. We can do it on any market, any instrument. They're free. The only thing is we have to know how to do it. So let's talk about how to do it. And what are these areas? They are support and resistance areas. The market respects these areas and you do as well. What are they? So it's areas that we have to put on our chart when we are starting to notice that it's starting to bounce or hit a certain place over and over again. So what exactly is a resistance area? A resistance area is when the market is going up and it starts to hit an area over and over and over again. It's the ceiling of the market. So you have to draw it in. You cannot do a mental resistance area, because when you're in the live market and your money is on the line, you don't remember what you just did, what's going on. You have to have this drawn in, and every single platform has a drawing tool, even if it's as simple as a line. Okay, this is a resistance area and it's a ceiling. And the coolest thing about it is that the market revisits that area, so we already are protected knowing not to enter it when it's hitting that area. What we do want to start to look at, is it going to break through it or is it going to transition from it? And that's something that we really need to understand. But if you don't have this drawn in, you're going to miss those awesome breakouts, right? So what is the other area? The support area. What is a support area? It is the floor of the market. What does that mean? It is the floor of the market. It is going down and it starts to hit over and over and over again. You need to draw this in once you see it hit it 3 or 4 times, and you have to respect it because the market respects it just the same. Okay. This is a support area. It's super important to understand. And these areas can be pretty strong, but if you don't have them drawn in, how are you going to know when there is a breakout? And we use them also to find where those channels are, because you never want to be inside a channel unless it's a really huge channel, but chances are they're usually pretty thin and they're really ugly, grindy, choppy, completely no direction, and basically money eaters, right? This is literally where you are donating your money over and over again to the markets. But if you have this drawn in, you are able to stay out until you see that breakout actually happen. Do you guys really want to put your hard-earned money into a market that looks like this, back and forth, choppy and ugly like this? I don't know about you guys, but I certainly do not want to do anything like that at all. Okay, so look at this ugly market, and this is pretty wide, right? But look at this, it's just back and forth and ugly. But you have to mark it off, because once it breaks through, that's when the magic happens. Now, a lot of people say to me, but how do I know when it's first beginning? That's the beauty of reversal areas. And I personally love divergences. I have to bring in divergences because they are my holy grail. But reversal areas are literally a trader's map to the shift in direction and the trend. What are they? We all know what they are technically, right? They're a double top, triple top, double bottom, triple bottom, head and shoulders. And what's amazing is that they're so simple to spot, and they're totally free on any charting software. And whenever my students come to me and they're like, you know what, Marina, I've completely overlooked this, and now that I'm focusing on them, they have been the biggest aha moments and have saved me so much money, and have also allowed me to enter really good profitable trades. They're not difficult to spot, but you have to know what you're looking for before you could spot it, right? Otherwise, how are you going to be able to use your windshield wiper when it's raining if you don't know where you're looking for a windshield wiper, right? So same thing with reversal patterns. So double top, triple top, double bottom, triple bottom, and divergences. I personally live for divergences. I love them. It's my holy grail. I'm a super conservative trader, and the second I see divergences, I stay out. I personally use the MACDs. For here, I know that a lot of people use other types of indicators, and that's fine. You could use whichever. What is divergence? Look at this. Basically, it's literally just that. My price action is going up. My MACDs are going down. Really simple, guys. You don't have to overthink any of this. And you know what that tells me? That the market has lost its strength. Do I want to put money into a market that's losing strength? Absolutely not. No way. Look at this beautiful double bottom, right? Perfect double bottom. And look at this divergence. Boom. I already know to stay out. It is not 100% telling me that it's going to transition. What it is telling me is that it's forming an area, it's losing its steam, stay out until the market is telling me otherwise. That's what it's all about. Now, I personally, you see here, there's also like when the market is going down and my MACDs are totally flat, I also look at this kind of divergence where it's not only reversal patterns, because like I said, I want to really preserve my money. And I'm a conservative trader. So when I start to see that, I'm already out because I know that the market is losing steam and the chance of it changing direction is really, really high. Okay, so let's put all this together. Like I said before, go here, makingofadaytrader.com. If you can't figure out how to download it, no worries. thetraderchick@gmail.com. I'm glad to send you the cheat sheet. So just email me, thetraderchick@gmail.com. All right, guys, hang on a second. I have some questions, right? In hindsight, it's easier to tell consolidation areas. Right. I'm sorry, I'm not really sure how to pronounce your name, Masebuleli. But like I said before, as long as you have those areas in and you spotting the reversal areas and divergences, I know for a fact that I have been able to completely stay out. And I understand you're going to maybe get one trade and you're going to lose, but don't continue putting your money back in because that's when it becomes emotional. That's when it becomes, you know what it is? It becomes revenge trading, guys, and we don't want to revenge trade, right? Can you short at this point? No, Ashik, there are much, for me, there's a lot more to just short. All right, guys, let's talk about the breakout. All right, what is a breakout? So first and foremost, if you don't have your areas drawn in, you're going to miss that breakout, right? So you have to draw those areas in. Secondly, what is a breakout? In total layman's terms, super simple terminology, you are here, in this case, you live south, your best friend lives north, and your trend right here, as you can see, is going up. Your friend calls you up and says, hey, come over my house, I'm having a party. Get in your car. You have been to your friend's house 1,000 times. You are driving north because that's where they live. And all of a sudden, while you're on this highway that you know so well, there's a massive construction site, construction area, massive detour, the road is closed, boom. This is that consolidation area. The construction worker is telling you to detour to get off the road. What happens when you're in that consolidation area? I know what happens to me. I stress out. I don't know where I'm driving. What if they never, what if they never continue with the detour signs? I'm going to get lost. That's this indecision area. But all of a sudden the construction worker is like, all right, guys, boom, we're open again. I'm back on the highway in the same direction. That's a breakout. That's the key. In the same direction with maximum strength. Boom. I want to get in as early as possible. Once that breakthrough happens, boom, I'm breaking out, I'm getting in. This is what it looks like, right? You're going up, construction, I don't know what's going on. You're on side streets, it's all confusing, but boom, you're back on that highway heading north. That's the breakout trade. Okay, so you have to have these areas drawn in to be able to fully understand what is going on. Okay, guys, that is really, really important right here. Breakouts, you have this amazing resistance, and it's the exact same thing when you're heading down, right? You have to understand where those areas are. And like I mentioned before, there are we're looking for two really big trades. The breakout trade, because we have our areas and it's just a continuation, and the transition trade. I personally call this trade the initial instant reaction trade, right? Look at it like this. This is how I look at it. Imagine you want to go jogging, right? You decide you want to go jogging, you put on your jogging clothes, your sneakers, and you're out the door. If I was to bet on you having the most amount of energy and motivation, that's usually in the beginning of the jog, right? It's the same thing for the trends. The majority of the energy and the inspiration and the motivation is in the beginning of a trend. So here we have a pretty significant area, and it did not break through. It did not break out and continue in that area, but what it did was shift direction. It transitioned, and I want to get in as early as possible on that shift. So this is my other most favorite trade of all, right? So I have two that I pretty much use, and they are very similar in the way they are structured, right? So like I said before, everything is in my presentation here that I have made for you guys, because I know that I could only have, you know, a certain amount of time to be able to show you this, and I get into it a lot more. Quan, I use EMA lines. I only use 3. They are the 20, 52, and the 135, because I use one chart. These are my 3 that I use, and one obviously is a very short term, the other one is middle, and then the 135 is a much longer term one, right? Look, guys, here's the thing. We have absolutely everything that we need to take action, right? Everything we need to take action. We have these amazing presentations. We have all these summits. We have YouTubers. We have books. We have podcasts. We have all this going on. But then at the end of the day, how do you know that you are doing it right? How do you know that when you're watching all these different people talking to you and all these different ways and strategies, how do you know that you're doing it right? How do you know that you are doing it right? Look, this is all great, right? But the real question you're probably asking yourself is, how do I truly get started? How do you really get started? And this is not from beginners only. I get this question asked from seasoned traders just as much, because a lot of them are trading and are still losing money, right? So a lot of people just come to me and ask me, how do I turn this around? How do I become profitable and do this consistently? And honestly, the majority of the time when I talk to people, when I start to work with them, it's usually just lacking those basic understandings, right? Understanding where the support, resistance areas are, understanding how to spot those reversal areas, how to notice where the breakouts happen. They're basic stuff, and you do not need to be paying crazy money for some algorithms and softwares. No, they're right there in front of you guys, because even with those expensive algorithms and softwares and indicators, if you don't know how to use them properly, it doesn't matter, right? If you're going to buy a Ferrari and you still can't figure out how to get into first gear, what difference does it make what car you're driving? You're not going to be able to work with it, right? And that's the same thing that pretty much happens. And look, here's the thing, guys. Like I mentioned earlier, when my son first sat down and we were telling him, all right, put your feet on the clutch and the brake to get into first gear, now release the clutch slowly so that you can continue moving. He was like, what does that mean, clutch gear? If you don't know the basics, if you can't understand how to do it, it doesn't matter what you've got in front of you. You have to understand, where's that steering wheel? How do you move the gear shift around? And even better, I know that today is very rare to meet somebody who's never been in a car, but let's pretend, right? Imagine that somebody got into a car and they've never been in one, and you're like, all right, buckle up. It's going to save your life. All right. And they're like, buckle up. What does that mean? What am I looking for? It's going to save my life, but I don't know what it is, right? If you don't know what a seatbelt is, how can you use it to save your life? And a lot of times we don't understand that, right? And to be honest with you, this was my own personal sad truth for years. And I spent over $20,000 on trainings, on algorithms, on softwares, I mean, you name it. And I was still struggling and still losing a ton of money. I literally lost almost $4,000 in 5 minutes. And this was after 2 years of nonstop. And honestly, at that point, I felt so defeated. I quit. I walked away entirely. But here's the thing, guys. Here's the thing. All of us, I can guarantee in this room, we are all bit by the trading bug. Every one of us, right? And the thing is, it never stops itching, right? It never stops itching. And why is that? Because deep down inside, we know that we could do this. We totally know that we could do this, right? Like I see other people doing it. I know they could do it. So I know that I could do it. And what happened here is I could not stay away. I did walk away for like 3 or 4 months because I had to really get out of that emotional mindset. I was too emotional. I was trading. I was revenge trading. I was not doing good things, but I could not stay away. And when I came back, I decided to get back to the basics. And here's the thing, guys. At one point, I had 3 monitors going on and 10 indicators. I was in constant analysis paralysis. I ended up taking 2 monitors. They were pretty much new, high definition monitors. I put them out for my garbage men. I say that I donated it to them. I removed all of my indicators that went into bare naked price action. And eventually I started to put in 1 indicator at a time. Because here's the thing, a lot of times, you know, this guru says to use this indicator, this one says to use this indicator. And a lot of times those indicators, they just don't align and work with us, right? Like for instance, the Kettler bands, the Bollinger bands, and Fibonacci's, no matter how hard I tried, they never work for me. They put me into massive stress zones. They never work for me. And when I finally removed them and stopped using them, I cannot even tell you the magic that happened because I felt that I should be using them. The majority of people are constantly pushing them, but sometimes they just don't work for you, and that's okay, right? And that's also when I decided to get back to the basics. And what's interesting is one of my students a couple of years back goes to me, you know, he's Marina, he's like, your teaching philosophy is very similar to Coach John Wooden. I'm like, who is Coach John Wooden? I never heard of this guy. So of course, and when I went and I Googled him and found out who he was, and now if you guys don't know who he is, he's pretty incredible, was incredible. He's passed away now. He was a legendary basketball coach. I mean, this guy was unbelievable. His entire philosophy was, when in doubt, get back to the basics. And we're not talking like a couple of wins. We're talking 88 national championships, 10 NCAAs. I mean, this guy is a legend. To this day, I don't think anybody has matched his winnings, right? And he trained superstars. This guy was incredible. But his entire philosophy, when in doubt, get back to the basics. At the beginning of every single season, no matter how amazing they were and how many nationals and NCAAs they've won, he would go back to how to tie your shoe, how to roll up your sock, how to dribble the ball, because it doesn't matter what your ego is telling you that you know or you think you know. If your shoe is untied on that court, you're running and it falls off or whatever happens and you sprain your ankle, guess where you're sitting? You're sitting out on the bleachers for the rest of the season. That's the reality, right? So getting back to the basics is crucial. And a lot of times we don't really know the basics in trading. And that's what really is like that bottleneck for us. So here I am introducing my introductory course only for you guys. It's a special offer for participants only. My bootcamp for day trading. Absolutely. We're focused on stuff that is going to make you money, simplified, fast, understanding. You could do it on any apparatus. You could do it on iPad, iPhones, tablets, Androids, desktops, you name it, you could use it on all of that, okay? And all of this, one-time price, one time. This is not ongoing, it's one time, $97. Now, I want you guys to go into your navigator on your computer right now and put in bootcampfordaytrading.com. Go there right now, bootcampfordaytrading.com. $97. I want you to follow along to see exactly what you get for $97, because let's get real. What do you guys get for today? $97 that is going to bring you the same return on investment. You guys like to play golf? Great. When we first moved to Guatemala 14 years ago, golf was around $29 per person. When we left, it was at $119 per person. This is Guatemala, okay? So nothing is even for $97. You guys like to go out to eat? So do we. Again, back to Guatemala, because a lot of people think Guatemala is cheap, and overall it is. But when we first arrived, me and my husband used to go out for nice dinners with wine It was around $50 for both. Before we left, it was about $90 per person for wine and a really good meal. Let's face it, guys, $97 can't even buy you a good meal for a family anymore. So let's break down what it is that you guys are going to be getting in this boot camp. First of all, simplifying your day trading package, right? I know the amount of issues that people have with platforms. They could be really hard. They could be confusing. At this point, I've been doing this for over 11 years. Trust me on this, guys. I have seen it all. I've done all the platforms. There is 30-minute platform tutorial that we go right into it so that you guys do not have to worry about setting up your platform, and you can get right into the cool things, which is the trading. All right. Then we talk about the market anatomy and dissecting those trends, because if you can't figure that out, if you're swerving all over the place while you're driving, you're not going to be able to stay in that lane. We're going to be talking about the trends, the sideways markets, understanding those reversals, understanding divergences, because these things are going to save you the money and help you get into the right trades. Okay, we're going to be talking all about the telltale signs, the support and resistance areas. They are your defensive zones. They are respecting those areas. They are protection. Okay, and divergences. I love divergences. They are probably the simplest to spot and probably the most powerful thing you will ever use. Okay, and breakout mastery. We are going to be totally talking about mastering that breakout and avoiding those fake out breakouts, because those can really take your money. And once you understand how to stay out of the fake out breakouts and how to get into the breakouts, that is going to be gold. And you have complete unlimited access to this curriculum. All of this for $1,600 value. Okay, remember, all of this $97. Everything that I am showing you guys here right now. Here's what some of my students have to say. First of all, I have students from all over the world. Okay, Michelle, I am just finishing up the boot camp. Best money I had ever spent. Derek, you are the only mentor I know that truly checks the work and really, really helps the students. Adrian, I am enjoying your boot camp. I am learning every day. So let me share something really important with you guys. Remember when I asked you in the beginning, how do you know you are doing it right? How? Who's there to help you? Who are you accountable to? So mentorship is probably the most important thing that has truly helped me, and I want to be your mentor. With this $97 one-time fee, you do not have to pay again. You will get one-on-one unlimited feedback from me, one-on-one mentorship with me. Okay, one-on-one, because this could take you over to that next level of trading, and that's the greatest thing. And I have the best for last. I have a live trade chat room that it's me, nobody else. It's me showing you how to take your trades, implementing everything we learned on top of the mentorship. Okay, all of this is valued at $2,600. Like I said, for you guys, only $97. Now, I want you guys to go here right now, bootcamp4daytrading.com. Ashik, you get the bootcamp for life. Okay, it is a curriculum, and you work with me one-on-one for 30 days, but you have access to it for life. Okay, so let's talk about what do you guys get for that $97. Okay, what can bring you all that, everything that you want? You're going to get one-on-one mentorship with me, everything that's in the course, 30 days live chat room membership, 30 days in that live chat room where we are implementing, taking those trades together. All of this, guys, the reality is, I'm just going to break it down to you. All of this is less than the cost of one trade. And you guys know that. So this course will bring you 10x the return on your investment for everything that you're showing me. And you know what? My personal trades of the day are usually $200 to $400 that I put in. $97 is less than the average trade. And this is going to bring you hundreds of times more of these dinners. But here's the thing. All right, because of my mentorship, I could only open it to 25 people. That's it, because of that one-on-one that I am giving you. So go here right now, put it in bootcamp4daytrading.com, bootcamp4daytrading.com. Go here right now, $97. All right, guys, join me here bootcampfordaytrading.com. Ari, please write to me. Yes, we could talk about it. Please write me, thetraderchick@gmail.com. Guys, bootcampfordaytrading.com. Honestly, $97. This is a no-brainer. My goal is for you guys to stop losing and to start to really find those really good, powerful trades. Okay, that's really what I want for you guys. And I just want to say thank you so much for being here. And you know what? That $97 also is really going to help you guys just get past all that noise, and you have me to be accountable to, and that alone is priceless. So I'm excited to work with you guys, and thank you, Rob, again for having me. Thank you, everybody, for being here. It has been a true pleasure. Thank you.
Marina, thank you so much. We always enjoy having you on here. We love how you simplify everything. So powerful. Love your 4 steps to, excuse me. But thank you for taking the time out of your day to join us here on Traders Corner. Ladies and gentlemen, that was Marina, the Trader Chick Villatoro, and we've put her link in the chat box. You can also find her at www.thetraderchick.com. We hope to have you back, Marina. I hope you have a great, great weekend.
Thank you. Bye, everybody.
Ladies and gentlemen, that will bring us to our next presenter. And while we're off to a great start in keeping the ball rolling, we mentioned at the top of the show we had 7 expert traders of the highest caliber. And our next presenter studied music at the Berklee College of Music and Boston Conservatory. He began trading stocks in 2001 and has learned the art of futures trading. He's been trading for over 20 years and now considered an expert teacher and trader of the news. Here to present Trade FAANG earnings report with futures is Leigh Goldstein of 10minutetrades.com. Welcome back to Traders Corner, Leigh.
Hey Rob, how are you? Let me know if you can hear me.
Loud and clear, brother. Always good.
Very good. Thanks for the invitation, and I'm glad to be here. So I get started because I guess we're feels like time's going fast today. So I'm going to start right up. And thanks once again for inviting us.
Absolutely no problem, brother.
Okay. So a lot of you know our company, 10-Minute Trades, and today we're going to do something a little bit different. And I always love seeing how many people are here that I know. And I'm glad to see there's a lot of people I don't know. So that's a good thing because that means you're going to be exposed to a totally different and new method of trading. And that's what I wanted to talk to you about today. So the irony is that we are here to trade earnings with futures. So years ago, let me start by just shooting through a couple of my slides. So we're going to trade the FAANG stocks, and I'm laughing here because we prepared this setup so fast that we spelled FAANG wrong. So I'm going to have to. My boss is listening, and he created the slides. It's FAANG. So I just want to make it clear. We got Facebook, Apple, Amazon, Netflix, and Google are the FAANG stocks. And actually, folks, we're going to have to change what we call this method of trading. It's now the MANG stocks because it's not Facebook anymore. It's Meta. So they changed their name. They kind of ruined all the fun in the name that it's called. We're still going to call it the FAANG stocks, but those are the main tech stocks that I want to talk to you today about a methodology that we discovered, a way to trade futures on NinjaTrader and trade the major tech stock earnings. So my name is Leigh Goldstein. I'm the trading director at 10-Minute Trades. Just remember, please, you have to have a disclosure. It is possible to lose money trading futures. I'm not a financial advisor. And what I'm going to discuss with you today is for educational purposes. So if you do trade, trade carefully and trade smart. So a lot of people don't know what we do, and we trade on a schedule. We trade a methodology called appointment-based trading, and it's called ABT trading, and it's totally a time-based method of trading. So in other words, we're making an appointment with the market. Almost everything that we do is based around making an appointment and trading on that appointment. So in other words, I'm not getting up at 6 in the morning and watching, oil start to move at 8, and I'm not watching the gold open anymore at 8:20 or the bond open No, although if you think about it, the gold open, the bond open, they would fit our methodology. That's an event that takes place at a certain time. So that might be something you could trade using our method. But I'm getting up and I have an appointment and I'm using an appointment, a specific moment in time. And here's a quick example. I create a weekly schedule and then that whole week, I'm working off this weekly schedule. So just to give you an idea, this week is one of our scheduled trading weeks. If you notice, Tuesday, April 18th, 3:30 in our trade room, Netflix is a family money trade. And that's what I'm here to talk to you about today. Trading earnings with futures. So years ago, we were trading an end of the day NASDAQ trade, and it took place around 4 o'clock. And we noticed at the end of the day, certain times of the year, not all the time, that there was some very strong, powerful moves in the NAS. And we finally realized, hey, you know what? We're doing our trade setup. And then right after our setup, the big tech earnings are taking place. And it's causing these spectacular moves in the NASDAQ. And it just got me thinking, and I get really fanatical when I get an idea. And I figured, you know what, if the market's moving that much on some of these earnings, then I'll bet we could figure out a way to trade them every quarter. And that's exactly what we did. So we first started out and we had no tools at all to trade the earnings. We were basically just throwing the stocks, not even the stocks. I was throwing the NQ futures on the chart, and we were looking at the NQ futures. I was using, I think I was using Yahoo's finance website. I didn't have real-time stock information, and today I want to teach you some of the tools that we're using to actually trade those earnings. So let me just go through a couple of our slides so you understand totally what I'm talking about. So what actually triggers an appointment-based trade? You've got high impact in economic reports like a jobs report, a GDP report. You might have end of day movement, the market closes and you might have a very big movement in the end of the day when the market gets ready to close. Speakers cause movement, tweeting cause movement. And then finally, big company earnings reports. They cause movement in the markets and they vary. And what I want to talk about today is how to crush those big earnings reports using futures. So let me show you what I'm talking about and how we started to do it. So before I actually show you some trades, I just want to explain a little bit about how the concept works. So the first thing we're doing is obviously we're putting our charts on the screen. Now, when we put our charts on the screen, almost always, we're using a type of setup that creates a bracket, okay? And we bracket the current price. So if you look at this yellow candle right here, that symbolizes the current price at that moment. And then our X up on the top there is a bracket above the current price. And then an X below is a bracket below the current price. And basically what happens in a trade of the style that we're trading is the event we're trading, the news gets released, the earnings get released in this case, and it causes the NQ to shoot up or down, pushing us into the trade. So that's the simple explanation of how we do this. But there's a process to it. So the first catch is this: when you're trading major economic reports like the US jobs report or FOMC statements or FOMC minutes or the CPI report, did you ever notice that those reports, they're released at a very specific time? So we are able to use our software and to come up with a setup that allows us to trade those reports at a very specific time. Let me see if I can show you something that happened this week. So in other words, this week, we had a very volatile event. And that event was this week's CPI report, okay? So I want to show you exactly what I'm talking about when I say A, we're going to make an appointment with the market. B, we're going to create a bracket and put our brackets on the chart. And then when the news comes out, things working the way we want, we're going to get pulled into a trade. So last week, during that CPI report, we know it's volatile. We know the brokers are raising margin when they want to, in order to trade this report. And we still have a setup that lets us trade this report and profit on it. Those little X's are the orders that we put on the chart 1 second before that CPI came out, and boom, watch what happens. The news comes out. I was trading bonds on that report, and I made money on that report. Now, and I made over $500 on that report trading bonds. The same concept takes place with earnings, but earnings are a little bit trickier. And I do want to tell everybody out there, I will answer all your questions. I'll make sure that I stop and answer all the questions before we're done, because I see questions are rolling in already. So with earnings, it's a little bit trickier because the companies that release their earnings, they don't release earnings at a very specific time. They'll say before the market opens, or they might say after the market close. So we had to come up with some methods of being able to trade while we wait for those earnings to come out. So a couple of different things happened. When you do a lot of research and when you spend your time studying events, then that helps you to set up your trades. So we don't spend our time dealing with Ichimoku cloud or Elliott waves or any of the other big time indicators. We'll look at highs and lows of the day, but instead of spending all our time looking at those other indicators, we're spending our time studying the event. So in other words, when I'm looking at Tesla, for instance, and the way that they do their earnings, I'm going back in time, I'm studying previous Tesla movement, and I'm trying to come up with a setup based on A, what time does Tesla release their earnings? B, is it going to move the market I want to trade, i.e. the NQ, enough to do its setup? C, is it going to be safe? And are we going to be able to use our software to automate the entry in the trade? So that's a whole bunch of questions that we are asking ourselves. By studying the movement that Tesla makes, we can come up with a system to trade Tesla's earnings. But we're also using a collection of important tools. So one major tool that I use, that if you're interested in earnings, whether you trade them the way that we trade them, or you're just interested in earnings, I highly recommend go to the website earningswhispers.com, completely free. When you initially log in to when you initially just go to their website, they have this great little collection of all of the upcoming important earnings. So you could just click, for instance, on Tesla, and bingo, you'll know when Tesla's earnings are coming out, Wednesday, April 19th, and they give an approximate time. But the key for using Earnings Whispers to help us trade these types of events is you click on the calendar on Earnings Whispers, and then when you click on the calendar, for instance, next week, Monday is a little bit slow. Let's go to Tuesday because that's the day we're going to trade. So if you click on Tuesday, if you notice over here on the right, you get a BMO before market open, and it lists all of the companies that are releasing their earnings before the market opens. So for us, we'll study those results. Goldman Sachs, Johnson & Johnson, those are possible companies that they may affect the market when they release their earnings, but they probably won't affect the NQ. They will probably affect the YM, maybe the ES on a secondary. But I'm not really here yet to talk about Goldman Sachs and Johnson & Johnson. When you go to after market close, AMC, and you scroll down and look at who's releasing their earnings, well, one of my favorites is Netflix. We've been trading Netflix earnings now for years, going back years. Let me show you the last Netflix trade that I took, but I showed you briefly our weekly schedule. Netflix is considered a family money trade. So for us, what's a family money trade? Again, years ago, I was trading in our trade room, and I would always laughingly say to our members, hey, you know what? This is a trade. If I was trading my family's money, this is one where I would trade their money on this trade because I think this is a great one. And that's how we came up with the moniker family money trade. So our trades, some of them are broken down into the best of the best, the special of the special. And this week, Netflix absolutely qualifies as one of those events. Their earnings trades are very reliable and have been very nicely profitable over the years. So let me show you the last trade we took on Netflix. It was January last quarter. And I'm not going to give away the exact setup, but I'm going to show you the way that everything came into place. So in order to do this trade, and this is just our final video that wrapped up the trade. In order to do this trade, the tools that we used were the NinjaTrader platform. We have a multi-broker NinjaTrader account, so I can really give you another piece of good advice, another service that you can use that's almost free. A great company that has a very nice platform is Thinkorswim. Now, we don't use Thinkorswim for trading, but we use Thinkorswim to help us watch the stock prices. If you notice, I've got my Thinkorswim charts up and I'm watching them inside my Netflix, inside my NinjaTrader platform. I'm also using NinjaTrader because they have a multi-broker setup that you can subscribe to. You can become a multi-broker platform with NinjaTrader. You can also bring the stocks in that way. But trust me when I say Thinkorswim, their platform has a lot of earnings information. You could look up the times that earnings were released. And for $50, you can open a Thinkorswim account and just keep $50 in that account. You can look at futures current prices. You could look at options. Everyone knows they're real big on trading options. And even more so, they also have a lot of regular stocks, after hours, live pricing, $50, live real data on so many markets. It's a fantastic tool no matter what you do. But for us, trading earnings and being able to bring in a backup stock so we can watch those stock movements right before the earnings are released is a very good tool to help us watch the way the stocks are releasing. And let me show you what I mean and why it's important. So on the left side of my chart here, we're looking at the NQ. And you can see we have a little clock on the chart also. We know that Netflix, they're going to release their earnings somewhere near 4 p.m. right as the market closes. And we have a setup where we put our brackets above and below the current NQ price. And you're going to see my brackets going to show up on the chart right there. I have nice fat brackets above and below the NQ. Netflix, now you're watching the stock price on the right. I'm watching the NQ on the left. And Netflix earnings just came out last quarter. I have orders on the chart that our software automatically put on the chart when I got filled, and it shoots through all my targets. That was a $615 Netflix trade, live real money. You're watching it. And that trade was over in less than 26 seconds. Because watch what happened. Look, my orders were placed on the chart right there. 11 seconds, 10 seconds, 5 seconds. You know, there was no movement yet. It was 11 seconds after 4 p.m. The trade was over at 16:00:26:27. So it was like 15 seconds in the market for that trade. That's what we do. That's what we mean trading by appointment. I made an appointment to trade Netflix earnings, and that day I made $615 trading Netflix when that trade was over. It was an awesome trade. And the tools that I used, just to recap, earningswhispers.com, NinjaTrader's platform, multi-broker account, not required if you have a TOS account, Thinkorswim. If you don't have a Thinkorswim account, it's good to get a multi-broker Ninja account so you can watch the live stock price. Those were the tools that I used, and of course our software that automatically puts those little X's on the charts. Those are my orders. And then when the news came out, the earnings were released, it caused the NQ to explode in one direction, and that filled us in the trade and hit all our targets. That was an awesome Netflix trade. Now I want to go through my charts a little bit, my slides a little bit, because we have Tesla. Now Tesla is not a FAANG stock, but Tesla is a big time earnings trade, and it's one of the big tech stocks. And what happened years ago, not even years ago, about a year and a half ago, Tesla used to release their earnings in a more random way. They would release them at 4:30, 4:45, and then about a year and a half ago, Tesla started releasing their earnings a little bit more similarly to the same time every earnings period. So we've been able to come up with a setup for trading Tesla. Let me show you a recent Tesla trade that I took. Trading Tesla earnings, also trading the NQ, because again, we've discovered that Tesla's stock price moves the NQ. Watch. So here are my X's, the little orders appear on the chart right before Tesla's earnings come out. You can see on the Thinkorswim chart that there was already a big pre-movement in Tesla's stock price, giving us a heads up, because we've been doing this for so long. This gives us a heads up that we are pretty certain those stock earnings are going to come out instantly in a moment. And sure enough, that day the NQ actually moved a tiny bit before Tesla, but that trade was over in a matter of about 5 seconds, and that was a $645 Tesla earnings trade. So Tesla, it doesn't qualify as one of the FAANG stocks, but it's definitely one of those big earnings trades, earnings companies that, first off, everybody wants everything to do with Tesla because everybody's interested in Tesla. It's certainly a fascinating company, and trading their earnings is now a possibility using the NQ. Netflix, I've showed you. Microsoft, another company. And ironically, this is not a FAANG stock because Microsoft is an M, Netflix is the FAANG, but Microsoft usually has their earnings the same week as all the FAANG stocks, sometimes the same day as some of the big tech stocks also. And obviously Microsoft is a big tech stock. Now, sometimes, you'll make a smaller amount of money. This was not a huge mover, that particular trade. This was in April. This was last year, and you could see we're watching Google and Microsoft because they were both scheduled for similar times. And what happened is Microsoft released their earnings first, and you could see as we get further along in our video, I'm going to move my chart, and you'll see that we're certain. See, Google did not move at the time that we made money. I was actually expecting Google to come out first. That day, Microsoft, which is hidden behind Google, came out first, and we made our $470 on Microsoft that day. So that was trading Microsoft's earning. And then, of course, I have to show you a Facebook trade. Let me show you a Facebook, because Facebook, it's now Meta, okay? So it's Mang instead of FAANG, but let me show you a Facebook setup. So Facebook, another one of those companies, big time earnings play. They also release their earnings very similarly to the same time of day. So we're able to have our software put these little X's on the chart automatically. The news comes out, boom, Facebook explodes to the short side. That was a $1,300 trade, and it was instant. It was literally a second. Watch how it happens. I'm not in the market yet. My orders are just on the chart. They're just on the chart. Then the news comes out, boom, I get pulled in short, and I'm making money on Facebook's earnings. So that was Facebook's. But you're getting the idea here. The idea is you want to see an explosion in price. You want to put your orders on the chart before the price explodes, okay? And you want to trade that movement. It's just like every news trade that we take, we have figured out a way to shrink it down and turn it in the earnings trades into appointment-based trades. So the concept is we make the appointment, we figure out by studying the reports, the earnings releases, what times they're going to release those earnings. And of course, if the markets are open and tradable, then we're going to try and come up with a system to trade these earnings. And what's nice about it is the members in our trade room are learning to trade these earnings with us. And it's fantastic because if you learn this skill, this is a skill that you could have, you know, for the rest of your trading life. And I want to talk to you about the way that we want to present this to you. And we call it a challenge. So I'll get into that in a second. There was a couple of questions I wanted to ask. Can the entries be automated, dates, tickers with, Juan is asking if the entries can be automated, dates, tickers, etc. What we're automating, Juan, is we're automating, if possible, we're automating the entry. And I say if possible because sometimes with earnings, you have to manipulate your orders because they don't always release their earnings at exactly the same time every time they do their earnings. So sometimes we actually have to physically move our orders around. And we've actually added a feature to our software. We have a button called the adjust button that lets us adjust our brackets automatically to help us trade these earnings trades. So because of the nature of the way that earnings are released, it all cannot be automated. I would think of it as semi-automated. Your targets are automatically put on the chart after you get filled. Your stop is automatically put on the chart after you get filled. Sometimes your orders are instant and put on the chart automatically. Other times we will actually manipulate our orders. And let me show you what I mean so it's clear. We also trade smaller stocks. In other words, there are events that might not be quite as explosive, for instance, as an Apple or as a Tesla. For instance, this was an AMD trade. And AMD, you notice it had a much smaller move. It didn't really explode the same way. We had to actually manage our way out of that trade for a small profit because we didn't get an explosion. So sometimes you have to learn to manage the trade. And of course, that's something else that we teach in our trade room. We teach how to manage these trades, how to manipulate your orders, how to move the orders. And I also want to show you a setup that we were testing, for instance, on Boeing, okay? Boeing is a stock, they're not going to move the NQ because Boeing is not a NASDAQ, you know, it's not a big weighted stock in the NASDAQ. Boeing will move the YM in our experience. So it's an early morning trade also. It's not an aftermarket trade. But you'll notice that we used our software to do something completely different than the way we trade, for instance, the Tesla earnings that I was showing you, or for instance, Netflix. Our software has the ability to create a simple range, okay? And that range is created so that if the range breaks by the number of ticks above the range or the number of ticks below the range, you will get filled in the direction of the movement of the market. So this particular morning, Boeing comes out with their earnings. It was, you know, reasonably dramatic, not incredible. You can see the stock had a decent move. and it pulled the price down of the YM. It didn't pull it down nearly as much as we would have liked, but it hit our first target. We had time to move our stop into a protective area, so it protected the profit. And actually, our software can do that automated. It can move the stop in an automated fashion also. But we were able to trade Boeing for a profit. Now, that day we were just testing because it was a new stock that we never traded before. But even if we're just testing, very often we open those trade rooms up to all our members, and we all learn together by testing different stocks that maybe we never traded before. When we first started doing earnings, all we did was trade 5, 6 stocks, and that was it. Now, David is saying I trade NQ, and a lot of times you don't get filled. So I would say that that's not correct, David. I would say 80 to 90% of the time we do get filled. We had a recent Apple trade where we didn't get filled, but more often than not on earnings, we get filled. So that actually is not correct. There are times when you'll trade a news trade or you'll trade a market that's just moving so fast, you might not get filled. It happens, and that it's not that it's that anything wrong or anything bad happens if you don't get filled. Sometimes a market moves very fast and you might not get filled. So David, there's truth, of course, to what you're saying, but I would just modify that it's not a lot of the time. Most of the time you do get filled. It's really rare not to get filled. That's the honest truth. And the same holds true for a CPI report or a PPI report, an FOMC statement, any of those high volatility events. They always have the possibility that they could move so fast that you might not get filled. And that brings up another educational piece of information that I'd like to tell you about that's very simple. If you like trading events, don't try to trade them with limit orders, because limit orders, a lot of times a trader will use a limit order so that they think it's going to give them the opportunity to get filled at an exact price, so it's safer. But it's not a question of whether it's safer or not. Sometimes when you use limit orders, those orders will get jumped. They'll get ignored because the market moves too fast. It just jumps the orders, or there's no liquidity there and the market doesn't have a chance to move to the next order that is there. So we don't recommend using limits on events or on earnings type trades, because then you will have a lot of trades that won't get filled. So another question that we have: what happens if earnings or guidance is bad? Does the software go short or long? So Ashik, I hope I pronounced your name properly. Absolutely. So, if you looked at that particular, I'll just show you a couple of quick trades. So we're on Apple, right? My slides are on Apple. And David, I might even have the Apple trade where we didn't get filled. I don't know. I don't know if I have that handy. But this was an Apple trade to answer Ashik. Now you notice the stock on this particular event, it moved up. So you would think that the earnings initially were good. But here's the key to why your question, Ashik, doesn't matter. We don't care if the earnings are good or bad. We don't care if the jobs report is good or bad. What we're looking for is a move in one direction from the news. And what we have discovered in all the years that we've been trading and that we've been around as a company, we're actually celebrating our 10-year anniversary this year. I've been with the company more than 6 years. And over these 10 years, it's not whether the news is good or bad, it's whether the news is impactful enough to move the market. So you're going to get trades to the long side. We're going to get trades to the short side. We're going to get whipsaw trades that don't work and cost us a stop out losing trade. So it's not that every single trade will move perfectly in the direction we want it to go, but keep in mind, we are bracketing the market. So we don't care if it goes short or long. We just want it to move short or long in a good enough move to fill us and to go through our targets. And that's the key for the way that we're trading. That particular Apple trade, it was a long trade. The earnings might have turned out to be bad that quarter. They might have had, good initial revenue and bad guidance. So it could change everything in a matter of minutes. And they have a press conference after the earnings, most companies. You could even find ways to trade those press conferences. But we're doing it by trading the release of the data, because that, very honestly, is the DNA of our company. That's the way that we've been trading forever. We trade news releases, and we've just narrowed it down now into trading earnings. And what's awesome about the earnings, it starts next week. Netflix starts next week. Next Tuesday, we have our first earnings trade room for Netflix. And let me go through some more of my slides for everybody. So I think, let me just make sure I've answered everybody's questions. Give me 2 more seconds here. All right, just a couple of people that have asked about the brackets. And so here's the good news, everybody. Earnings season, like I said, it's here. It used to be that earnings season officially started with Alcoa. AA is their stock symbol. But we've really started to see that earnings season, you might say it started last Friday with some of the big banks. I think what we have, Goldman, I think was Friday, and Citi was Friday. Those Wells Fargo was Friday. Those companies move the markets. They move the YM less explosively than what you're seeing here, and we'll get into that a little bit as this presentation continues. So what's fantastic is earnings season is next week, and we want to teach you. The reason that I'm so excited to be here today at earnings, that for Traders Corner, is that because earnings is next week, it gives us a fantastic opportunity to teach you how to do this. And so we created an earnings challenge. So we've been doing these fantastic challenges at 10 minutes trades. And basically it's a way for us to give you a transformational trading experience. So look, that sounds all fancy and goofy and silly, and I know that. But really what we're trying to do is just give you a system, a new methodology, something that'll transform your existing trading, teach you something so meaningful that you'll have a whole new method of trading going forward in your trading library, your arsenal of trades. So here's what's going on. Tuesday, April 18th, our challenge starts. And we're going to have those 5 main workshops: Facebook, Amazon, Apple, Netflix, and Google. Every one of those workshops we're going to make available in our trade room. So Donovan is saying, I live in the UK and don't have access to TOS. So Donovan, you don't need TOS. Let me make sure that I'm being clear. TOS, Thinkorswim, is just one of the tools that we use to watch the stock prices. Not necessary at all, just an extra bonus for people in the US or people that have access to it. We're doing everything that you're seeing here using the NinjaTrader platform, the NQ futures. That's what you need to do what we're doing, okay? That's the methodology we're using. And we're gonna have 5 days that are coming up. We've got Netflix starting on April 18th. Then we've got Google is on the 25th. Facebook, Meta is the 26th. Amazon is the 27th. Apple is May 4th. Those 5 workshops are what make up our challenge, okay? Now, it's also a challenge. A challenge is an educational experience. A challenge is a fun experience. It's also a challenge. In other words, we're challenging you to take steps so that you learn how to earn the money trading this whole new system that maybe you never traded again, never traded before. And we actually have real cash prizes. We have a $250 first prize, and also you can have a mentoring package with our owner, one of our trading partners, Eric, who works at and owns the company 10-Minute Trades. The second prize is $150 and a coaching call, and the third prize is $100. So it's also fun, and you can win the challenge. You can, if you're the best challenger and do the best at the end of the challenge, there's a couple of rules how you can win the challenge. It's a lot of fun besides being educational and teaching you all about trading these earnings. So here's everything that I'm offering today. 5 earnings challenge sessions, okay? Facebook, Apple, Amazon, Netflix, Google. We're valuing these earnings sessions at $99 a piece. And it's probably inexpensive, really. Because look, you saw the trades. You could have a really sweet $500 winning trade. So we're really undervaluing these sessions. And because we're doing this special with Traders Corner today, we're offering this deal, the whole challenge. You can enter the challenge for just $47. www.crushearnings.com. You'll have access to all of these sessions, okay? You'll have access to our Facebook group, and it's the early bird pricing is going to end today. That $47 and all those trading sessions, ends today is the key, www.crushearnings.com. It's going to go up to $97 after midnight tonight, okay? So honestly, we're really raising the price. This is just for $47, just to learn the method of trading earnings. I mean, it's a no-brainer. It's worth it a million times over. It's a fantastic, fun way to learn how to trade. I'm not done showing you trades. I want to show you some more trades. I never really showed you one of my favorite Apple trades, so let me show you a great Apple trade. I didn't really discuss that last Apple trade that I showed you. So this was a recent Apple trade. Orders on the chart, okay? You've seen me put orders on the chart before. That was a $970 Apple trade, and that was a few seconds on the trade. We had another day that Apple and Amazon were both trading the same day. They trade pretty far apart, which is a bonus, because you've got to be careful. And one of the things that we teach in the class is, what if you have a setup and it's all taking place at the same time? You have Apple and Amazon at the same time. Let me show you this trade real quick because I'm running out of time. I want to make sure I get to everything. Boom. Apple's going to explode. That was Facebook exploding. It was over $600 trade. My Apple trade that day was $1,700. Price is going up to $97 tonight. www.crushearnings.com. 5 sessions, don't forget, folks. And I have one last thing for everybody. If you sign up, we have a super fantastic VIP bonus offer. I'm just going to tell you this. Everybody wants to learn how to use our software. You saw how our software makes it much easier to trade these earnings. Take me up on this offer for $47. Learn how to trade earnings with us, and you're going to have a super offer to use our software for free for 30 days. Free for 30 days. You could trade the earnings with us. That's what I just want to let you know for sure. www.crushearnings.com. Any last questions? Are the workshops going to be recorded for people who have to work? Absolutely, Jeff. We will record everything. The recordings will be available to you. What data do we use? So Lawrence, Lawrence, you and I know each other. So I want to say hello. You've been a member before at 10-Minute Trades. We're using CQG data right now with NinjaTrader. You could use Rhythmic. Any of the normal data providers are fine for trading the way that we're trading. So folks, I'm pretty much out of time. I only have a minute. So let me just show you one last quick trade just to show you how much fun this can be. I rushed through those last trades. This was a Facebook trade that we took. And this one goes back a little further. We've been doing this for years. I mean, we go back to 2019 trade. We were doing this method of trading earnings. And then boom, there goes Facebook. And that was a smaller trade in those days. I think I made about $300 that day. Let's see what it winds up. I trailed my stop, 220 bucks making on Facebook earnings back in April of 2021. So here's the link, everybody, www.crushearnings.com. We would love to see you join with us. You'll be in our trade room trading with us for just 47 bucks if you sign up today. Midnight tonight, it goes up to $97. It's a fantastic way to trade earnings. It's a challenge. You'll learn. Also, you'll have a fantastic transformed experience and learn a new method of training, and you might have a chance to win some money in the challenge. So I hope you enjoyed my presentation. Rob, I hope I didn't lose track of the time. I think that's my 45 minutes, right?
Leigh,
I
you
want to
are
thank you for having
absolutely
me.
perfect.
Okay.
Every time I hear your presentation, I love it even more. In those brackets, and just the fact that you're finding more and more and more ways to make a quick buck on an appointment is just awesome. It's fascinating how you trade futures by using earnings reports on stocks as a catalyst to drive price in your direction, up or down, and leverage your software to automatically enter the trade on the right side of the market via your proprietary bracket strategy. It's just incredible. Thank you for joining us today,
Rob.
Leigh.
Thanks, Rob. You said it better than I ever could, and I'll see you next time on Trader's Corner. Thanks very much.
Hey, thanks for making our audience such a generous offer and, the event, the everything. Ladies and gentlemen, Mr. Leigh Goldstein of 10-Minute Trades. You can learn more by clicking on the link in the chat box or going to 10minutetrades.com. Leigh, I hope you have a great weekend. I can't wait to see you again.
Thanks, Rob.
Well, ladies and gents, I mentioned at the top of the show, we had a great lineup on our panel today, and our next presenter is no exception. He's been trading futures for more than 10 years, and he now educates traders on becoming consistent using the BSG suite of products. His software algorithms track institutional traders as they change their bids and offers and deliver real-time buy and sell signals based on time-tested strategies. Buy-Side Global's been a proud vendor of NinjaTrader since 2015. Here to present trend-based supply and demand strategy is Mr. David Gear of Buy-Side Global. Welcome back to Trader's Corner, Dave.
Hey, thank you, Rob. Can you hear me okay?
Loud and clear, and your screen's on.
Oh, good. We had a horrible incident, I don't know, last year or so when my
few presentations ago, but we've swept it under the rug, and you get to move forward.
I'm always a little gun shy. Gosh, I appreciate your time, and we'll jump into things really fast, but I just want to appreciate your time and all the presenters before. I love listening to Leigh. One of the reasons I love doing this is because it helps us to obviously get our stuff out there to folks who could use it, but also, man, I learned so much from the other presenters, and appreciate you guys putting this on. So, well, let me get started then. We'll just jump right into it. We'll get about 45 minutes, and so I'm going to try and make it worth everybody's time. And I know there's a good bunch of folks here. We also have, so I'm going to have got somebody here helping me answer questions. So if you have questions in there, I love as much interaction as possible. Of course, we can't all talk at once, but let's all, if you have a question come up, please type it in there in that question section, and somebody will get it answered. And let's get started. So we're talking about turn-based, the supply and demand trading strategy, and I'm going to make this as quick and as precise as possible, but also want to give you value. If nothing else, I want you to leave this with this presentation with some idea of how to do a trade, a strategy that you could use to make money. Again, my name is Dave. I'm the lead trader here at Buy-Side Global, and we're going to make this informative and interesting, and also have a great offer at the end. They just changed a few things around, and it's impressive, so I'll make it worth your time. Also, I am looking through the questions. I don't see anybody ask if you guys want to chime in. I would love to hear what you guys trade. Is it mostly stocks? Is it mostly futures? If you get a second and you feel so inclined, I'd love to have you type that in. I can watch it as it pops up there. But if you want to put on not in the chat, but in the questions area, just type, what it is that you trade mostly. Is it stocks? Is it options? Is it both? Is it, futures? Just love to hear back from you guys a little bit. Yep, I'm getting some good information in here on futures and stocks. So great. And so let me get to it. Obviously, we got to do the disclaimer first. Apologize for that. You guys get those every time, every day. We run a trading room in the morning, and for our Buy Side Global customers, and I have to, not have to, we choose to, but I think it's important to do that. We run this disclaimer every time, and it gets old, but it's just important. You guys understand trading is risky, and that's what you really need to know. But I think we have a legal and a moral obligation to let you know that we wouldn't want you to trade money that's going to affect your daily living or your event, your retirement horizon. And just to understand, we follow CFTC rule 4.41. So, oh, good. I'm getting some more feedback from you guys. Thank you on what you trade. Nasdaq, yep. Futures, yeah. Good for you Nasdaq guys, man. Those you guys in the bond boys. So I always impressed with folks that can trade that, and that's what we typically trade. But the nice thing about Buy Side Global is it works on anything that can be charted out there. I mean, if you whatever you can chart, Buy Side Global indicators help that. So here's some quick information. That's our website, buysideglobal.com. Again, I'm Dave. There's an email. You can get a hold of us at info@buysideglobal.com, and that's that phone number. You can call. Email is probably the fastest. Sorry, not fastest. Probably the easiest way to get a hold of us. One thing you could do, if you're like me, you're transitioning from the old school writing things down. I'm starting to take pictures of things off my phone. It's so much easier than writing things down. So feel free to write that down. Let me introduce who we are. Buy Side Global. We do advanced order flow software. We partner up with NinjaTrader. We'll talk about that in a minute. To Buy Side Global, we do AI-based alert indicators, trading strategies, active day traders, so you can make obviously better entry and exit decisions. Started in 2014, former Wall Street trader, and then we partnered up with NinjaTrader, like I said, for extensive research and development, revisions. A lot of hours have gone into developing these Buy Side Global software. And one quick question, one of the first questions we oftentimes get is that, hey, could you work with, other trading platforms, Thinkorswim or any of those other, TradeAvate, any of those other platforms out there? We don't. We've partnered with NinjaTrader. We really like NinjaTrader. They've treated us really well, and we work well with their folks. But here's what I say to people: say you have a TD Ameritrade account and you don't want to buy Side Global or don't want to buy NinjaTrader. NinjaTrader offers a free version, so you can get their free version, use our system on that, take trading decisions, and then just take the trade based on whatever platform you have. So I just want to get that out of the way. So let's go through our agenda real quick. We're going to talk about why mastering just one trading strategy is such a powerful tool. And why trend. We'll talk about a trending strategy. We're going to talk about trading, trading strategy, the trending, and then we're going to try and talk about in those trends, how do you find the entries and exits, and then we'll do some chart examples of the strategy. So that's it. And then I also just want to throw some value in here. We've got an ebook available. They just made available quickly. Just before we printed this, they put this together. And so again, this is something you want to take a picture of, how to get it. You could write that down if you want, do it the old-fashioned way. But just go to Buyside. That's our regular site is buysideglobal.com, but go to buysideglobal.com/ebook, and you can just pick up this on chart patterns. And it just should help your. It's a free ebook to help you find chart patterns and how to trade them. You guys that are here are savvy enough to know that there's so many different ways to take a trade. Leigh has his way that they're making good money taking trades. People do the gap and go. You have people trade news. You can, people trade close, opening. So we created this because sometimes we don't have enough time to cover everything. I just want to give you guys this information, but we just want to help with your trading anyway. And so if there are people that do great with just recognizing chart patterns, they're pretty simple, and the reason they've been around for so long is they're successful. So this ebook talks about chart patterns, price actions, the good thing, how to make good money doing that. And you don't need Buy Side Global products. It's not making a pitch to sell anything. It just covers high-level trading strategies. Download and you start practicing. So take a shot of that and we just want to add value to the webinar. Make sure it's worth your time for you being here. So I want to talk about just how to master just one trading strategy, okay? So here's the mistakes a lot of new traders get, and you might have tried this. You try too many strategies and you give up too fast. I'm gonna learn how to do a gap strategy in the opening. I'm gonna trade on news events. You get inundated by different strategies, and a lot of people just they try too many. They lose money on these different strategies. They don't ever get it perfected, and then you give up and they're done trading. You guys know that so many traders have started and just quit because they lost too much money. They're done. So, or they're not learning why. They don't learn the why and back what's behind it. Why does this strategy work? If you have no idea, then you don't know how to use it. And also, a lot of times people think in indicators are strategies. Oh, the indicator popped up, I got this, and that's my trading strategy. The indicator is a tool to help you get started, but it's not the trading strategy. The indicator is not the trading strategy. Or you follow someone else's trade, okay? And there's gurus out there that people pay good money to, and sometimes they work, sometimes they don't. But if you don't, what if that guy gets taken out, gets hit by a bus, and now what are you going to do? You're not a trader, you're just a follower. Or you're not enough paper trading on one trading strategy. So we want to talk about how to make that work for you guys. So, and girls, we want you to be able to master just one trading strategy, the first. So this is key advice if you're just starting out, which I think most folks here have probably been trading for a while. That's where you're savvy enough to be here. But if you haven't been as successful as you want to be, or you want to increase your success, this is what I'd say. And I say this to beginning brand new traders: start master one strategy, develop it, get good at it, and then you can start adding those more tools in your toolbox. But if you have one trading strategy, and don't try and pump out $1 million your first week. If you're just going to try for small, modest gains, that's the way to do that. Okay. So most of the successful traders, they just use one strategy. These guys who do these conferences, they usually just have one strategy, works over and over and over again, and they're making great money doing it. So you do it every day, your winning rate will slowly increase over the time. I mean, this is Bruce Lee said this. He talked about how, this is a quote from him: "I fear not the man who has practiced 10,000 kicks once, but I fear the man who's had practiced one kick 10,000 times." You could use it with a pistol analogy or a gun analogy. You don't worry about the guy who's fired 1,000 guns one time. You fear the guy who has one gun and has fired it 1,000 times. That's the guy that's good at that. So let's get to the plan. Master just one trading strategy. So we recommend you just learn one trading strategy. You learn how to find the entries. That's the key, and exits using that strategy. We want you to paper trade until your winning rates keep track of 60 to 70%. And we would suggest you paper trade first, and then you start in on the micros, micro futures, if you want to. Do that until you're profitable. And there's nothing wrong with stay with micros, but then you can switch over to the minis if you have those. If you don't know what those are, the micros it's a futures contract that they just recently, last couple of years, came out with. And you're risking, instead of risking $500 on a trade, you're typically risking 25 to 50. Okay. And then you will look at your profitability by, you want to look over the period of a week. I might have a green week. You don't worry if you had a bad day. Worry about if you had a bad week or a bad month. So keeping track of that. So again, this is just kind of big, broad, general stuff. We'll get into more about how to understand the trend now. So what I want you to understand is that not all higher and lower price movements are the trend. You guys have heard trend's your friend, obviously, right? But ask yourself, which trend? Is it the trend this last few seconds? Is that the trend? Or is that different from the last few minutes? Is that the trend? Or if you look at over the last 15 minutes, so I'm saying that there's a difference in trends and just price movement, price action. So trends should have momentum and breakouts, okay? Uptrends should be supported by continuous demand zone formation. We'll talk about that. I'll show you what those are. And downtrends should be supported by continuous supply zones formation. So that's how we're going to detect if there's a trend. So here's how you can detect it. There's many ways to find the trend. Moving averages, convergence, divergence. You got your MACD, your RSI. There's a lot of indicators out there that people use to take these decisions. But here's the problem with all of those. These are delayed indicators, and they are what's happened in the past is calculated in what's happening right now. that doesn't help you find out exactly what the trend is, because you're using outdated old information and what's happened previously. Well, if you're a big institutional guy, is what just happened 10 minutes ago impact your decision? If you get an order comes down, hey, I need you to buy 10,000 contracts long S&P, he's not going to be looking at, or the gal's not going to be looking at, oh, well, let me just see what the crossover did just a minute ago. They just plug it in, okay? So by the time you identify the trend's usually always over. So here's a better way to do this. We want to detect, obviously, the trend as early as possible. How about if you knew before, if you knew where those orders were at, would that help you determine the trend? I'll show you that in a minute. You want to determine the supply and demand levels that you don't want to trade against. If you know there's a bunch of buyers coming up in just a second, the price is going to hit these buyers, you're going to know not to go short against those guys. So you confirm the trend. Your next immediate step is to find the entry. So stepping back a bit, we're talking about finding one successful key to strategy. We're using finding the trend as that strategy. And now we're talking about when the entry is to catch all that trend. It's critical to avoid getting stopped out. So let's talk about what if for just a minute. What if you had a way to detect the trend with less false signals? What if you had a way to find the ideal entry trade within the trend, okay? And what if you had a way to calculate the stop loss that you need to a less probable chance of getting stopped out? We don't want to get in. If you find the trend, but you're a little late to it, good chance you're going to get stopped out. And what if you had a way to let the trade run and had those great days where you're pulling down lots more points than you anticipated, and you find the early signs of trend pause or reversal? What if you got out at the right time? Let's talk about this. We're going to introduce trend-based supply-demand trading strategy. Now, you've probably heard this before, ABCD strategy. I'll show you what that is. We'll talk about that. But this is just another way to play, to have a trading strategy, okay? So the ABCD trading strategy, if you've seen this before, I hope you'll pick up a few things from this. If you haven't ever heard it before, then this is stuff you can use. Again, whether you go use with buy-side global products or not, we'll show you why that's a great idea, but this is just general good information. There's so many ways to trade supply and demand. We're gonna go through one strategy, and you can call it ABCD trading strategy, based higher highs and lower lows. We're gonna hit that, and we're gonna hit that pretty hard. So price movements don't move in a straight line. Obviously, if everybody could just know the trend, oh look, today, let's say Monday is this coming Monday, oh, it was an up day. You hear that all the time. Oh, it was a nice trending day. It just rose all day. Or the market fell all day long. Well, it didn't fall all day long in linear movement. It comes up and down jaggedy, just like a saw blade. Okay, but very predictable. If you have higher highs and lower lows, you can make a decision. Okay. So uptrend or rally will have a following pattern. There'll be a low, and I'll show you this. B will be a higher high, and then C will be a higher low than the previous low, and D a higher high. You probably have seen this before, okay? So again, here's our low. This is how you tell if a trend is going higher. So obviously low, a higher high, and then it comes back down, there's a higher low. This low is higher than this previous low. This high is higher than that previous high. Pretty self-explanatory. Let's whip through that, okay? Same thing with down, you get a high, and then it'll get a lower low, but then it comes back up again, and then it's a lower high, and then this low is lower than this low, so we call it a lower low, and then we call this a lower high. Obviously, that's a trend turning down. Now, the key is, when do you get in? So let's just show you again another way to see this. How do you know when to get in? Let's say we were right here. Is it going to continue moving down? You don't know. You don't know. None of us know what's going to happen right next after this. But it depends on what's happening. You got to look and see what's happening. So let me just identify the A, B, and C. So this is the buy-side global supply demand indicator. So here's where all our buyers are at. Here's where all the sellers are sitting at. So sellers are darker colored, buyers are lighter green colored. Okay. So the market pushes down here. This is what we consider your low. You get a pop up through these sellers right here. Here's a, by the way, you do get a blue triangle to help you make these decisions. Comes up here, and this is what you call this the high, and then it comes back down again like it typically does. And while it's doing all that, it's jig and jagging up inside of here. All these candles had movement as well. And then you got this lower high right here, higher low right here, and then you get a higher high. It comes back up here. So now you have a good idea that you have a trend going on, okay? So this is trend detection, all right? This is what you call the uptrend detection with supply and demand. So these are the demand zones where the buyers come in. See these like I said, these different colors. These are the supply zones, okay? Where folks get stopped out, or they go short, or the buyers get stopped out. These are where the buyers step in and they push the price up, or you got your short sellers getting stopped out. And again, the supply zones up here are where the sellers are at, and they're going short, or the guys that went long are getting stopped out at. So this is so you can visually see where the market is at, okay? So, but again, you can't just say, gosh, here's my low, there's my higher high, there's my higher low, and there's my higher high. I better get in right here because it's a trend up. I'm going to get in. Well, what's going to happen? You're going to get stopped out. Okay, if you enter too late, you're going to risk be stopped out. I think everyone can agree. Hey, trend's a great way to go, but you have to get in precise. You have to at all times you want to be getting in precise, and we can show you how to do that. Because if you enter too late, you're going to stop out. Okay, what you want to do is enter close to these green zones. Okay, if I'm going to go long, I'm going to wait till it comes up here, comes back down here, and then it pushes back off of this. I'm going to get in here. Okay, to some of this. Now I want to get down here, wait till it comes back down, bounces off these guys. Now you want to get in. Okay, that's great for now you're not gonna, if you don't have this product, you're not gonna see these green zones, of course, but just in general, you want to wait for a pullback and then go back in long, okay, and then expect a pulling back through that. All right. Now, same thing with going short. Again, you've got a high right here, and then you've got a lower low, and then a lower high, and then a lower low. So now you can detect, hey, there's a trend. The nice thing about waiting for that pullback, you can see where it's going to be because you have these sellers are here and my buyers are here. You want to wait. You want to go down you want to wait till it gets to at least to C and pull back down and go short with these guys. Okay. You want to wait for the pullback. You enter close to these supply zones. Okay. You put your stop a couple ticks above here because to be wrong, it's got to chew up through all these sellers. Okay, and then it's going to head back down to these buyers. You don't want to end on the low on the short trade. All right. This is a chart that we had. This is from yesterday. This was the Friday's chart. It was a great day. Let me ask if there's any questions from the first one. I kind of went through that really fast, but let me ask if we got some questions from anybody. I can see those if they pop up. Again, appreciate you guys sharing with us your information about what you trade. And this could be, this is all these charts are, I think, the ES, but this could be the NASDAQ. This could be your stocks option. This could be any kind of futures market you might want to say is, but this is the signal, the indicator, the buy side global supply and demand indicator at work, where you have these openings right here. Openings about here. I open Mountain Time Zone, so the opening happened right here. We got a nice flush up. Okay, then we have the indicator pushing down. Okay, come up, and what happened? The market. So this was here already before. Just like this, when I took the screenshot, the price was it's the screenshot from Friday. But the price is up. You can see these guys. These guys are here, so these sellers are waiting up here. All right, so they overwhelmed the market, or the guys who'd gone short had bailed out. These sellers down here had bailed out, or the guys were starting to take profit right here. My the bulls were taking profit. The bears took over and pushed the price down. Okay, boom, and you get this pink triangle. You can see it now. As it's getting down close to these guys, are you going to want to take a short? Maybe not, because you're gonna hit into these buyers right here. Now I did hit those buyers, penetrate down through those guys, down through there. I'll answer your question here in just a minute, Tom. That's a great question. Joan, great question here. No, let me answer it. It's important enough. Is this only for futures trade? No. If I threw up any of the FAANG stocks, if I throw up any stocks up here, this would be it would look exactly the same. If we throw up, what have you guys been trading? AI lately? You guys been looking at all those different stocks up there? Tupperware, anybody short Tupperware? This would look exactly the same. It would just be a different, anything that can be charted, the Buy-Side Global can get you to. And you head over to our website to get this information, buysideglobal.com. So again, you push this down here, you watch this price. And now the other thing to avoid, one of the ways to make money is not losing money, and by not pulling the trigger on a trade, because you can see, am I going to get long right here? No, because I'm going to bump into these sellers. Look at that. How many times did it hit this level right here where these sellers kept getting their bids hit, and then it pushes the price back down? Okay. You want to wait for a pullback. You want to wait for a good chance to get in there and make this thing happen. Okay. This was April 14th. This was yesterday's chart. Let's look at, I've got another day to look at that. Let's look at that. So that's yesterday's. Again, this was I hit my profit target right here, up in here. Just took I got greedy. I was thinking, oh man, maybe it's going to give me maybe it's going to be a 30-point day, but then it started hitting into this, and so I'm just setting my stop down here. I'm like, I think we're done. Boom, and it got me out. And so that was a great day yesterday. And then this is Thursday's chart. Okay, again, if the opening is right around here, so can you spot the trend? These keep printing out buyers, but the buyers keep coming up a little bit higher, and my sellers keep getting pushed up and up. You see these gaps, you realize there's a trend on, okay? And so it pushes up, you get a lower, you get a low right here, and then you get a higher, a top right there, and it pulls back down, pushes back up, and that's choppy. See, again, the thing about this is you've got to realize this is not, you can't just go, oh, it's heading up, I'm just going to pull the trigger, because it's going to pull back down. The market is going to move around. You can always give you 4, 5, 6, 7 ticks from wherever it's at. It's not linear. It's going to be chopping around. And when people say it's a choppy day, what that means is they went the wrong direction 3 or 4 times. So that's how you get a choppy day. So it's pushed up, and you can just watch this, and then you get these nice signals that tell you, hey, looks like it's a good place for a long. You have to make the decision. You're the human. If I'm not gonna wait. I'm gonna wait till it busts up through these sellers and push up in here. Now it bounces off these guys. If you've seen a naked chart, you know that there's times where you have no idea why did it do what it did, why did it bounce off that. But now, if you had this indicator, you can and you can anticipate, oh, it's going to bounce off that because the sellers are right there, and pushes up back up in there. But what a great little trending day. The market will give you these trending days every once in a while, not every day, but then over here, look at, I'm inside this zone. I'm inside this where these sellers are at, and it's choppy. It's going to be choppy. I'm going to stay out of that. I'm going to wait till it breaks out of one of these zones here. Either the buyers get overwhelmed or the sellers get overwhelmed. I'm going to wait for that. So this is just some quick quick area of some charts that we can see. Got a great question is the different shades of green. Those are different convictions of the seller, the buyers. So these different, like a darker green means it's not quite as strong, but the lighter green means it's really strong. Like those buyers are the conviction, the volume. What another way to say that? The volume is very strong in those different colors of bands, and so, and it doesn't really matter, because as long as there's enough buyers to trigger this signal, it doesn't matter really what color. I don't pay tons of attention to these colors, but I just know that when it hits there, the price, and it typically pushes back up, and it goes into the sellers, and it typically pushes the price back down, unless there's going to be a nice long trending day. So it's nice to be able to see those. And so where you would put your stop loss is a great question. So if I was watching this trend, let's say I it's easy to pick at the bottom here, but let's say I was up in this area here and I kept seeing this going up. I have plenty of space. I have a good conviction that the trend is up. And so what I'd get started, let's say I pulled the trigger. I don't think there's enough meat on this bones to pull the trigger here, but maybe I'd wait for a while for a pullback. There's a nice pullback. Pink triangle lets me know, hey, there's a pullback. So I'd put my entrance right about here, let it go down here and get pushed back up. My stop would be at the bottom of this zone, because in order for me to be wrong, the market has to come through and chew up all these orders here sitting here. These are all buyers. It's got to eat every one of these orders have got to get filled long and then push down below that and get my stop out. And you put your stop. I am really shy about telling people where to put their stop at, but to me it makes sense to put my stop down here because it has to eat all these orders right here and then get me stopped out before I'm wrong. And so it's pretty easy to put it. I put it at the bottom of all these different zones. That way I'm not wrong. Now look how this one, if you'd have got in on this here, it chewed up into here. So if you'd have been over here getting long, you would have been pretty nervous. Okay, you would want to wait until you get the signal, and then touch and go. Just pushes it up and pushes it up, keeps pushing up higher. You can harvest a little bit here. It pulls back down. You want to leave your stop, that's fine, but you want to be below this area here. Now the trade's over right here because it broke out down through there. So the broke zones, they don't get erased. They're here. That's a great question. Yeah, they stay printed, so you can go back. So I took this snapshot yesterday. I was getting ready for this presentation, but these were printed. They don't disappear. And then this is the current price line with when I took this snapshot on yesterday of what Thursday looked like. So the triangles don't, the triangles pop up and let you see. And I like to look at the triangles, not to pull the trigger, because it might, if you pull the trigger on this triangle. So the question is, the statement was, hey, these triangles seem a little bit late. Obviously they're using the information, the best information they have at the time to go long. What you want to use the triangles for is confirmation. So I get this triangle and I get this triangle, that means 2 in a row. That really means there's a nice long trend happening right here. Now it continues pushing down here, but if I get 2 of those, I know that I'm confirming I'm in a trend, and I just need to wait for a pullback to jump in there. Or I get an interruption, so I get a blue triangle here, and then I get a pink triangle. I'm like, okay, that's a nice pullback that I was waiting for. If I'm anticipating it going long, then I wait for that pink triangle. Lets me know that's probably the pullback. It's probably done, and then you get in with on that triangle. So you can use the triangles aren't the trigger. Okay, the triangles are just letting you know, hey, look, this based on the information, it's heading back up, and you can get up on those. They're early enough that you can make a decision based on that. So, and then is this an indicator? Yeah. This is an indicator that's attached to your chart. So and we'll talk about that in a second, but when you get this indicator, you put this on your chart, and then you make trading decisions based on that. I think I answered that. I hope that was your question. So, and this is an object that can be tracked. I don't know the answer to that. And then how long would the down triangle on the right of the chart show? How long? The triangles stay there. The triangles stay there the whole time. Okay, so let me show you another day. Again, this is just last week, just Wednesday. Again, do you think you could find a good trade in this if you're patient and you are moving along pretty quick? Do you think you could find a trade in here? You got the opening is over here. Let's see, I crunched this up really close. The opening is 7:30. But again, if you see all these areas and the market pushes down and bounces off, and then you get a triangle, but by the time I'd gotten this triangle, I would have already been in this trade over here to push this thing up. And then it gets a little bit, just down here after 10 o'clock. You want to call that choppy? I'd call that choppy. There's not a lot of trades going on there, but now it leaves this zone area here and then starts heading back down, chewed up through all these. And notice how the buyers don't show up. It just fades down through those guys. Do you think you could have found a trade in that area? I hope you can see that there's some trades to be taken. And then I went back into Tuesday. So again, just want to show you how the market reveals itself. You know where these buyers are, and again, it helps you keep out of bad trades. Again, right here, this is a nice, you would anticipating this. You get here's your low, it goes back up high, there's your B, there's your lower low, that's a C, or a higher low, and then it pushes back up here. But I wouldn't have taken a signal based on this because you see that, wait, this is where the sellers are at. I wouldn't have pulled the trigger here. I would have waited for this area to clear out, this congestion to remove, or waited till the markdown pushed down even harder there, right there. So let me keep moving along here. I got about 15 minutes here. I want to make sure I give you guys plenty of time to be able to answer all these questions. So you've seen the trends, but now the key is where to enter and where not to enter, okay? So we've identified the trend confirmation, and you want to get in the trade, but how do you know exactly when to enter this trade? We talked about that a little bit. The most important thing is to know what price levels you should not enter, okay? So anybody have an answer, anybody who can give me the answer, I can do a $50 buy-side global gift voucher with 1 week. And what I mean, the gift voucher, so $50 off of buy-side global products. I'm not gonna send you a $50 bill, but if you if you can answer, I'm gonna show you a screen. I want you to know when do you get it? Well, show me, oh, the dots, no, that's a great question. Do the red, green dots mean ABC? No, they just let you know where the a new area is showing to, and I'll get you to that in a second. So let me ask you that question. Where is the place that you should not enter? Where's a good place that you shouldn't enter? In other words, when you know, let's say you know the trade, and you know you're going to get in, where's a good place to not enter? So in other words, where's the, yeah, so yep, good question. Okay, yeah, you want to enter on the pullback, exactly. You don't want to go to the end of the end zones. So both those folks that have answered that question, shoot me an email at info@buysideglobal.com. I'll put my email back on there. Shoot me an email, and yep, my pullback. I love those. So you're not higher high. Yep, you guys got this. So email me, tell me you got that. You want that discount, and we'll get you. Yeah, you want to wait for the yep. Raymond's got it, and I'll take a screenshot of this, of the guys who are answering this thing correctly, and that way we'll get you your $50 off. So it's gonna be a great indicator here for you guys. Okay, so let me show you. Oh, okay. Thanks, Tom. Let me answer that question. Yeah, so you up trade trend strategy. So again, you can draw these. This is just a simple little drawing, but I just want you to see that. You want it pops, here's down low, you can draw these up here. You don't want to be at the top of this one. You want to go in long up here, obviously, makes sense, right? And you want to be down more closer towards this line. If you can even wait for this zone right here to pop up, that's the time you want to get in when you know it's an uptrend strategy. And then let's talk about how we want to end this, okay? So getting in is great. That's so you can see how you wouldn't want to get anywhere near this. You have an uptrend, you don't want to get long anywhere near the top line, right? We've got right here. You want to do down to the bottom part, okay? Down where everybody said that was the pullback at, or you want to wait for the return, or you want to wait for a lower high, okay? So there's a higher high, that's the wrong place, okay? You want to get in the lower high down here, lower low, right there, okay? So that's the uptrend. Let's talk about that. So there's also, I want to talk about getting out, all right? We want to maximize your dollars. How many of us get frustrated every day when we get in a trade and we leave money on the table? We get out way too soon. I do it, you do it. You just get out because of I get chicken, I get scared, you know? You want to wait for the end. You want the trend to be over. You want to suck out as much money of that market as you can, because you never know, the next day you might get stopped out a couple of times. And so now we're in the trade, okay? So the next immediate step is to check the trend continuation, and finding the early signs of the end of the trend. Again, when is the trend over? Well, are you going for a quick scalp? Are you going for more of a long-term kind of swing kind of thing? You're going for buy and hold or sell and hold? You want to check. The immediate step is you want to check in the trend continuation. You want to get out when it's time to get out. Okay, you don't want to leave money on the table. We're always going to leave a bit of money on the table. You're never going to catch them all. But again, the end of the trend also has a very clear pattern. Okay. So let me put another bonus out there for you guys. You're going to give me the answer. When do you get out? When do you get out of the trend? Yeah, the structure. Yep, Frank, you nailed it. Yeah, anybody else get put on there? Yep. Yeah, when you get zero price level. Yeah, when it's not moving up, when it's not changing. The nice thing about this indicator is that you can see when it's broken. Okay, you can see these lines. Check it out. So again, you break down through there, you get these both supply and demand zones that when they continue without interruption, they form this nice rectangle. That means the trend's probably going to be over. You've broken down through these. When you break down in through these areas, that trend is probably over. Okay, a new zone forms above each other. So notice how these new zones keep new zone. I keep having these sellers, but they keep getting pushed back. Okay, but up here, nope. Up here, nope. It stays steady and it keeps printing continuous along. So it's not the exact same spot, but it's you can see how it's continuously printing, and then it drops back down, let you know this up move probably over. Okay, there's when they stack higher and higher, stay with that trend. When the trend's over, the zones just stay where they are. It's pretty dang easy to see that. So that's nice. So let's talk about the end of the trend. We'll wrap things up here. So when the trend's over the end of the higher highs, obviously, that's exactly you. The higher highs and the lower lows, when they stop having higher highs and lower lows, your trend's over. Okay, you need to really be able to look for that. Okay, or you're reaching the double top, or you're reaching the double bottoms, or it's a continuous supply zone on the top, and you demand zone on the bottoms. You can see it when the rectangle forms and the market moves sideways. You want to get out. You're done, unless you want to just get there and watch your profit keep getting chewed up a little bit. Okay, so market reverses, forms opposite of higher highs and lower lows. That's all. Those are great answers. Those are all great answers you guys gave me. So, so you can see how this. Let me go back to that chart. So again, you can see when the trend is starting to end because you stop getting these the price starts hitting up into these guys. There's no more space. There's no more of these spaces between these zones, and it starts pushing back down, and you get the reverse when they're not stacking on top of each other. They start stacking underneath each other. That's a great sign that the zone's probably over, okay, or that the trend's probably over. Okay, now let's talk about what's happening here with your trading strategies, okay? Anytime you're trying to make a replacement income or a supplemental income, you're gonna have to, there's not many ways to do it unless you're wanting to just trade your time for somebody else's money. Okay, so what I'm talking about is if you let's say you wanted to start a barbershop quartet that goes around and sings happy birthday, you're going to need to hire some folks, you're going to need to get some uniforms, you're going to need to pay for some gas. All right, whatever you could think of, you're going to need to put some little money into it. So I just want to set your mind up ready for this and understand that you need to put a little bit of time and effort into this. Okay, so normally to purchase this buy-side global supply and demand indicator, most folks get on the website and they pump out $500, and that's for a year. Okay, and that's a great price. That's 10 points on the ES. All right, that's 2 points a day for a week. Pays for this whole thing for the whole year. Okay, not a ton of money. I don't want to minimize $500, but $500 is $500. But if you think about it in terms of making a few points every day on the ES by knowing when not to get in and knowing when to get in, I want to give you guys a special offer. Okay, so the boys at the front office, the guys and gals here at Buy-Side Global, have put this together for 10 days for you guys being here today. So this will work today, and it'll also work tomorrow. All right, it's a 20% off discount code. It's $396. All right, 20% off. You got to go to buysideglobal.com. Again, I take a picture of this screen. Go to buysideglobal.com/supply demand and pump that in there. Now, if you want to get that $50 voucher towards that knocks out even more off this price. Email us over at info@buysideglobal.com. If you have questions, shoot us an email on there, or you can call. It will work as well. But I want you to think about your success. If you want to compete with Amazon and deliver packages, that's great. But you're going to need a truck. You're going to need some gas, and maybe you start growing. You're going to need another driver. Just anticipate that you realize you've got to put something into the game to give yourself some tools. If you start as a brand new carpenter, they're going to want you to go buy some tools that you can purchase to make yourself some money. So just think about that. I want you to be able to do just what I've shown you on this chart, be able to find those trends, be able to find a good safe place to get in so you're not continue getting stopped out. How many times have you been stopped out only to be right a little while later? You're never, a wise trader always says, you're never right at the beginning. And so the reason you're getting stopped out is because you're not getting in, you're not using a good strategy. We want you to use a good strategy. We want you to use a good strategy for inside that strategy, the trend. And this tool will make that much easier. So I think we're getting time to wrap up here. Appreciate you guys' time. Again, take a picture of this. If you want to go jump over on Wyse Global and get that discount, feel free. It's a great value at $500. It's a killer at $395. So, hey, Rob, I think that's everything I had.
Hey, thanks, Dave, for providing our audience with incredibly valuable information, the generous offer with the 20% off, and for those that were able to answer the question right, the $50 voucher.
That's kind of fun. That's kind of fun. Thanks, Rob. I'll let you go, and we appreciate you guys being here and looking forward to listening to the rest of it.
Dave, I don't know if you get many compliments, but just the voice and listening to your presentation, it was, I can see why you're a good presenter.
Well, we're looking forward to, one thing I forgot to mention really quick, and I know we're out of time, but by purchasing this, you do get access to our trading room in the morning where myself and another professional trader, Matt, is in, and he's making some incredible trades, and it's a nice community we've made for ourselves as well. Forgot to mention that. But hey, thank you for the compliment on the voice. My mom, when I was born, said I had a face for radio. So,
ladies and gentlemen, if you'd like to learn more about it's Dave Gear, right?
Yes, sir. Yep. Thanks, Rob.
See, I remember your last name. If you'd like to learn more about Dave Gear and Wyse Global, I placed a link in the chat box. Apologize for the typo on the first one, but thanks again, Dave, for being here. I hope you have a great weekend and all. Please come back and see us again.
Absolutely. Thanks.
Ladies and gentlemen, that'll bring us to our next presenter. He became interested in day trading during college and has pursued various entrepreneurial paths. He started using NinjaTrader out of curiosity to test his ideas and now has over 14 years experience programming on the NinjaTrader platform. He's actively day trading futures, focused primarily on the NQ. Joel is most passionate about futures trading, but remains committed to building and developing the best tools for day trading. He enjoys connecting with his customers and is building a tremendous community of successful traders. Ladies and gentlemen, here to present automated chart trading tools for NinjaTrader, it's my pleasure to introduce Mr. Joel Wyse of Affordable Indicators. Welcome back to Traders Corner, Joel.
All right.
Joel,
thank you.
There you are.
Thank you, Rob. Can you guys see my chart?
I do. I'm looking at the NQ, and it looks like it had a nice pop toward the end of the chart.
All right. Thanks, man. I actually have playback connection going today, you guys. So we're just going to play through Friday morning, and I'm going to cover my enhanced chart trader. That's what we're doing today. So you guys saw in the promotional that I talked about some Renko entries, some bracket entry orders, position sizing, and a few other things. So I'm just going to go through what I think are some great tools to benefit you guys no matter how you trade. And it's been fun listening, Rob, to some of the other presenters, Marina, Leigh, and Dave at the end here, mostly focused on futures and just how much synergy there could be with my tools and some of the things that these guys do. So really cool to be here and to get to do this today. So we're just going to jump into it. This here, you guys are looking at my chart. This is the enhanced chart trader. So today, actually, if you guys hang around to the end, you're going to get all of these features that you see right here for free in this panel on the right side. I will also cover some of my trade setups, but I do have another video I'm going to give you guys where I do go into more detail on how I trade the NASDAQ and what particular trade setups that I've been using. But for today, we're going to stay focused on the chart trader. So there's going to be 3 parts to this presentation. We're going to talk about entries first, and then we're going to talk about exits, and then lastly, we'll talk about risk management, which I think is a big piece of having a great chart trader, is being able to see your risk and manage your risk for a trade. So we'll start with entries, and I just want you guys to see this basic chart trader tools and kind of what you get with this. Normally this is $195. I'm going to give you these features of the chart trader for free. So some of this stuff looks familiar, right? You look here from the top, you got the account, the ATM strategy. And I'm just going to make sure I'm moving my mouse around. Are we still good on everything here, Rob, as far as being able to see mouse movement?
Absolutely.
Awesome.
I see
love
up
it.
around the 13.2 level. I had a purple line. You know, you're good today.
That's a whole number line. And this is my key levels indicator, which I won't talk about today. You guys can look that up. But the basic chart trader tools, I want to show you guys what this does. So you can use the buy and sell click buttons right here. So rather than right clicking, what you do is you just click buy, and now you can just click on the chart where you want to buy. So real simple, right? Same thing with the sell. Below the market obviously is going to be a sell stop limit, okay? And then also you've got attached to indicators. So this is the first entry type that I'll show you. So if I hit buy click, market's trending up. Obviously we already know what happens, right? It kept moving up. It took a long time for it to pull back to anywhere that I would be looking to enter typically. But anyways, if I wanted to enter a plot, what I can do is just click buy and then hover my mouse. So I'll show you guys what a lot of the plots I'm using are. This is a 20 EMA. Here we have order flow VWAP, okay? This is a 200 EMA. Here we have a 50 EMA, all right? And then these are actually 5-minute 50 and 20 EMAs. So I can see that kind of this morning before the market opened, we were trending down because these 5-minute 20 and 50 EMAs are cross bearish. So what's cool about the basic tools is, again, how easy it makes to attach orders to indicator plots, right? All I do is click buy, and I click on the plot, and now I have a trailing order on the 20 EMA. So I think that hopefully is really valuable to you guys depending on how you trade. And like the other presenters, I do have the questions pulled up. Hey, John bought the professional chart trader tools a couple of weeks ago. Thank you, John. And Steven, I see you, man. We got to talk about risk management stuff too. I would love to work with you on some of that stuff. So I'm going to keep moving here though. I want to show you, hey, Mike, I want to show you guys one more thing that I love about the basic tools, right? So this is just meant to replace and improve on the standard chart trader, right? So hopefully you can see there's already a couple improvements in the buy and click and sell click buttons, and also the ability to click on plots to attach your orders. The last thing I want to show you guys, I'm just going to get long the NASDAQ, and hopefully we just get a move. So that's good enough. So I'm just going to close it. So now I can see that I've got $40 in the NASDAQ. If I go to the ES, I've got 0. So let me just also go long the ES, and I'll just close it. Hopefully we just get a move of some sort. I don't really care. So let's just close it. Okay, so now I've got $12.50 on the ES and $40 on the NASDAQ. So if I click to toggle, I can see the total for the whole account, $52.50. Or the total just for NASDAQ. So I think this is like really unique. I built this really for myself because I wanted to be able to see quickly what I'm up on a particular instrument instead of the whole account. If I'm trading, looking at the ES, the YM, and the NASDAQ at the same time. So just wanted to add that little thing there. Also, as you click through here, you can see your P&L without commissions, with commissions, or you can hide it. And then over here, you can toggle between just the S&P or all instruments across the whole account. So just want to throw that out there. But this is, that's a summary of the basic chart trader tools, which again, at the end of this presentation, I'm going to give you guys a discount code that will make this free for you guys to get started. Now, obviously, like I have some other things that I'm hoping you guys will be interested in today. So let's take a look at those. So if I move it over to the next tab, you've seen some additional buttons added here at the bottom of this chart trader. So these are, I'm going to start with bracket entry orders. What's cool is if you guys were here earlier, Leigh from 10-Minute Trades, I think was the name, was talking about his news trades, right? So this bracket tool that I built, you click it, and immediately you get a bracket above and below the market. You can cancel and replace, continue cancel and replace as many times as you want. You can also configure it to submit at the close of the bar or 1, 2, 3, or user-defined number of seconds before the close of the bar. So let's say news is coming out. Here's my countdown timer. I'm not going to go into the settings, but you could actually configure this to submit the order, say 2 seconds before the bar closes. All right. So then when you click this, you would not get any orders until right before the bar closes, orders are submitted. So it's pretty neat. I actually want to talk to Leigh. I know he has his own software, but I think what would be neat is to look at potentially incoming ticks, right? And detect when you're getting a explosion of ticks and then submit the bracket right as it's happening. But anyways, just something I want to talk to him about. So that's bracket entry orders in a quick summary. I do have videos on the website for all these products generally, even though they're outdated. A little bit, but yeah, working on all this stuff. I'm looking at a few questions before I move on to the next part. Aaron, you can change the font for all of this stuff. Now, I'm not sure about the bid and the ask, but if that's really important to you, I would love to just put it in there as an option, right? Like, there's still some cosmetic things that I want to add in here as far as like being able to change fonts and different things. I know, like, for example, when you place an order, this font is changeable. Like the font that makes up this flag, these order flags, you can change. The brackets actually, if you watch here, Scott, I can right click on this and you'll see at the bottom, a message pops up where it says disabled. Do you see that? And then I click it again, OCO is enabled, right click, OCO is disabled. So you can actually choose whether it's OCO is enabled or disabled just by right clicking on the button. So I see you, Yolanda, and I need to get back to you. You reached out, I think last night. So yeah, hopefully we can chat later today. Oh yeah, the break even option. Good call. See, I mean, yeah, this is just familiar to me. So when you're in a trade, do you see this break even button right here? That is also included with the basic chart trader tools, which again is going to be free for you guys today. So you just click break even, and if you're in the profit, it's going to move the stop loss, right? But a lot of people don't think about break even if you're actually down in a trade. So if you're down in the trade, it's going to move your target down to break even, and that can be plus or minus an offset too. So anyways, I'm going to close this. Probably try and keep moving. I do not want to run out of time. I want to get through this whole thing. Yeah, let's keep moving. So this here is the close bar entry orders. All right, so a lot of traders enter on the close of a bar. So for instance, right here, if we initiate this, we got 47 seconds left in this bar. This works on any bar type. That we got 47 seconds left in this bar. So what this is going to do is as soon as the bar closes, as long as it's an up bar, we're going to get a trade. So what happens if it's a down bar? Trade's ignored. Yes, Jeff, they work on the free version. I am so ADD. I need to probably just focus on presenting here. But I love the questions. Dave, those are EMAs. It's really nothing more than, like I covered earlier, a 20 and a 50 EMA. And then you've got the 20 and the 50 EMA and the 5 minute, which you can see just crossed over down here a few bars ago. So what's cool about that is you get the close. Right here we get a close. It's a red bar, so we're still active to buy on close as long as we get a green bar. So what's going to happen here is the next green bar that closes, we're going to get a long trade. And you can actually set this to market. You can do a limit order, stop, or stop limit. Stop or stop limit, you can also set it to high and low. So let's say you want to submit a stop order above the high of the bar that closes, you can do that. By default, it's based on the close. So it's just going to submit the order based on the close plus or minus a few ticks, but you can configure it to place the order based on the high or the low of the bar as well. So in the same way, if I turn this, you can just disable the trade, right? So let's say I want to go short on a down bar. Let's just do this real quick. Let's look at a red bar. So now I have this set to red bar. So here we go, 2 seconds. Limit order goes in and we're filled. So that is closed, and you can also then exit. So I've got a user manual written for all this stuff. You can also then exit on close. Because this button is configured to exit, now I can say, okay, I want to stay in this trade, but as soon as I get a green bar, I want to be out of the trade. Or if I hit reverse, now I'm going to buy and close the existing trade. So there's a lot in there. Can't possibly cover everything today. I'm just trying to give you guys like an overview of what I have, and hopefully, based on what you already know. And I also love Marina, by the way. She just breaks it down, and I think it's like, wow, I trade that way too. Just breaks it down to like simple price action, moving averages, just stuff that just works. Anyway, so that concludes this little part of the presentation. So again, we're talking about different ways to enter, attaching orders to plots, entering the bar close, entering a bracket. One more thing related to closed bar entry is signals. So this is like another chart. This is my indicator, stochastics. I don't use stochastics, but I just want to give you guys an example of some trades with a signal, right? So signal entry orders is my product. You can enter and look, there it is. We're getting a signal. So when I turn this on, it's going to highlight all of the signals. Do you see how it's highlighting all of the stochastic signals when the stochastic is breaking above, I think it's 80. So what's going to happen is when this bar closes with a signal, we're going to get a trade submitted. And it's going to be a market order. And it's going to happen when this bar closes with the signal. So for example, guys, like I could have turned this on. So here we go, 2 seconds. And there's our trade. So I could turn this on as we're uptrending, for instance. And I say, look, I know, and it's not necessarily this signal that is the point right now. The point is you can use any signals. In fact, you could use buy-side global signals with this to get into a trade when an arrow closes with their supply and demand zones, right? So the point is you're in the trade. You could initiate this way back here, right? So you're saying, okay, it's trending up. I want to take the next buy signal opportunity. All right. So that is signal entry orders. There can obviously be a ton of possibilities and integrations for this. I built custom signal indicators for my clients where they have a signal. I build the indicator, plots the arrows, and then it integrates with this right here to then initiate the trade when the bar closes with the signal. So that's another entry option in here. So lastly, guys, for entries, the newest thing that I've written, and I know this is like, I feel like this is a fire hose of information. I hope you guys are following me. There's a lot in this. But man, I love the opportunity just to get to hang with you guys and show you guys what I've been working on. So this is a Renko chart. So a lot of guys love Renko. I love Renko. Not as much as my dad does though. He loves Renko. But anyways, what's cool about this is I had some customers using closed bar entry orders, right? And they would complain about slippage, right? Because they're like, man, the green bar closes and I'm getting a lot of slippage. So like, for instance, as we're uptrending, you get the green reversal bar here, right? The green reversal bar here, another green reversal bar, another green reversal bar. These are all easy winning trades here. Obviously, when you catch a good trend, you're just looking for a pullback and a reversal. So what this does here, guys, is I hover my mouse over these buttons, okay? And it's showing me where the order is going to get placed. So let's say I want to go long on the next green bar. I'm just going to initiate this button, and the stop order immediately goes in, and it's going to continuously update until that green bar. So did you see how it moved down? It's going to continuously update to keep that order in line with what I call the known close, right? So Renko, I'm calling it the known close. We know where the bar is going to close, right? If we get an up bar, we know exactly where that bar is going to close. So right now, this order is 1 tick above where the bar closes. So actually for the bar to close, you actually need to move 1 tick above that bar for it to actually close. So let me zoom in on this a little bit. I'm working on a new scaling indicator too, because scaling's trash. Okay, so there we got our reversal bar and we're in. Gosh, I remember this was a weird pullback and it was like really scary to take along here, but if you did, you were happy. And this is 1 time speed. Yeah, I don't know if there was something at 10 o'clock news, whatever. But so anyways, that's kind of like the Renko thing. So I'll just close this. We'll do another one. So again, green reversal bar. All right. So see how it's trailing down, and the next green reversal bar, this is actually the 20 EMA off a 1 minute chart right here. So the next green reversal bar, we're going to be long. And while I'm watching this trade, I'm looking through the questions here, see if I can grab any of these. Ari, you already have it. We can talk later, and I can credit you on another purchase for that. I do have order flow and balance trades. That's part of this panel as well. I'm not going to talk about that today, though. Dave, the blue dots were a trailing stop I wrote for a customer. But generally it's just looking at highs and lows of bars. And like if you get 2 up bars in a row, then mark the low and consider that like your trail. 2 more up bars in a row, mark the lowest low. So that's the idea there, is just kind of a proprietary trailing stop that I wrote for a customer of mine. So that's Renko, and this is a unit Renko. There's all sorts of custom bar types. I have it working with Ninja Renko. I'm sure a lot of you guys use Ninja Renko bars and other types of Renko as well. You can see here this entry got us in. And again, guys, I think the key here is with that stop order working before the bar closes, you limit your slippage, right? Because if I'm waiting until this bar closes to submit the order, it can burst. I can send a market order and all of a sudden I'm like, in with a lot of slippage. So having that stop order working in advance, because we know where the bar is going to close, I think is something that's key here. Ari, that's right. So Ari's asking about signal entry orders, which we go back to here. Yes. A lot of indicators that have output plots, they have outputs 1 and -1 for signals. Like if you guys use Bloodhound, you're probably familiar with that, 1 and -1. So it just integrates with any indicator that you can put in your chart, really, that has a good signal output on it. The unit Renko, take a look here. Earl is 8, 8, and 24. And if you missed that, email me later. The manual is available when you purchase, Heinz, which you'll get today with the free version or the free basic tools. Jeff, yes, actually. So you guys will notice this new module, which I call price-based entry orders. If I go to range, see how the buttons say range now? So it says range here because it's range bars, right? And then it's going to say Renko over here. All right. If you're on a minute chart, it's going to actually place the order at the high of the bar. So it's going to work on previous bars and it'll keep trailing the order down until you get a breakout of that high. For a buy or for a sell, it's the opposite. So Randall, thank you, man. I love that. This is amazing stuff you have programmed. I think so, and it really pumps me up to continue working on it because it's not perfect. But yeah, it's been a lot of fun just working closely with my customers to just build what they need, really, and what I've experienced that I need. So this is cool. So let's look at a range chart here. Let's say I want to sell. I think we're double topping here, and I want to sell the next red range bar. I go ahead and initiate this button. So look at this order trail, even intra-bar. Do you see how that's trailing intra-bar? Because also with range, thanks, Mike. See you later, man. Because even with range bars, we know where the bar is going to close, right? We know where it's going to close, so we can have the order ready and in place. So when the bar closes, we're filled. So here we got filled on this short. And obviously I'm such a wizard because I already know the market double tops here at 10 o'clock and it went down really hard in a little bit. But yeah, so that can get us in based on the color of the bar. And again, I've said this, I think I've beaten this to death, that we have what I call a known close on these bar types, Renko and range, where we can put the stop orders in place so that we're minimizing our slippage and getting in when the bar closes, but getting in with a stop order to minimize the slippage involved. Ben, I'm getting there, man. I need to watch my time though. Yeah. Let's see, I need to wrap up at 4. So that's price-based entry orders. I'm gonna keep moving. Let's close this trade. So just to remind you guys, we have a separate P&Ls. So let's look at exits now. That kind of concludes my entries for today. We're gonna get to exits, risk management, and then we need to wrap it up. So this is what Ben had just asked about, which is the advanced exit orders management software. So this here is a trailing stop, and it's again another piece of this chart trader that I have for sale. But you can see here as we hover over market, we're getting a preview of our ATM. So how cool is that, right? So if I want to plan this trade, and I guess I'll just put a long trade here because I know it's probably a losing trade because it came down so hard. But let's say we want to get long here, almost like I showed earlier. Let's say I want to attach it at the 50. I can plan my trade, right? So I can drag these around and I can say, all right, well, I want to try and ride this up here. Let's go for 40 points. I'm going to have a tighter stop on this, 11 points. If it doesn't hit and bounce off of here, I just want to get out. So this is cool because you're pre-planning your trade, right? You have 11-point stop, 40-point target. And even if I go into here, it's actually editing this in real time. So it's not going to edit in here. That's not even accurate. But this is editing the ATM that's attached to this order. So watch as I'm filled on this. In fact, I might just move this up so you guys can see. I'm just going to get filled on this. And there we have our 11-point stop and our target. This is cool too. You can see the amount of dollars in the stop, amount of dollars in the target. So this is advanced exit orders. And again, one of the features that I just showed you is the ATM strategy planning feature there. What else am I covering with this? Okay, also the ATR based risk. So this is how I trade, and I cover this in the video, so I'm not going to go into it a lot. But if I'm trading based on the ATR, what I can do is over here, I can click on initial exits, I can select ATR. Now take a look at the plot and how it's toggling back and forth between 20 points, which is my standard ATM, and 26 points, which is 2 times the ATR. So take a look down at the bottom, the ATR is reading 13 right now. So 13.5 times 2 is 27. So if I want to use a stop that varies based on the ATR, I have this automatically set up. So I don't have to think about my stop. Now I have a stop that's already ready to go. It varies with how the market's currently moving. So if I'm trading in the afternoon, guess what? I'm gonna use a tighter stop. I'm not gonna risk as much. If I'm trading in the morning, market's moving more actively. I need to have a little bit wider stop to give myself a chance in the trade, right? Like if I'm gonna buy the VWAP, which I probably did and took a loss. I mean, this was weird, man. It just slammed through here and then it pulled back and consolidated, and then it came down even more. It's a nice short like consolidation, but having this defined risk management really gives me freedom to trade too, because I can say, okay, I know what my max risk is going to be, and I know in any trade that I'm taking, guys, 2 times the ATR is max, and I'm trying to keep it even tighter than that, right? I'm trying to keep between 1 and 2 times the ATR. So again, advanced exit orders management. The last piece of this is trailing stops. So you can actually configure your own trailing stop. So watch this. If I select trailing stop 1 and right click, it resets it. Now you can read at the bottom, it says click on the plot for the long trailing stop. So for long, I'm going to click on these blue dots. And then for short, I'm going to click on this red dot. And now I have a configured trailing stop that I can actually rename. I'm not going to rename it because we're a little bit short on time. Trailing stop 2, I've already configured to the PSAR. So you guys see how it says trailing stop selected, parabolic SAR, long and short. This one says trailing stop selected, and it's got some other text. It's proprietary trailing stop. Now watch this. If I get short here, I'm just going to sell market for the purposes of this demonstration. Now I can select between my 2 trailing stops. So if I select trailing stop 2, which again, you could rename it in the settings, so it would say something more descriptive. I have a stop at the parabolic SAR. If I select this one, it immediately moves down to the red dot, which is the proprietary high-low. Actually, you can see these 2 down bars. The dot is at the high of these two bars in a row. So really, that's how that works. Every time you get a down bar, it's readjusting based on the last 2 down bars. So you can configure your own trailing stops. You can literally select the plots, configure up to 10 different trailing stops, even have maybe the same trailing stop with a different offset. You see as I move the offset, how it's sliding the stop up right here. So in summary here, advanced exit orders has, again, the ability to pre-plan your trade, the ability to pre-plan your targets and stops, the ability to base your targets or your stops on the ATR itself, targets and stops, and then also you can configure custom trailing stops. I'm probably missing some because there's a lot to cover, but anyways, that is exits. And don't forget, guys, when you're in a trade, super cool, you can actually see the amount of money, or you can configure this to be points as well. I don't like to see the money, but you can configure it to be points as well. So you can see like, okay, I have a 30-point target. All right, so let's move on to one more piece I want to cover today. And hopefully we can do this in 5 minutes, is going to be the essential chart trader tools. So this is like a package that I have. Now I want to show you guys something here. This button is super cool if you trade multiple targets, which I don't, so whatever. But let's say I go short here because I know this is a high right here already. This is playback. So I'm gonna go short. And I got all these targets, right? So this button here you can see is a button that is, let's move these stops up. This button, I'll turn this off too much, is automatically showing me the nearest target and let me close it. So let's say that, man, I just want to close target 1. Click it and it closes target 1. Now T2 is the next one. Close target 2. Close target 3. Close target 4. So just a little side note of what comes with and this is the essential chart trader tools. So this, what you see here is what I'm saying should be like standard. Like if I was designing NinjaTrader, this would be standard features right here. Not everyone not everyone enters in the bar close, so that's an option. Not everyone uses bracket orders, so that's an option. Signal orders, an option. Renko and range, which is called price-based entry, another option. But this is like what I'm calling essential. So check this out. With the essential tools, you get that button, the partial close button. You get all the position sizing stuff. You can change your ATMs with these quick buttons. So here I got a 5-point target and stop, 10-point target and stop, 15-point, 20-point. Keep in mind, if I pre-plan the trade, watch this, all of a sudden, this turns red. That indicates that you've made a modification to the ATM. If I click this, okay, now it's reset. So like if I move this, click this, it's reset to the default. You guys see that? Move and stop, reset to my default, move the target, reset to my default. Again, over here, you've got initial orders where you can, where you can set it based on the ATR, and actually that's turned off. That's why it's not over there, because that's advanced exit orders. But let's stay on point here. So this Essential Tools also has these quick select buttons. It has one-click entry. So if I hover my mouse over here, it just pops up and I can just click a bunch of these buys, cancel all. Same thing if I want to sell, I move down here, it turns red, buy, sell. I can just sell. So it almost eliminates the need for these buy and sell click buttons because you're just able to like move your mouse at the edge and just click. All right, and let's do a position sizing example, and then that wraps it up. And like I said, this is so much content. I hope you guys are with me, and I'll get to some of your questions in a second. So position sizing right here, I've got this set to, it's gonna be a very, very quick demonstration. So $1,000 risk, right? And I've got my 4 ATMs. So let's just go ahead and turn the size on. And we can see that if I'm risking 20 points, the maximum lots I can trade is 2. Let's go to 15 points. Now I can trade 3 lots because 3 lots, 15 points is 900 bucks. Let's go to 10 points. Now I can trade 5 lots because 5 lots times 10 points is 1,000. And again, a 5-point risk is a 10 lot trade. So it's automatically adjusting the size based on your stop. Now this is where you're like mind blown. So watch this. As you click to plan this, as I'm planning this trade, you can see 4 lots, 5 lots, 6 lots, 7, right? So as you're planning the trade, if you're adjusting your stop, now I personally just trade 1 contract right now. I just believe in like I can make 50 to 100 points a day, 50 points hopefully on average on 1 lot. So I'm not doing position sizing at this point, but traders do, and so I have it in there. So again, real quick demonstration, guys. I'm sorry we don't have more time to cover it in detail, but that's kind of like what the position sizing does. You can also select by account size. So like percent of your account, 1, 1.1, 1.2%. All right, so I think now I've covered everything that I wanted to cover today. So I'm gonna try and scroll through some questions, and then in about 2 or 3 minutes, I want to give you guys my offer. Thanks, Greg. I know, man, I hope that you found it valuable. It's a lot going on. I agree. So Juan, there is basically a trial, and like I've said, I'm not big on free trials, but what I can do, what I'm doing today is you're getting the basic tools for free. So like I said, the buy and sell click, the ability to click and attach to a plot, the ability to split your P&L by instrument, which I think is super cool, quickly toggle between with and without commissions, the ability to use a break-even button, which also you can, if you don't reverse, you can actually make this your break-even button. I didn't even mention that earlier. You can put a break-even button right here. There's also a break-even button on the chart when you're in the trade. So all that stuff, you know, you guys are going to get a code today for the Leigh to get that for free. But then if you want to upgrade to these other things I showed, there's going to be an additional cost. All right, so I'll go over that. I am recording it, Rich. Thank you for reminding me. So when this is over, I don't forget to shut that off. But yeah, hopefully I'll be able to send that out, the recording. So I want to ask you guys, if I missed your question, if you could just go ahead and start typing some questions down at the bottom of anything I've covered so that I can address that. Thank you, Rich. You're a great programmer. Appreciate you. Juan, I'll look for the email. That's great. Thanks for doing that, man, because that's easier to communicate that way. Earl, I see you. Spencer, dude, I'm sorry I'm not getting back to you, man. Spencer's a great client of mine. I think he's a doctor or something. His email's like Dr. Spencer. But he's asking about position sizing for multiple profit targets. And guys, being real, that gets complicated, right? So that's something that I'm working on. It's in there, but there's a lot of different scenarios to cover. Ron, you can configure bracket entry with 1, 2, 3, 4, 5 seconds. Actually, what we should do, Ron, is make that milliseconds too. So then you could do 1.5 seconds, 2.5 seconds. Why not? But yeah, you can configure that to enter X number of seconds before the bar closed, then boom, it puts the orders in. Actually similar to what Leigh had, which is why I want to talk to him from 10-minute trades. Split your targets and stops. That's actually a basic tools feature as well. So yeah, good question. If you're using multiple targets, all right, so I think I can show that real quick. So let me go to my 4 target strategy. 4 targets right here, hit market. All right, so you see how the S button here, you can combine the stop. So it's one big stop, of course. Or you can split it. So you see how they're all split now? I don't know who would trade with this many dang targets, but so that's the split button. Answers your question. Let's keep going. I do have a YouTube channel, Randall. Should be able to find that, affordable indicators. There's also a video link I'm going to show you in a second. Tick bars, yes. So yeah, tick bars would be like minute bars, volume bars. The chase feature would work. It would just be based on the high and low of the bar. So in that price-based entry orders module, when you don't have a known close like you have in Renko or range, what you have is basically you're going to have the order above the high for a buy or below the low for a sell. So you chase it up. In the case of a sell, chase it up till it's filled. In the case of a buy, chase it down until it's filled. The button for changing contracts is over here. So that is not a basic chart trader tools. That is an essential. That's a paid feature here. Really, they're all paid. Just today, the basic tools are free for you guys. This is in the essential chart trader tools where you can quickly toggle your ATMs versus having to select from a drop down. You say you make 50 points a day. How do you prepare to do that on a daily basis? Adrian, first of all, I haven't said that I make that every day. I'm a work in progress. Probably just want to throw that out there. But yeah, I mean, I think preparing for that for me is a lot of mentality. Takes a lot of discipline, controlling emotions. I'm working on all that. And actually, there's a video I'm going to show you that I want you guys to watch. All right, so let's get to it here, where I talk about my trade setups, Adrian, and some other things that I'm working through in the last couple months. I'd love for you to see that. There's 1 PC and 2 PC license, the order flow again on the website. Just check out the website. NQ, NASDAQ, blue areas I've covered already. All right, so let's pull this up because we got 5 minutes left. You guys can keep putting questions in. I'll answer them until Rob kicks me off. Rob, don't kick me off, man. I want to stay longer. This is too fun.
I'm better than to do that. And great job today, by the way.
Thank you, man. So here's my offer, you guys. The coupon code is going to be START. Okay, so the coupon code, if you want this basic chart trader tools for free, there's a code in here that says TC1. Okay, that's gonna, if you want to pay me $95, I'll take it. But if you use a code START instead, so obviously START trading, S-T-A-R-T, if I have to spell it out, use that coupon code START, and it's going to allow you to check out and get access to the basic chart trader tools for free. Okay, and then before we move down, I want to start up here. This is a YouTube link right here. I think you guys can see my mouse, where you can go watch the presentation I did 2 weeks ago, where I'm talking about my trading plan, my trade setups, how I'm hopefully becoming more disciplined, able to control my emotions. What's cool is I get this thing for my wrist. It's called Whoop. It's going to track my stress. So that I'm really excited about, because I'm like, man, tracking my stress during trades. I bet there's a correlation. If I can control my stress, I bet you my trading is going to get better. But anyway, so just go watch that YouTube if you want more. If you want to know like more about who I am, what trade setups, what I'm seeing right now is my trading plan for trading futures, please click on this link, Daily Disciplines with Dad, and go check it out on YouTube. That takes you to the YouTube channel as well. Jeff, the link is right here. So at the top of this page, guys, yeah, thank you, Jeff. affordableindicators.com/offer. Okay, if you guys want to get in touch with me, my phone number is up here in the right corner. Text, call, leave a voicemail, email me, contact right here. Okay, so yeah, probably a minute and a half. So you're gonna get this for free by using the coupon code START. That's only good for today. So you'd click here. Moving down, you can add the additional features we talked about for $295 each. That's 40% off the normal price, which is $495. Okay, $295 each. You can get the closed bar entry. You can get the bracket entry. You can get the price-based entry, which is the Renko and range features that we talked about. All right. The known close, as I'm calling it. You can get the advanced exit orders. You can get the signal orders. We didn't even talk about order flow and iceberg if you want to do your own iceberg orders, your own time sliced orders. Anyways, all of these are $295 each today, which is 40% off how I normally price this. Okay, you will get $200 off for each product purchase. So for example, if you purchase price-based entry orders and advanced exit orders management, you will get $400 off that purchase. The total would be $590 for those two features. All right. And then moving down, I covered the essential chart trader tools, which was the position sizing, the one-click entry, the ATM strategy planning. Okay, that is half off today, 50% off, $995 down to $495. Coupon codes are right here, guys. Click here. And then lastly, and I know it's 4 o'clock, Rob, but lastly, I just wanted to say the professional chart trader tools. So if this really landed with you today, guys, and you see a lot of things that you think you can benefit from, this purchase right here, I'm doing $1,000 off today for $19.95, gets you the whole thing. So the position sizing, which is all this stuff in the essential chart trader tools, and then all 9 of these additional features in this list right here, the whole thing in one purchase for $19.95. So man, I would be so honored if a few of you would take me up on that. And this is still being developed. I'm still adding features based on what customers need. If we believe, and you tell me that, man, I have a group of friends and traders that would use this feature. This is what I just love getting to develop this. I think already something great here, but it's going to continue getting better. And so take me up on that right now. I'm promising you priority access to me as I continue to develop these tools. So that's the professional chart trader tools. That wraps it up. I think Rob's been cool to give me a little extra time, which I appreciate. Let me see if you guys got any important questions I want to cover here. Actually, every question is important, so if I missed it, email me or call me, text me.
Joel, I want to go ahead and ask you to type your email in the chat box. So if people have further questions, they can email you and you can answer them, without being discourteous to the next presenter. After seeing your presentation smoothly, I have to give you credit. That is some brilliant programming, sir.
Yeah, let me see if I can figure out how to put that email in the chat. Dude, Rob, really appreciate that, man.
If you click the little triangle, in the control box next to chat, it'll pop down and there's there you go. We can type to each other, you can type to the whole audience, stuff like that. But I want to thank you for being here. After listening to your presentation, I see why you've been successful over your 14-year career. I love the family values you bring to the table, and I'm very curious to check out the tools on your site personally, and am captivated by your enhanced chart trader and automated chart tools trading for Ninja. Your online reviews are phenomenal. Ladies and gentlemen, if you want an edge in trading the markets, Joel has a solution for you. To learn more about Joel Wyse and gain instant access to a special offer, you can click on the link in the chat box or go to affordableindicators.com. Joel, thank you so much for being here today. We hope to have you back. I wish you a great weekend, sir. And if you need me, I'm available to you.
Thank you so much, Rob. Really grateful, man. Appreciate it.
You're very welcome.
All right.
Oh, Well, ladies and gentlemen, as I mentioned at the top of the show, we had a great lineup, and I hope everyone is listening closely because our next presenter is a graduate of Syracuse University and has been trading the financial markets for the past 15 years. He wears several hats over at Right Line Trading. He's a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. Here to present Auto trading powered by next generation artificial intelligence is Mr. Rory Powers of Right Line Trading. Welcome back to Traders Corner, Rory. Rory, check your mute button, bud. Rory, we still can't hear you. Do you have to adjust your microphone? Rory, are you with us, bud? I can see your screen, but I can't hear you. All right, I'm gonna ask everybody to hold for a second. I am gonna give Rory a call and make sure that he is available and knows that we can't hear him.
Hello. Testing, testing. Yeah, I think I got my audio back now. Okay, thank you. Okay, sorry about that, everybody. Thank you for that great introduction, Rob.
You're very welcome.
I hope my audio and my screen, everybody could see it. And hey, Greg. Hey, Jeff. Yeah, it's been a great presentation today. Traders Corner, thank you so much for having me today. We got a tremendous audience, almost 500 live attendees here today. I want to thank everybody for your time. I'm really excited to present a brand new system that we have over at Right Line Trading that's really doing incredibly well. It's been performing exceptional. The name of the system is the AI Auto Trader, which is based on mathematical modeling combined with artificial intelligence. So let's go ahead and get started. Now, I just want to read this required disclaimer, the short version. I am not a licensed trade advisor. It's a good idea to consult with one before you start trading. There is a substantial amount of risk when you do trade. Only trade with money that you can afford to lose. And I'm going to leave this up just for a moment or two, just to satisfy the CFTC. Okay. Let's go ahead and get started. I know it's been a long day and there's been some great information on there and some really exciting offers. I just want to briefly go over the Right Line Trading team. I'm not alone. I'm part of a very talented group. We've been around for about 14 years now. And we have 3 live trading rooms. Our vision is to develop innovative trading strategies and develop software that help traders predict the future direction of price. And what we do with that information is we leverage that information to extract money out of the financial markets. And we do it in a number of different ways. On the top right, we have our prop trader. His name is David Kushner. A very dear friend of mine, in fact, great guy. He's with Apex Trader Funding and trades 6 funded trading accounts with Apex using a trade copier. He does it in our live trading room every morning. So he uses it for prop trading. And let me tell you right now, the prop prop firms have opened the floodgates to where everybody can trade now and have a shot at really making a killing trading the financial markets, even without risking their own capital. I know Apex right now is running a 90% discount on their evaluation accounts. So, I mean, just for a few dollars, you can jump in there now and take full advantage of trading the financial markets. Down at my bottom right, I just want to take a moment to introduce David Wyse. David Wyse is a professional options trader, a brilliant options trader. He's part of the Reddit community of traders. If you're not familiar with Reddit, it's a community of 30 or 40,000 traders that all collaborate and share ideas, strategies, and results. And there's definitely power in numbers. David happens to be a verified trader with Reddit, meaning that they have verified his performance, and he indeed does have a pretty close to a 90% win rate trading our software and the options markets. Then we have our Craig Emery, who's trading in our NASDAQ and E-mini group. And that room meets every day from 9:30 to 11:30. So we have 3 live trading rooms, 3 great traders, myself, Sergio. A lot of right line trading. Our right line trading community has, you know, in one time or another, had contact with Sergio. He's, you know, I mean, when it comes to computers, the guy can make him sing and dance. You tell him what he wants, you know, kind of like Joel Wise, I'm sure. He can do things that are just incredible, and the speed in which he does it is extraordinary. And then we have our newcomer. His name is Jacob. Jacob is he's our AI specialist. You could see, you know, it almost looks like he hasn't started shaving yet, but he is a college student. He's extremely intelligent, and one thing he knows is artificial intelligence. I think he got introduced to it maybe helping writing essays in school, but he's become very good at it. And over on the far left, on the bottom left of my screen, is the owner of Right Line Trading, who's Mark Miller. And Mark Miller, he's a U.S. Army veteran. He's a graduate of Cal State, and he brings to the table some, I mean, transparency and integrity that you just don't find in this niche. So we've got a great team, and we're in the process of building a community of traders. And listen, we get some of our best ideas from our community of traders. They send us emails and show us their charts, and they send us their ideas, and some of them, you know, we read them all. Some are better than others. Listen, some are fantastic, and that's the point I wanted to make, is kind of that power in numbers with a lot of people, a lot of traders' inputs. We come up with some really great ideas to develop. So I think we all share a common bond as traders, and you know, me included. I've had the privilege of talking on a daily basis, probably 6 days a week for the last 10 years. I've been trading and talking to our community of traders every day, except Sunday. And listen, we all experience problems being consistent and making money. I don't think I've talked to anybody who hasn't shared in some of these issues that traders go through. You know, we overtrade. If we take a few bad trades, we revenge trade and we try to make up for it. You know, we have to make split-second decisions in a very fast-moving market. It's not easy, especially if you're using indicators that are lagging price. If you've purchased indicators in the past that just don't work, you're not alone. We all have. And it all leads to the same thing. It leads to blowing out our trading accounts. And I'd say I don't know many worse feelings than that is when you've blown your trading account. However, it's been our commitment since we released this system to bring this to an end. We have a solution. So sit tight. I know it's been a long day, but stick with me. I'm going to go through this fairly quickly, but I want you to understand exactly how it works because we've got something that's going to bring this to an end. And I'm really excited about it. And let's go ahead and let's get started. Now, this slide, and I'm not going to spend a lot of time on slides. I don't really like a canned prepared script. I like to go to the charts, kind of like Joel just did, and I like to show you what's under the hood. But I just want to give you just a little background of what we're going to be discussing. Our goal as software developers at Right Line Trading is to help predict the future direction of price. I talk to traders of all skill levels. Some of them have just started trading. Some have been trading for 15, 20, 30 years. And there's the newbie to the very experienced trader. However, when you're looking at the static of those bars on your chart, whether the market goes up or down on the right edge of your chart is not an easy prediction to make. In fact, it's almost impossible. For example, I was asking David, and this is like a guy whose demeanor is, I mean, he's so calm and cool. The market could be going nuts. And he just has a stress-free style about him that's just incredible. I said, David, today Jerome Powell's coming out and we got the CPI report coming out. What do you think? What's the market going to do? And he says, I don't know. I don't know. Because he's going to wait for the technicals to tell him what's going to happen because we don't know what's going to happen. So we have to have a tool set that's going to help us decide which way the market's going to go, the future direction of price. So we've boiled it down to two things that create trading success. Number one, you have to have the proper tools. Our software and any software needs to define risk. We need to know when the lowest potential risk on an entry, when to get in and when to get out. We want to get into the trades with the least amount of risk associated with them, the highest probability entries. And ideally, with the way this market is trading, we would love to have software that can do it for us. Because listen, I've tried it and it's very difficult when you're trading the NASDAQ. And if any of you are futures traders, and I think most of you are, the majority of the lineup today were futures traders. If you're looking at the NASDAQ and you've got to make these split-second decisions, um, it's extremely difficult. So to have a software or a strategy that can automatically get you in and out of these trades that will maximize your profits, man, that would really help us out. So those two things are the keys. Now, why is the AI auto trader, why are we seeing such success? Why are our traders doing so well? The performance has been incredible. What I'm going to be showing you here in the next few minutes, I don't know if you all have NinjaTrader 8. How many of you use NinjaTrader 8? Oh, Rolf uses NinjaTrader 8. Okay, Henry? Well, I'm sure a lot of you who trade futures use NinjaTrader 8. NinjaTrader 8, I mean, let me tell you, if you trade futures, it's an extremely powerful trading platform. And they recently just came out with an update. And let me tell you, I'm going to be showing you a couple of these updates that really show how powerful of a platform this is and the tools that they provide There's a little bit of a learning curve. You know, I have to be perfectly honest with you. In fact, just now, after I've been playing around with NinjaTrader 8 for close to, to 10 years, now they came out with a brand new version that kind of switches up, switched a few things up, but it also added a few more of these powerful tools that I'm going to show you in just a couple of minutes. Now, NinjaTrader 8, I've got good news. NinjaTrader 8 is now a free platform. Let me say it again. NinjaTrader 8 is now a free platform. In the past, you used to have to spend $1,000 to buy the NinjaTrader 8 platform to have the privilege of using their platform and taking trades. That is all changed. Now you open an account with Ninja, you get all of their tools, the chart trader, the ATM trade management strategies. You get the strategies themselves where you can automate your entries. All of these powerful tools that before cost $1,000, good news, they're now all free. So with NinjaTrader 8, we have the capability now of back testing our strategies, optimizing our templates, and making sure that we're using the best inputs in our strategies. Now, in order to really leverage these tools, we have what we call our secret sauce. And those are our powerful proprietary indicators that help us predict the future direction of price. All of our trade management has been automated. I want to say it's similar to what Joel Wyse was just showing, and it is part of NinjaTrader. However, we do have some proprietary trailing stops that I'm going to also show you, which really maximizes your profits. And that's really the key with futures trading. Listen, the risk to reward is the deck is stacked against us. We can take 2 or 3 winning trades and then take 1 loser, and it's going to wipe out those 3 winning trades. Well, all of that now has come to an end. Okay. The way we manage these trades, our winners are going to be bigger than our losers. So that's what's really got me excited. Some of the benefits from using our AI auto trader. Well, there's no more overthinking, over trading, hesitating, all of these things that have haunted us in the past that, have sabotaged our trading, really, our trading results. These are the things that kept us from being consistently profitable. Now we have our precise stop placement, our trailing stop, our targets are placed in advance when we take the trade. The targets have been optimized. We're not going to be cutting our winners short. How many times have you been in a trade where you're up $200 or $300 and you close it out just to watch it continue up another 5 or 6 or 7 or even $1,000 more dollars, and you left all that money on the table? It's I'll tell you, that's extremely frustrating. Well, that's all coming to an end. So you're not going to be mismanaging these trades anymore using this new automated AI auto trader. So now what I'm about to show you, and I'm about to go to the charts. This is the last slide before I drop this slide deck and really get in under the hood. And I know some of the traders in the room today are new and maybe not even familiar with NinjaTrader 8. So I'm going to kind of start with the basics and then build up to some more advanced information. So try to stick with me here. One of the features on NinjaTrader 8 is called their strategy analyzer. And on certain bar types, their strategy analyzer can be very accurate. And other bar types, it's not so accurate. So, sometimes it's not the be all end all. However, it's great information, and they have a great tool to optimize their inputs of the strategies by running them through a back test or using their optimizer, which I'm going to show you. So the strategy analyzer is going to give us the ability, you could see on my screen right here on the right, gives us the ability to run the back test in just a few seconds over a month or 2 months of data and provide us with the results and give us the ability to adjust our inputs to optimize the templates. So when we put them on the live chart, we know that we've got something that's going to perform well. Okay, so let's drop this out. Let me find the escape button. And what I'd like to do first is, first, let me just start with the control center. The control center of Ninja. Let me share my screen a little cleaner. Okay. So now the control center of Ninja, you can see here, if I was going to build a strategy, on the bottom of the control center is a strategy tab. And it gives me the ability to right click, select new strategy. And when you receive the AI Auto Trader, they come with pre-formatted templates that our team has done extensive testing on. So under your available list, under my available list of strategies, I have the AI Auto Trader. And on the bottom right, I have the ability to load my templates. And I've named a various templates with different input that I can use during different times of the day. And when I select that template and load it, it's automatically going to have all of the inputs in there for you. Okay. So that's the NinjaTrader Control Center. Now, a couple of these powerful tools that I was talking about, and we're going to break down the strategy as well. You can see here, this is our chart, our secret sauce of the indicators, the list of indicators that we use in our trading. The indicators that we use and the strategy inputs, if I was to bring up the strategy analyzer, in fact, I'm going to just bring up the actual template of the strategy. And I'm going to load our template. The ones that we're using right now, which is doing very good, I'll load it on the MNQ, which can also be traded on the NASDAQ. We get a lot of traders that ask, hey, can I run this on the micros? Absolutely. You can absolutely run them on the micros. So why our strategy has been so successful is the proprietary indicators that the strategy is leveraging are shown on my chart to the right. And I'm going to go through the inputs of the strategy, and I'm going to show them to you on my chart. And then we're going to see the backtest results, the performance of the strategy, and a couple of other tools that Ninja has to optimize the templates. So one of the most important indicators that this strategy leverages is called our bias indicator. Our bias indicator is the background color of the chart. What that is a multi-time frame assessment of trend. Some people call it triple sync logic. You might have heard that term before. But what it means is that on the higher time frame, in this case, my chart speed, I'm looking at a 13 range. I'm sorry, my chart speed, I'm looking at a 2 minute. I'm using a higher time frame on my bias. I usually use fib numbers of a 13 range, a 21 range, and I want to have an alignment on the higher time frame to the one that I'm looking at on my trading chart. In the past, you used to have 2 or 3 different charts up on different time frames to see if they were in alignment. Well, this takes that away. This gives you what's happening on 2 or 3 different time frames by looking at the background color of my chart. So we want that multi-time frame alignment in order to take a trade. Our second input is our volume zone. Our volume zone, very much like our pivots, are our areas of support and resistance. We always respect those. We never want to trade straight into an area of support or resistance. And we have our sensitivity of our pivots and volume zones. And our software does an incredible job of displaying exactly where there's a large number of buyers or sellers that we don't want to, trade into. So we discussed also, we have our moving averages. We absolutely respect market structure. We have defined rules on our long trades and our short entries. If we're going to take a long trade, we always want our 50, which is, we call that this would be our line 50 here. This is this solid green line. For a long entry, we always want that line to be green and slanted up. And we have our 15, which is actually an EMA of an EMA. If I put a 15 moving average, it would look almost identical as our 7 input. So it says a 7 input, but it's really like a 15. And that's going to be this dotted line. For a long trade, we always want the 15 to be on top of the 50. Okay. So we want the background color of our chart green. We want on a long trade, we want our 15 to be above our 50, green and sloping up. And we want our 50 to also be green and sloping up. Now, a key component to why we're doing so great with this strategy, our software tracks the direction of institutional money. One way to do that is to look at the disparity between uptick and downtick, those market internals. We've done a great job developing our market internals. We call it Dominator. A component of that is the indicator that looks at the disparity between the uptick and downtick. It also looks at some declining ratios. But to put it very simple and in layman's terms, when there's large institutional money influencing the markets, there's going to be a large disparity. That's because they're pouring money in or pulling money out of the asset class that's on your chart. So we track that institutional money through our market internals indicator. The market internals on my chart is going to be these little triangles that you see above some of the crosses. These little triangles are telling me that, hey, there's a huge disparity right now of buyers rather than sellers. Uptick versus downtick, there's a large disparity. It's time to go long. Do not take a short trade. Now, there is nothing on this chart here, okay, in this area that would say, let's go short. You're not going to get stuck in the wrong side of a trade here, okay? We're only looking for long entries when our chart looks like that. Now, a really nice component of this strategy, some of the problems that we had discussed earlier were over trading, revenge trading, and all of those, psychological battles that we go through mentally in our heads. I mean, imagine trying to trade the NASDAQ when the market opens at 9:30 and trying to see, is my 15 above my 50? Is my 50, is how far am I away? One of the calculations we look at is called our MA diff. We don't want to trade into an oversold or overbought market. So we define how far off the 50 we want to take a trade. Okay. Let me stay in order so I don't confuse anybody. Now, a lot of our traders are prop traders. They have rules that are clearly defined and they must abide by them, or they, blow their evaluation or their performance account if you're a prop trader. Or if you're trading your live account, Listen, it's so important to have good trade management and capital preservation. When we hit our profit goal, stop trading. And when we hit our loss target, we stop trading. There's no reason to continue to put our funds at risk once we've reached our limit. This is a governor that will keep us within our boundaries of what we would like to win or lose on any given trading session. So this does that for you. Another really nice feature, a lot of people ask me, hey, can we enable it and walk away? I have a 9-to-5 job. I have to take my kids to school. I have to do a number of different errands. The answer is yes. With the start hours and end hours, these happen to be hard coded in Eastern time. So regardless of where you are in the country, you'll be able to set the hours that you want to trade. And I have a great strategy that I'm going to show you in just a minute that trades the Russell just in the morning from 9 to 12. It does extremely well for one reason or another, but those 3 hours out of the day, I could just set it to run from 9 to 12 and enable it and walk away. And that system, when everything lines up just perfectly, is going to execute and manage my trade for me. And it's only going to get me into the trades that, defined by our software, have the least amount of risk associated with them. Okay. So the parameters or conditions is what I'm going into now under MI entry. These are the conditions that must be met in order for our software to trigger a trade. Now, these same conditions, we've also coded an indicator, and it's a smart indicator. It's called our MI signal indicator. When all of the conditions have been met, it fires off, instead of a trade, it fires off one of these X's or crosses. And a lot of people ask me, can I trade this on a discretionary basis? The answer is yes. These crosses, or this signal indicator, what it's doing is it's looking at all of the other indicators to make sure everything is lined up perfectly. And it's telling you everything's lined up, and it shoots off that X. If you have your automated strategy enabled, it'll trigger a trade, and then you're going to be into the trade with the trade management strategy. So that's our signal indicator, those X's. The conditions that it looks at is our background bias that I covered. And if you hover your mouse over each one of these inputs, if you do decide to come aboard, and in just a few minutes, I'm going to make a discounted offer for Traders Corner. That's very attractive. So the bias, if you hover your mouse over each one of these inputs, it's going to give you an idea of what each one of these is. We also do master classes and trainings, sessions as a community. In fact, this morning as a community, we had a training webinar where our administrator in our Discord chat group did a great webinar that went over all of the indicators and the inputs and what's working, what's not working. And we want you to be part of that community. So one of the conditions is the bias, which is our multi-time frame assessment of trend. We can put in a volume threshold. We don't really want to get into a trade in a low volume environment. We know right now, this time of year, until we get to the summer months, usually on the NASDAQ between 9:30 and 4, it's a pretty good environment. However, maybe during the summertime when there's not as much volume, we can use our volume threshold and put in a value, maybe change it to 400, where there must be 400 contracts per minute crossing before the system will take a trade. So volume is definitely one of the conditions that we can leverage with this strategy. A little bit earlier, I did go over how we respect market structure with our 15 and 50, our moving averages. And whether you own this software or you you don't own this software, these are really principles in day trading. We're not counter trend traders. We're not trying to call the top. We're not trying to call a bottom. What we're trying to do is we're trying to follow institutional money, get in at the lowest risk times and get the meat of the trade, the meat of the sandwich. That's what we're looking to get. So if you stick to these rules and these guidelines, whether you have our indicators or not, I think it'll help your trading. So on a long trade, our 15 is above our 50. On a short trade, our 15 is below our 50. And whether it's long, when it's long, they're both green, and when it's short, they're both red. And that's our criteria that we use. Now, the MA diff is something that I just alluded to a little earlier. I kind of got ahead of myself. And the MA diff is the distance our 15 is from our 50. Price always has a tendency to revert back to the mean or the 50. And what I mean by that is in this trend that you could see being created by the institutions right towards the market close here. You could see the market internals were really hammering the market up, but there comes a time when you get so high up where the market becomes overbought, and price at that moment has a tendency to want to revert back to the mean. So we don't want to get into a trade where price is overextended on a long trade. We want to be as tight to the 50 as possible and also have our other conditions met. So once we become too far away from the 50, whether it be to the upside or the downside, we're going to limit it to, in this case, 50 ticks. In a choppy or ranging market, we may not get as many trades, but we can pull this MA diff in, and we could put it down to a 40 or a 30 and make it an even more conservative strategy. We always respect the pivots and volume zones. So what I was getting at earlier is, can you imagine in the net trading the NASDAQ at the market open, and the market's just flying, and it's going up, down, sideways, and you don't know which way, like a Maserati. And you've got to make all of these split-second calculations. Let me tell you, it's not easy. And God forbid you have a tool or something that's not working properly. I mean, it's hard enough as it is. Why not have every tool in your corner that's going to help you succeed? And that's what I'm showing you here today. We've got a strategy that automates this process that's extremely intelligent. And we can change it with market conditions, whether market is choppy and going sideways or it's trending. We could pull these settings in and restrain it, or we can open them up and let them run. And I don't like to try to hype a system because there's no system that's 100%. They're all going to take losers, and there's always going to be red days. If somebody tells you their system doesn't take losers, it's a lie. And our job as software developers is to continue to optimize our strategies and our indicators. And the optimization process really never ends. When we get all winning trades, then it ends. Then we've got it made. But I don't see that happening. So the beautiful part about this strategy is all of these inputs are adjustable based on the market conditions. And listen, I've bought a few strategies before in the past. And let me tell you, after, when you first get it, it might work for a week or two, or maybe even a month or two. But then after that, it just stops working. It doesn't work anymore. That's not the case here. Because we can change the inputs with the market conditions and use the tools I'm about to show you. This is going to be fresh. These are going to be fresh settings for every session that we trade. And that's what has us really excited. Let me take a quick sip of water. because I want to show you. It's called the Strategy Analyzer. And what it is, it's a tool in NinjaTrader. And I'm going to bring it over here. It's a tool here that allows us to put our strategy templates in this strategy analyzer and get results. Now, what I've done here is I've loaded our template that we run right now on the NASDAQ. This is our NASDAQ 1 minute to target version 1. So I'm going to load that template. To run these back tests, we always need to calculate historical values by checking that box off. Now, a couple of tools that our team at Right Line Trading is working with to optimize our templates. I know that some traders, they buy these systems and they use them out of the box. They just load what the templates that we send them and they want to enable it. And it's quick and simple and there's no muss, there's no fuss, and there's no guesswork. And that we have that for you. However, we also have another type of client that I've had the pleasure of speaking to many that like to get under the hood and they like to play with the settings and find their own time frames and their own inputs. And that's, listen, that's the fun of trading, So, I kind of love those people. But what I'm getting at is now NinjaTrader 8 has an optimization where you can all at once test a variety of different inputs that my team is currently working on. They have the walk forward optimization. They have the multi-objective optimization. And they also have the AI generate that we've been working on. It uses a lot of resources, but this is what our team is currently working on to keep our templates fresh. So this powerful tool that NinjaTrader provides us with allows us to continue to optimize all of the inputs of our strategy templates. So I'm going to load the NASDAQ 1 minute to target template. And I'm just going to run it. I'm going to calculate historical. These are all the inputs. We look to make 1,000 before we lose 500. And if we're trading the micros, we would obviously change those inputs. We start at the market open on this template at 9:30. And we run it to market close at 4 o'clock p.m. That's in military hours. And we're going to run this back test from March 1st to April, 14th. And we'll run it. Let's see what we come up with on this template. So you can see on the results of this strategy from March 1st to April 14th. And the total trades, the total net profit was 20,000. It took just under about $8,900 in losing trades, 29,000 in winning trades, about $20,000 in net profit. And that was between March 1st and April 14th. That's running a 2-contract, 2 profits on our strategy. We've hard-coded into the strategy an ATM. Most strategies, you're able to pin on your chart and it'll run with your chart. This one's a little different. Sergio went the extra mile and he hard-coded an ATM right into the strategy parameters. And what that allows us to do is what we call our proprietary momentum-based trailing stop. Our first target is 20 ticks. Our second target is 50. When the market is really trending nicely on a day like if there's a news report or you just see that the market's just flying one day and institutional money is really influencing whether it goes up or down, we can increase that to 100 ticks. And what we're going to do is we're going to put our stop to break even once we hit our first profit target. We're going to make sure that our first target value in our parameters, in our conditions, our MI entry conditions, we cannot have a pivot before our first profit target. So we're going to have a clear pathway to our first profit target at 20 ticks. So our first profit target's 20. We know there's not going to be any pivots between our entry and our first profit target. No roadblocks. Now imagine trying to make all these calculations on your own. Listen, there's just too many ways to mess it up. I know from experience. So now we have a 100 tick second target. And listen, we've done some homework. What we found, when we put our second profit target to 100, 33% of the time it hits our first target, it will go on to hit 100 ticks on the NASDAQ. So we can always switch our second profit target to 100. That really puts our risk to reward in our favor. We have the potential to make 120 ticks on the trade, and we're only risking 50. 25 on our first profit target, 25 on our second. Now listen, that's an extremely tight stop on the NASDAQ. I've got to tell you. And like I said, earlier, I don't like to hype the system and make it sound better than it is. And it were three that have we're winning close to 74% of our trades. And if I show you how they would look on a chart, if I bring over the chart, you can see on my chart here, this is from the NASDAQ yesterday. This X is our signal indicator that says, hey, your strategy, all your conditions have been met. And if our strategy is enabled, it's going to fire a trade. So you could see how it fires the trade right at the break of the pivot. The blue line is the pivot, and down it goes for a full winner. Okay. This was right before the market opened. For your discretionary traders, 8:45, 8:30, you're real tight to the 50, and you're getting that beautiful entry. And when that X, when you see that cross and your strategy is not enabled, there's nothing to prevent you from pulling the trigger. Absolutely nothing. It's telling you in advance, all of your conditions are met. Risk as defined by your software is at its lowest. It's time to take a trade. So this strategy analyzer and these optimization tools that they provided us with give us the tools that we need to have an edge when we trade the market. Let me try to scroll back a little bit when the market was open. Here's another really nice entry, long, right at the break of the pivot. Went and took a long trade, went up and hit our profit target. Here's another one. And I love these trades that are tight to the 50. You can see our 15 is above the 50. We have no pivots and we have no volume zones until way past our first target, almost to our second. This strategy, I just wanted to let you know that I ran this on a 50 tick second profit target. So this is showing you here the second profit target's hit at 50 ticks. So these are the beautiful entries that this system will take on your behalf. It doesn't make mistakes like we do. It doesn't have emotions that want to revenge trade and overtrade. It gets the job done in a very efficient manner. It's not going to run up your commissions. and line your broker's pockets. This is a system that's only going to trade when all of our conditions have been met, and we're going to govern where our profit and loss limit is for the day. And once we hit it, we're going to stop. Okay. I don't want to go over my time. I want to show you the offer, and I want to be able to answer any questions that anybody has. I didn't really get a lot of time to show you the Russell, but we've got a great strategy on the Russell as well. We're using these new tools with NinjaTrader to optimize the E-mini, the ES, crude oil, gold. We absolutely want to start trading bonds, ultra bonds. The way those markets move, if we get triggered into those trades, we're going to really make a lot of money on them. So it's really an exciting strategy. If you trade a live account, if you trade a prop account, this is, man, I'll tell you, this is really going to make a difference in your trading results. All right, so let me put up an offer slide. And let me glance at the questions just to see if I didn't miss anything. Oh, gee, where are they? I don't want to take too much time looking for the questions, but I will find them sooner or later. Let me see.
Rory, in the control box.
And the control
Questions, down arrow.
Yeah, I popped them out already, so they're not there, but I will find them. Okay, let me go to the special. Let me go to the offer. Let me bring back. My PowerPoint. Okay. Sorry about this. This was our results from the month of March and our performance. Mark Miller, who's the owner of the company, actually March 1st to the 23rd. He runs all these strategies on a live account. This was a test that we did on a yearly test with the strategy analyzer from January of 22 to March of 23. What I also wanted to mention was we have a great Discord chat group. I'm going to just drag it over here. We have our channels in here. We have a general chat channel. Once you decide to come aboard and become a member of our community of traders, right now we have about 75 or 80 people that are on this system, and we want to limit it to about 100. We'd like to have about 100 people in this group that are all participating and part of our community. We don't want to have too many people running this system. We want to keep our fills clean. We don't want to, I know they're liquid markets, but we just want to get our fills and not worry about too many people trying to get in at the same price. But we always share our optimized updates in our resources channel. We have a daily results channel. We have what's called our AI auto challenge. Every month, we welcome you to try your own inputs and build your own strategy and run it for the week. And you're in a contest in our community, and you post your results each day. And at the end of the week, if you're the winner, you get a few $100s off of the cost of the a few $100 credit. Problems and solutions. We have tech support. We have members in the community, Sergio, myself, a few administrators in the channel that are always on standby to give you a helping hand. We have our prop trader channel for our Apex and prop traders, improvement ideas. So as a community, you know, we feel there's power in numbers. We want to have your input. Some of the best ideas that we've come up with have come from our community. So a really nice part of the offer is access to that Discord chat group. Now, we're running a special today for Traders Corner. I know there's a lot of people in here, and I do want to be fair to everybody. And I do appreciate your time. What we're doing is we're allowing 100 traders in our community for this AI auto trader. We're about at 75. We have 25 systems available. What our special is for Traders Corner is we're running, you can either do a monthly subscription or an annual subscription. Right now with coupon code SAVE $100, you'll get it for $2.99 a month. Okay, it'll be $2.99 a month. The annual, which is by far the best value, is $19.97 a year, which comes out to I think about $165 a month. And that coupon code is SAVE 500. If you are one of the first 25 that come aboard today, the offer actually expires tomorrow. So by tomorrow, you're also going to get access to the Discord chat group. You're going to get all the markets. Once we come out with those additional instruments that I went through earlier, those will become available to you. And most importantly, you're going to receive, when you order today, a quick start email that's going to instantly deliver you the software, the quick start video, and instructions on third-party licensing. You're not going to place your order and hope to God that it gets delivered. This is going to be sent to you immediately, instantly. The minute you check out, it's going to roll over and deliver what you've purchased. Okay? You'll send me in, or you'll send our team in your machine ID. We'll get you licensed, and you're going to be right in with us on Monday morning. Okay? So it's coupon code SAVE $100. And I'm going to just make sure that my special link is in the chat box. Okay, yes, I see Rob has put it in. And the special code for the monthly is SAVE $100. It brings it down to $2.99 a month. Or you could do the annual, which is really the best value. Use coupon code SAVE $500. It'll drop it down to $19.97 per year. So I'm going to just take a few more minutes. I don't want to disrespect my time, but I do want to answer just a few questions. I'm going to skip down. Do you still have to use Kinetic? Jeff asked, do you still have to use Kinetic? No. To trade futures, we can get away using NinjaTrader's data feed, Rhythmic, whichever data feed you use for trading futures. What you will need is just a live data feed, does not have to be Kinetic. And you'll need the NinjaTrader 8 platform, or be with a broker who supports the NinjaTrader 8 platform. Is this archived for later? Yes, this is, I imagine the Traders Corner is doing a recording. Are the parameters fixed, or should they be changed daily? Not daily, Pietro, not daily. We are testing them on a daily basis. However, we've, in the last few months, we've made, maybe 1 or 2 updates. So maybe once a month, in your resources channel and via email, you'll receive the updated templates that have all the new inputs. And let me tell you something, with those new tools that Ninja has for that AI, oh man, you wouldn't believe the hours we spend trying to optimize these templates. And those tools that they now provide are a game changer. And listen, Sergio, thank God, and Jacob, thank God we have them, because they're on top of learning this new technology. What is the starting balance, Rolf asks? You never want to underfund your account, Rolf. If you're going to trade the micros, I would say you'd want at least $1,000 in your account, maybe $1,500. If you're going to trade the minis, the NQ or the RTY, I would start with $5,000 minimum. We're going to trade 2 contracts. I believe it's $1,000 a margin. You may want to check with your broker what the margin requirements are, but I think if you started with 1,500 for micros or 5 grand for 5,000 for the E-minis, I think you would be fine. Oh, shoot, my sound. Oh, I think that was earlier. I hope I didn't lose my sound. Oh,
Long time ago.
is it back now?
You faded out for about 15 seconds. It was all right.
Okay. Okay. How much live forward testing? Just a couple more minutes, Rob. I'm really sorry.
Hey, take your time. I know questions are important.
You know, we've done extensive testing on this, Benjamin. We've been running the system. You know, our best testing is forward testing. We run the system on a live account. We have a great YouTube channel. If you check us out on YouTube, Right Line Trading, we post videos, you know, at least 1 or 2 every week showing the system and the results. All the videos are shown with the live accounts taken. All of our traders, by the way, at Right Line Trading, they trade a live account. Okay, we put our money where our mouth is. We've got skin in the game with you. If you take a trade that we've taken, our money, our capital is at risk as well. If you need assistance installing the software, will you assist? Absolutely, Paul. We do deliver it instantly, and we also have a Calendly link for remote support. We'll jump on your screen. It takes us about 5 or 10 minutes. It's very simple. But to answer your question, Paul, we do the whole thing for you. We will install the system, save your workspace, get you into Discord. The only thing you'll have to do is get out of bed in the morning and enable those strategies. That is all. Rolfas, what is the best? What is the starting balance? I answered that. How much do you need to have? I think I answered that. Bob Rose. Hey, Bob. Bob's been with us, I tell you, Bob. Bob's been with, I've known Bob for close to 10 years now. No, Bob, he no longer owns the company. Are you able to switch? I have a computer and at work. Good question, Tom. Tom asked me, he has 2 machines. Can he have it on both? Well, absolutely. Man, I hate that. I hate when I buy a piece of software and they tell me that I can't have it on my laptop and my desktop. Absolutely, you could have it on both. If you travel, take it with you. If you're at home, you'll have it on your home computer. 2 licenses. No extra charge. No, you don't need a special data feed. Now, listen, if I don't get to your questions and you still have a question about this, please put your name, put your number. Rob will share it with me after the event is over. And if I don't call you this evening, I will absolutely. God bless her. My wife. Let me just pause for a second. My wife and I are celebrating the birth of our second daughter. God bless America. I tell you, God bless. You know, I'm a God-fearing family man, and we're just overwhelmed with joy to welcome the newest member of our family. On March 1st, my wife gave birth to a beautiful baby girl. And forgive me if I can't get back to you this evening. But I assure you, I will give you a call Monday or if you don't mind, Sunday when we get back from church. I'll give you a call on Sunday. Leave your name and your number. I love to talk to our community of traders. I love to answer questions. And listen, we're in this, and this is, you know, to end the presentation. We're in this struggle, you know, together. There's power in numbers. We want you in our community. We want you to be successful because, as I mentioned earlier, we're trading it with our own live accounts. It's not just talk. We're putting our money where our mouth is. And I'm very excited to be able to offer you such a great system. Support is excellent. Thank you, Joseph. Thank you. Rolf, I got your number. So I just want to thank everybody once again. God bless you too, Greg. Thank you so much, Rob, for having me on Traders Corner. It's been really, I'm very humbled by the large audience. And I hope you guys learned, got something out of it today. And I hope to see you in our Discord chat group Monday morning. God bless everybody. Have a great weekend. Thank you, Rob.
Hey, thank you so much, Rory. The strategy looks amazing. We've been hearing that your automated strategy's been crushing it, and the numbers you put on the screen are pretty impressive. Ladies and gentlemen, if you struggle with human error, overtrading, inconsistent results, and blowing out trading account, then Mr. Powers over at Right Line Trading has a solution for you. You can learn more by clicking the link in the chat box or by going to www.rightlinetrading.com. Thanks again, Rory. We hope to have you back here on Traders Corner. And I'm going to leave the room open for a few minutes just so that if anybody typed in their name and number, I don't want you to miss it. Ladies and gentlemen, that'll conclude our online trading summit. The staff at Traders Corner wants to thank you all for joining us today. It's been an information-packed event, and we hope you all enjoy the rest of your weekend. Have a nice evening, everyone. Thanks again for being here. All the presentations will be posted to our YouTube channel probably by tomorrow afternoon. We usually send around an email with a link in it as well, and at a point they'll be available from the website. Have a great weekend. Best wishes to everybody.